Good morning, good afternoon, good evening, wherever you are, and welcome to this full day live stream here on Theta Profits. 28 traders will join us during the day. We have more than 900 people registered, so I'm really excited about following how this day will develop. And what a day to have a live stream like this, with markets jumping up and down by the tweet. I'm John Einar Sandvan, former journalist, worked for many years as a communication manager also in the leading media company in Scandinavia, but now I focus on option trading and running this YouTube channel. And Theta Profits, well, as probably you know, we have weekly interviews every Sunday with retail options traders, and practically speaking, all our guests today have previously been interviewed on this channel. And you find the interviews for each of them in the description of this live stream if you are curious about learning more about the strategies of one of the guests. The goal for this website is to share different perspectives about options trading. And it's been growing steadily. Now we have about 17,000 subscribers. And if you are not a subscriber, please hit that subscribe button and subscribe to the channel. Today, the purpose is to gather a lot of different perspectives on the current market from an options trader's perspective. We will have interactive discussions in the studio, but I also encourage you to, discuss in the YouTube chat, the live chat, and keep sharing your perspectives, not only the guests here in the studio. The program is divided into hourly blocks, and if you have registered, you will have received the link to the hour-by-hour program. If you have not registered, well, also in the description there is the link to register, and then in the confirmation mail you will get the link to the program hour-by-hour. As I said, use the YouTube chat, discuss with others, give your opinions, and let it be a lively discussion throughout the day. And I guess I have to say this, of course, putting together an event like this does take a lot of time and energy. And if you like to support the channel, one way to do it is to buy so-called super chats or super stickers that you find in the small corner. If you take that, the dollar sign, you can buy those, and that your messages will be extra visible with for a while. And you also give a small support to the channel and the work we are doing here every week. And I guess I also have to say this, that this is not financial advice. All content today is only for educational purposes. Traders share how they trade, but remember, options trading carries risk. And you are responsible for your own trading. Never risk more than you can afford to lose. And even if you copy the strategy of someone else, own your own trades. Only you are responsible for your results. I think it is time to bring in the panel, the first panel. And we have from California, we have Steve Gans. Welcome, Steve.
Welcome. Thank you, John.
And we have Dale Perryman from Texas.
Hey, John.
And let's move to another warm state, Florida. Welcome, Asha. Asha?
Yes, good morning. Welcome. Thank you.
And even earlier morning is for Levi in Canada. Good morning, Levi.
Good morning, everyone. Thanks for having me.
And the purpose of this first session, well, let's start by doing a very quick introduction. You have 15 seconds to present yourself. What would you say then, Steve?
Steve Gans, San Diego area, a developer of the Flyagonal and a options trader for many years, options educator.
Dale.
Dale Perryman, probably 30 plus years doing corporate training and development, self-taught option trader. I've been called Ironfly guy.
Levi.
Options trader, 30 years of stock trading and educator on YouTube, and mostly trade complex options over a long duration.
And let's move to you, Asha.
Yes, sir. I mainly trade the 0DT SPX options, and I also do some gold futures trading, and I'm very excited to be here.
And you are medical
in Tampa, Florida.
By profession, so in case some of us get heart attack with the stock dropping down, we have the assistance. I want to start with just taking a very brief look at the SPX and how it has developed over. This is the last year. And as we see, well, we remember April last year with a big drop, and it's been going up steadily. But the last few weeks, we have seen a drop. And if we move to the last month, we see how it has been going steadily down. Of course, probably connected to the war in Iran. And then we can also take a quick look at the futures ES, and let's move it into the picture today. One day with 5 minutes charge, and suddenly we have a big jump here. So I'm curious, how shall we read this market? What shall we interpret out of all this? I think we'll start with you, Steve.
Yes. First of all, my strategy doesn't evolve around day trading. It's more 14-day, 20-day, etc. So I don't get quite as minute into the day-to-day look at the market. That said, I have a personal opinion here that our president, not being political here, just stating what I see, when he measures his value to a certain extent by the market, when the market looks like it's being stressed, invariably some statement comes out. And in my review yesterday, I do a weekly market review on my YouTube channel. In the market yesterday, I even stated down here at 6,500, this is a point that I think we're going to hear something that's likely to cause the market to bounce. Didn't know what it was going to be. This morning, of course, the announcement is that we think we're nearing some resolution, or we're backing off on some of our things. This same thing played out on tariffs. During the tariff drawdown, there were bold statements about we're going to tariff lots of people. Then when the market went to a place that wasn't palatable, things changed. A tweet came out saying, hey, we got it worked out, tariffs are off. So I do think that not necessarily for day trading, that's going to be different. These guys are experts. I'm going to let them discuss that. But for my type of strategy, I do feel like it's somewhat readable as to when there's enough pressure in the market, a statement's going to get made that's going to temporarily change that. And so that's my take. One final thing. These aren't a fashion statement. I had some eye surgery a while back, and I've got a glare issue, and the doctors are still recommending I wear these, particularly on heavy screen days, which today is going to be a heavy screen day. So that's it, John.
Is this a variation of what some have called taco? Trump always chickens out?
I wasn't going to go there. I'm trying to be a little bit more delicate, but yes.
All right, I'm Scandinavian, so I'm a bit freer in this, I guess. Dale, what is your take on this?
Well, I would say I expect to be surprised, and then you're not surprised when you get a surprise. I think today is an example of that. I would expect at some point volatility will reduce. It was hitting up against 30 on Friday. Today it's down to 24. So I think anytime volatility gets, I'd say, above 26, you could expect it. It's probably one of the most predictable trades, is that you can expect volatility to go down at some point. Now, how low? I think it probably ranges between 30 and 15, over some period of time. I think my advice always is to trade your portfolio so that you have staying power, which may include diversification. It may include lots of other things. But I think the biggest risk to your portfolio is the idea that, oh my God, I'm panicking and I need to get out. So you really want to posture your portfolio so that you can stay in over some long period of time. So even though I'm a day trader, Steve, it's only a portion of what I do. So the majority of what I do really is on things that I think I have more staying power on. So, every morning I do my homework. It's about 10 minutes of homework looking at kind of volatility, certain levels. But, of all of the homework I do and all of the 9 screens that I look at, I think I only get about a 1% edge from looking at technicals. The rest of it is in just the discipline of execution, picking a strategy that works, and putting one foot in front of the other by executing around that every day. I guess that's my 2 cents.
Ashar, what's your take on this market?
So it's very difficult for the 0DTE trade because we all know, and we all said that, we probably said that we all knew that when the 10-year gets to 4.5 and the 30-year gets to 5%, we expect the administration to say something to de-escalate, and that's exactly what happened. But the problem is that you can't, and I'm just thinking, you can't really go all in long because the other side is not saying that they are doing the same thing. So the US is saying, and I'm not being political, I don't care. But the US is saying we're not going to bomb for the next 5 days. And that's positive news, and we are up. But the problem is Iran is saying we're not talking. And I think the other parties have not made any statement for de-escalation. So if you go long this morning in 0DT SPX that we are trading, and one bad headline comes from the Middle East, the market could go down 100, 200 points also. So that's the challenge for today. And I'm not sure that I know what the answer is, and maybe the other panelists can guide us on how they would trade today as 0DTE trade.
Let's have your take also, Levi.
Well, I don't trade 0DTE. I'm a little bit longer term stuff. So when the VIX gets high like this, I'm typically shortening up my strategies, and I'm trading as short as 7 days. But I kind of gave up on 0DTE stuff because I didn't like being in front of the screen all day. And I feel like we've had enough choppiness over the last couple of years that it just didn't really jive with me personally for 0DTE. In general, I think we should listen to the guidance of what Powell spoke about last week about the state of the U.S. economy, and really looking at the unknown factors such as earnings reports coming up. So for any long-term investors looking at what the market's going to do, we really have to look at this next quarter and look at how the earnings are for companies and how these increased oil prices, which are likely going to be staying around for a little while, how that's going to affect the global markets in general. My expectation is that we're going to be fairly flat this year, but as we know, the president has the ability to put out information into space basically and just pump up the market whenever he wants. So it's volatile.
So any crisis also, or any volatile environment also have a lot of opportunities. So what are the specific opportunities you guys see in this market? Start with you, Levi.
Yeah. I think that what I'm doing right now is I'm neutralizing everything. So I look at my, beta weighted portfolio, and I look at being delta neutral all the time. So over the last year, I've been leaning a little bit long, and that has kind of come down a bit. But in general, like when I'm looking at the overall portfolio, if I have long positions that I'm putting hedges on, they might be short duration hedges. And then I'm playing like lots of iron condors and stuff like that in this high IV environment. And I'm playing pretty wide because we can get decent premium for playing quite wide right now.
What about you, Dale? What opportunities do you see as you are known as the Ironfly guy with 0 DTE, but you do trade a number of long-term strategies as well. So what are the opportunities you see in this market?
I think I'd be looking today at a UVXY, which is a play on the VIX, a bearish trade on that as a way of just kind of a down play on volatility. Would be playing it one direction. The second would be to, I think, get long on some oil type of things, because I would say that this conflict is not over. So what I find is that anytime news comes out, it swings too far in either direction. I tend to be the contrarian. When things have shot up, I want to look at kind of opportunities to de-risk, and when it shoots down, I look for opportunities to get long. So I think I'd look at this as an opportunity to kind of de-risk a portfolio and maybe get long some majors on oil, Chevron, ExxonMobil, some of the things. If you aren't already heavy in that, probably I would say gold and silver have probably overshot now the downside again. If you're not in any kind, I wouldn't overdo it in the portfolio, but I think it's smart to have maybe 5% in some types of commodities like gold and silver.
And oil is an interesting asset at the moment, jumping up and down like crazy. Personally, being from Norway, I do have some assets in a Norwegian index fund, and our stock market, of course, is pretty dependent on the oil price, with the state oil company Equinor being about 30% of the Norwegian index. So just by being in the Norwegian stock market, I guess I am long oil on that part of my portfolio at the moment. But Ashar, Dale mentioned gold, and you have been trading quite a bit in futures in gold. And what are the opportunities you see, both with gold and other assets?
Well, gold, has done something that I believe it has not done since the 80s, in which that we have had a 30% drawdown in gold in probably a week or so. I may not have the days exactly right. We were at 5,500 and now we are down to 4,400. We went even down to 4,200. So part of it is the liquidity crunch, is that people who were long gold maybe were overextended, and when the whole market went down, they needed liquidity to get out of margin calls, and they sold what they could sell. Part of it is geopolitical. I think Russia sold a lot of gold. Either way, I think gold is very attractive at these levels, because I think that long-term inflation is going to go up. Long-term, we are going to print more money, and the value of the dollar will go down over time. So on the long-term horizon, I think that going long gold is a great option. And right now, the volatility in gold is very high. So you can go long by selling way out of the money put options at this time. and you can collect some premium, and you can generate some income, and you can be long gold that way. But you have to be careful, because the amount of the margin requirements for these commodities have really gone up in gold and silver by the CME, and the idea is that they're trying to prevent people from being overextended, but that has contributed to a lot of folks being forced out of the market. So as always, everybody knows that, but it's the hardest thing to do, is to make sure that any trade and any position, especially in the commodities going long, you are not overextended and you are not taking up too much margin, because it can have catastrophic results with these wild price fluctuations.
And then, Steve, what are the opportunities you see?
But before we move on from that, John, can we ask, are you, when you say buying a short put, what are you looking for, out of the money? Are you looking at in the money, and what's your duration for those types of things? Can you be a little more specific in what you might look at?
Right. So, like I was talking about, like you can sell out of the money put spreads at this time, and they have daily expirations, 5 expirations a week. They close they stop trading for the daily expiration around 1:30 Eastern every day. And with the liquidity and with the amount of volatility that is there, you can sell like a 5 delta put short option and collect, like you can make up to 2% a day by selling these out of the money put spreads at this time, and you can capitalize on that. You can also you sell weekly or monthly options. You can determine a level at which gold is attractive to you. You may decide that 4,100 or 4,000 is the attractive level, and you can sell options that way. Of course, you can always go long by buying call spreads or call ratios, but the margin requirements in gold and silver are very high, so you have to be really careful on those naked options.
Right. And are you typically trading on GC, or which product are you trading the options on?
So normally I'm trading like options on GC.
GC is the futures on the oil, on gold.
Right, like on gold futures.
So, Steve, what are the opportunities you see in this market?
Well, my strategy is a little bit different. I love the fact you're doing this, John, because we're going to hear so many different ways of doing things today. But I used to do a lot of the different trading being talked about too, day trading, things like that. But to Levi's comment, I've gravitated towards something that takes a little less screen time and eye burn for me. So I usually look at the market for about 30 minutes in the morning, about an hour before the close. And aside from that, I'm out doing other things. And the type of trade that I tend to put on, I focus mainly on SPX, occasionally RUT, but predominantly SPX for a couple reasons. One, highly liquid. Two, it's a little less likely to have some of the major gaps and things that individual companies might have, those binary events like earnings and things like that. So it's a little more predictable, if you want to call it that. And the particular trade that I do, which I'll be sharing in a later session today, I put on with a really wide range. So this trade has really fast theta decay, and I can put it on covering about a 300 to even as large as 500 wide path in the SPX, which means most of my trades don't require adjusting. About 70% of them that I put on, I take them off when they hit their profit target. The vast majority don't require adjusting. They don't require me babysitting them during the day. So what I look to do on a day like today, the other unique thing about this trade is that it can be put on in pretty much any market environment. Low volatility, it has two sides to it. One of them is positive vega, one of them is negative vega. By putting the two together at the same time, I end up with something that I can put on any time. I don't have to wait for volatility to spike. I don't have to wait for volatility to drop. And you'll see some of these things that I'm going to share later today. And then the final thing on SPX is here in the US, it's tax advantage, much as the futures are for some of the people trading the futures. Not giving tax advice here, talk to your own tax person, but there's advantages to that. So on a day like today, what I do is when the market is at a different location than it's been over the past few days, I'll just go and put on another one of my Flyagonals at that new location. And I already have some on at a lower location. They're not being stressed today because our market didn't move more than 200 points. Again, wide range on this trade. So I just layer in a new one. So that's kind of what I do. Then I go play pickleball.
Hey, Steve, do you put those on daily, your Flyagonals?
I don't put them on daily per se. And I mean, my trigger for putting them on is the market at a different location than it was yesterday. And by different location, I mean 20, 30, 40 points different, so that if I put on a new Flyagonal, it's going to have a different sort of tent structure to it. So invariably in my alerts and things like that, I'm doing 2 to 3 a week, sometimes a little more. And I take them off. My general rule on them is if I hit 5% in less than 1 day, I go ahead and I pull it off. I take that 5% and run. I know it sounds like a small amount, but that's 5% after commissions. And I pull the plug and run, and that's what's given me about a 94% win rate and a very smooth equity curve. If I'm in it for longer than a day, my target goes to about 10%. And my average days in trade is about 5 days.
And we will get into the Flyagonal later today, but now the market will open soon, and I'm a bit curious about what do you guys think? Where will it open today? It closed at 6,506 on Friday, 0.48. What is your best guess, Levi?
Oh yeah, I'm like a deer in the headlights there. I'm trying not to guess that. I'm looking at the ES futures right now. They're at 662.
They're at 66.76.
Yeah.
Well, let's get one number from each of you. Give us the guess before it opens.
It's going to open there and it's going to drop. In the first half hour, it'll be down 50 points from where it opens.
Okay.
66.10.
All right.
Think,
And will it drop or go up after that, you think, Asha?
It'll go up for the first 30 minutes and then it will drop, I think.
What about you, Dale? What is your best guess?
It'll open at 66.11. And
a half.
And go to 66.30. All
right. And Steve?
I had said that it's going to open about where it is right now, but then I think it's going to drop. I think it's going to sell off by 7 o'clock my time. After the first 30 minutes, I think we're going to be lower by 30 points, or lower than the open by 30 points.
Do you guys follow closely? Where are you like sitting and following the charts as the market opens and being curious about it and so on?
Well, I'm not sure who you're asking, but yeah, I'm here every day at around between 8 and 8:15 a.m. Central Time, and I'm sitting here watching it open at 8:30. We have about 30 something people every day on Zoom, and we're watching the market open. And
I watch it open every day, but invariably the types of trading that I'm doing doesn't require any adjustments or anything. So it's more of a curiosity for me. I look to see where the market's open. I look at my existing open trades, see if anything might need adjusting. More often than not, they don't. And then I may put on a new trade like this morning if the market's at a different location, and then I move on.
Yeah, and I guess the market is opening every second now. Earlier today, I was sure it's gonna go a lot down for sure, but I let's see however it. Okay, so it's about 66.02. It's up how many percent? 1.41%. Who would have believed that a few hours ago?
Yes, it is, but it's going to be volatile. I'd be really curious to see, Steve, what would your trade be for today if you had to look at it for today and enter something now for SPX?
If I were to enter one right now, I mean, it would be again, without explaining the whole Flyagonal, there's two variations of it, but it would essentially, right now I've got one on and its range goes from 6,400, the break evens for 6,400 to 6,850. So it's 450 points wide. It's up 10% this morning. Yeah, as soon as we're done with this session, I'll probably get in my community and maybe close this one out and add a new one.
Right, but if you added a new one right now at SPX at 6,600, what would your strikes be, and what DTE would you place them at?
Well, again, the Flyagonal, I would go out DTE wise. I would go out where I don't already have one, so I'd have to look at my inventory and see. But it's usually going to be in the 14 to 20 day window, generally speaking. Okay. And as far as the strikes, I have two variations of this. One is a 5-legged, one is an 8-legged. That's not going to make a lot of sense to you right now, but the most common one I'm starting to trade, it would have an iron butterfly that would be centered over the current market. So I'd center it around 6,600. And I do 50-point wide wings is what I normally do in SPX. So an iron butterfly, which you guys are all going to be familiar with, but then I layer in diagonals around that. And that's what gives this thing the real juice, because if the market sells off hard, those tend to be positive vega and they'll expand out, making this thing even wider yet.
And we will get into the Flyagonal later, which is a fascinating strategy. I've been doing a similar strategy for quite a few weeks now, with also very good results. So it's an interesting strategy for sure. Dale, you wrote in the chat we have here in the studio that you are bullish on Nvidia at the moment, and you told me when we were preparing this an interesting way you are getting into Nvidia. Is that something you would like to share?
Oh, okay, yeah, it's a trade that I'm calling the double deuce trade, and what you do is you sell a $2 put and a weekly expiration. So if I was putting it on today, it would be expiring for Friday, and you look for a $2 put. And if you get assigned, you sell a $2 call. And if you do that once a week for a year, you've reduced your cost basis on Nvidia by $100, assuming it's trading around 175. Your cost basis, would be $75 if you do that every week. Now, I tend to be a bit agnostic on this trade in that I don't really care if I get assigned. I'm bullish on Nvidia. I think it's the picks and shovels for the gold rush. The gold rush in this case being a rush towards AI, and everybody needs their product. They've got a backlog, and so for that reason, I'm doing two trades on Nvidia. The double deuce is one way I'm trading it. The second way is through poor man's covered calls, buying the 70 delta call further out in time. In this case, it would be in May or June, and then selling the weeklies slightly out of the money. So currently I'm short the 180 calls. Last time I checked, Nvidia was trading at 175-ish. I haven't checked it this morning. Maybe somebody can pipe in and tell me what it's trading for right now. So that's the way I'm trading Nvidia. So I'm trading it two different ways: the double deuce and what's typically called the poor man's covered call, which is also called a bullish diagonal.
All right, here's Nvidia 176.89. But we are going to talk about another of your strategies today, Dale. Let's also, just first before you start, let's introduce one more guest in the studio, Liv Graves, if I'm pronouncing it correctly, from Options Samurai.
Yes, Liav Graves. Yes, hi.
He is joining us from Bangkok, I believe, right? So it's
yes, exactly right.
Good evening to you. And you are going to demonstrate your option scanner, Option Samurai, after we have talked about Dale's 0DTE Ironfly. So looking forward to that.
With pleasure. Thank you.
Dale, I will I will remove the others for a little while, and we will go into your 0DTE Ironfly strategy, which is one of the first interviews we did on this channel, and one of the videos that a lot of people have watched. And it's a fascinating strategy, a volatile strategy. I think you said at the time it's not for your grandmother's mutual fund. So please give us a quick update or walkthrough of this 0DTE Ironflies that you are doing.
Okay. Now, John, do you have to share my slides, or do I need to?
I will put them in for you.
Okay. All right. Sounds good.
That was just wrong, but you will, just a minute, we will get, wait a moment. Sorry, here we have.
Yeah. So I know some of you, I'm kind of trying to figure out if my audience knows what an Ironfly is. So I'll start off just by saying, what is an Ironfly? So I trade SPX, and it is a four-legged option trade where there's a short put and a short call that's at or near the money. And the wings, when we start off the day, are typically 50 wide. Throughout the day, I'll become more narrow. The sweet spot is approximately 40 cents. And it is a premium selling strategy that does the best when the market does not move a lot, or it doesn't move outside of the expected move. So that's what a fly. And I anticipated some of the questions, like, when do I start? I start around 9:30 a.m. Central Time. So about 1 hour from now, I'd put on my first fly after assessing some of the market tone. So that's when I start. And when do you add the second fly? So throughout the day, I will accumulate flies. So I add the second fly based on the credit collected for the first one. So for example, if we collected $28 for the first fly, I would add the next fly. When the market moves 20 points, I'd add the next fly 25 points away. So that would be the second fly that I add. And when do I close? I would close approximately when the market moves the width of the credit collected away from the short strike. So if I collected $28 and the market moves 28 points, I'd be closing that fly. And really, how much buying power is required? Approximately $20,000 per contract traded. So that would give you the budget to trade the strategy for one full day. And then finally, kind of what's been my result is I've grown it from about $500,000 to about 2.6 million. And this cut off over the last three and a half years. And here's the P&L curve here to the lower right. And finally, like, what's the downside? And the downside is it has a higher variance. What does variance mean? In physics, you've got the frequency and the amplitude of a wave, and the waves have bigger waves and higher frequency. So there's large swings that are possible. So as John mentioned, the quote is, it's not your grandmother's mutual fund. So that's kind of the short, I think, the succinct version of Ironflies. Maybe, John, you can think of other questions maybe that you have that weren't included on these 6 or 7 slides.
But this is a pretty intense trading strategy, right? Requires your full focus the whole day, or doesn't it?
It does. Now there will be times, it's kind of like poker, in that it's hours of boredom followed by minutes of terror. So you put the things on, things are pretty relaxed. You're adding a second one, things are pretty relaxed. You close one, things are pretty relaxed. Then you start ramping it up. You could get 5 or 6 of these on, and if the market starts moving crazy, open, close, that's a crazy day where we'll have 22 flies and we close 18 of them. That's a crazy day. Just a boring day is the most boring is you have 5 flies all day and you closed all 5 of them, and you sailed all 5 of them into the close. So, it ranges from boring to just absolute terror.
But how do you live with these big swings? I mean, you have been doing well with this strategy, but you have big drawdowns. How do you live with that?
Well, I think I start the day by doing my homework, by trying to get my head on straight. And what I mean by that is every day for 3 or 4 years, I write down the same 3 things: be smart, relax, and be grateful. What I find is that, and according to some research on emotional intelligence, when you're all tensed up, as soon as things become highly emotionally charged, your ability to think logically diminishes. And what I find is that I make my best decisions when I can relax. So I'm in the middle of the day, I'm creating YouTube video, I'm creating AI music around trading and playing it for our group. We laugh and we do goofy things, sometimes humor. So I don't know. I think part of it is just kind of understand yourself enough to know what are the kind of things that you can do to chill out, to relax. For me, it's always keeping the big picture in focus. So whenever I'm obsessed with a loss, I zoom out and I take a look at the big picture, about how successful I've been, and then just count my blessings and be grateful.
There is a question in the chat. Can you give an example of how you would place it today, specifically?
Well,
let's maybe bring in the SPX remove. Okay, well, just a moment. Let's bring in SPX as it is right now. How would you place this your first trade today?
All right. First, let's presume that it is approximately 9:43 Central Time. So what I would do first is, John, I would see what are we collecting right now if we sold the Ironfly 6620 strike, puts and calls 50 wide. Now, if I was about to put one of these on, I would set it up and see what I might be collecting. If I'm going to guess right now, expected move is showing right now that we're at 55 points. So I'm going to assume that I might collect somewhere around $30, $30 to $35. So what I would do is, if I put one of these on at 66.15 and I collected $30 for it, then 66.15 plus, let's go plus or minus 20. So at 66.35, I would add the 66.40s. So we would start at the 66.15, and if it moved to 66.35, I'd add the 66.40s. Or if it moved to 6600, I'd put the 65.95. So what I'm trying to do with my first 2 flies is establish a very wide runway. Imagine a wide runway. So now your airplane has a lot of flexibility. What you want it to do is to stay between those two strikes. So that would be the way I would start it, and we would go, we would do that until approximately 11:30 a.m. starting at that's Central Time. 11:30 a.m. I'd start filling in the center of the cookie. And what I mean by the center of the cookie, the 15 and that 40, 66.15 and 66.40 would be the chocolate cookie of the Oreo. In the center filling would be 66.20, 66.25, 66.30, 66.35. And once all of the center filling is full, that's a full cookie. And what we want to try to do is to take a full cookie into the close. What we try to do when we close things is we close them for a loss, usually between $2 and $5 per contract. And we give ourselves a chance every day for a big win. We want to keep our losses small. We want to give ourselves a chance for a big win every day. Now, there are people in our group that like to sometimes close early, and that's fine because it's their money. But I always take it into the close. And one of the quotes I use, and maybe you've heard me say this before, John, is famous bank robber Willie Sutton was asked, "Why do you rob banks?" You know what he said, John? Because that's where the money is. Why do I fly it into the close? Because that's where the money is. You know, a lot of times 40 to 50% of the daily theta decay, the entire day, comes in that last hour. And before I developed this strategy, I would always close too soon. I would close before that I got to that opportunity. But I always thought, you know, if I could engineer an aircraft that could withstand that turbulence, I really want to fly into that last hour because that's where the money is. So that's kind of why I've created this strategy. You know, I used to teach a class at a video game production school. And so I visualized this like a video game where you have glasses of water. And ideally, your first glass of water, you want the pitcher just to flow right in the middle of that first glass. But what we're doing over time is we're adding a second glass, a third glass, a fourth glass. We're dropping the first one. You know, we're always moving these glasses around, and the market is a giant pitcher of water, and we're trying to catch the close. So one thing we've called ourselves, John, is the fly catchers. We're attempting to catch the closing price of SPX, not by guessing where it's going to land, not by predicting it, but by reacting to it.
I want to also bring in Pasha, because I know that you are also doing 0DTE Ironflies. What are you doing compared to what Daily is doing?
So I normally sell the broken wing butterflies. So I'm not selling, you know, like the iron butterflies that he does. So basically, if I was going to sell a put spread, I would sell, if I was going to sell the 6,500 short and 6,480 long, I would also buy a 6610 long put. In that way, I have a buffer of a debit spread facing the market before the short strike, my short strike is hit. So what that does is that it obviously takes down some of the profit that I make on my trading. However, it would save me if the market reversed and it would go down to my short strike. I would have the debit spread in the money before my credit spread would be in the money. And what I normally do then is that I'm able to monetize the debit spread for a profit, and I use that to roll my put spread. And as we had talked about in the video that I did with you, I do something a little bit different than other people. I normally roll during the day for 0 DTE, but I can, like I tend to reverse the direction. So if I've sold a put spread and the market reverses and starts falling, and I'm no longer bullish on the market and I'm bearish, I would roll my put spread into a call credit spread 0 DTE. Of course, it would require me to increase the size of or the number of contracts. But when I have the debit spread facing the market and I'm able to monetize that, that helps in that roll. Of course, sometimes I'm not able to roll 0 DTE, and then I can roll it to like a 1 DTE or even a 5 DTE in order to protect that capital that I'm using for margin.
Very interesting, and I would love to go even deeper, but we can probably go deeper into this and the segment with you a bit later today. We are now, thank you very much to Dale for presenting this strategy, and to you as well, Ashar. But we are now going to move, today we will have a number of product demos of great tool for options traders, short 5-minute demos of different tools. Full transparency, these are companies that are affiliate partners of Theta Profit, which means that if you book their products, we will get the commission. But these are useful tools. I only want to have affiliate partners that have products that I think are really useful for options traders. And the first one we're gonna have is Live from Option Samurai, which is an option scanner, right? So
yeah.
Just go straight ahead, Liv, and tell us what problem or challenge are you trying to solve for the options traders? Tell us about your product.
Cool. Thank you, John, for inviting me. And hello, everyone. My name is Liav. I'm founder of Option Samurai. Option Samurai is built for self-directed investors that are looking for a repeatable way to find trade ideas. They want consistency and they want to rely on themselves. In the core of the product is our option screener that basically takes the entire market and distilled it into a manageable list of trade ideas. Actually, the product started as an internal tool. I built it for myself. I'm a licensed portfolio manager, and I was looking for a way to find consistently trade ideas in different market conditions. So I built it for myself, and later we released it to everyone. I think that the best way is if I show you how we do it. So as an example, this is the main page of our screener. This is like the all scans page. This is where you have all your saved scans and predefined scans that we've created for you to give you ideas of what you can find. We have, selling puts, buying calls. We have butterflies, iron condors, and basically we have a custom strategy so you can build whatever fits yourself. Since most of our traders are option sellers, I'm going to start with an example of selling puts on dividend aristocrats. That if you are assigned, the dividend yield is above 4%. So before explaining like the idea of this, a little bit of orientation. The results table is in the middle. On top, we have controls like save or export, etc. And on the left, you have all the filters that we use in order to get the scan results. There's no black boxes here. You can see everything we use. And if you read our documentation, you can see how we calculate this. And of course, you can change the filters and save it, and then it will fit your needs. Basically, also, if you click on each trade, you can see a table, like more details with a stock chart. In the option tab, you see more of the option data, including implied volatility versus historical volatility. And in the strategy, you can see like the P&L chart, and you can control the assumptions we use, like days to expiration, and see how they affect your trades, like how changes in implied volatility will affect your trades. And basically, you have advanced analysis and on the short list of trades. So the idea of this scan is that dividend aristocrats are dividend stocks that distribute and increase their dividend every year for the last 25 years. So we can consider them as more of a stable stock, and maybe like they won't go to zero. And we pair those stable stocks with selling puts, which is a high probability trade. And when we do that, it's more of a safer way of being long on different stocks. And the idea is that even if you are assigned, then you are assigned a dividend paying stock. And maybe if you're doing calls, you have two income streams. So I like going on each trade, and then I can see the chart, and I can see in the dashed line the break-even point. So for example, for Black & Decker, I like that the break-even point is below support. And you can see in the results that this trade has almost 80% probability of profit priced in the options. The annualized return is 11.62%. And if you are assigned the intrinsic dividend yield, is 5.5%. So this is very quickly what happened here is we took 1.8 million options and we distilled it into a list that have 3, in this case, trade ideas that you can analyze and search. And this was just one theme. You can look for, like high implied volatility with iron condors, or you can build your own butterflies and have whatever you're looking for. And I think that the best way forward is if you go to Option Samurai, if you click the link in the YouTube or scan the QR code, you go and you can sign up for a free 14 days trial. There's no need for a credit card. And if you tell us that you come from Theta Profit or this live event, just send us a message and we'll increase it for 1 month free, so you can try us out yourself, and feel free to contact us. We're traders ourselves, so we're happy to talk with you. So yeah, that's what I wanted to show.
Thank you very much, Liv. And this is an exciting product. And we are going to take a very short break just to remind everyone that if you want to dig into more of these strategies that are being presented, for instance, Dale's Ironflies, you find the links in the description to all the interviews we have done with today's guests. And if you have registered for this event, you have received the hour-by-hour program. But if you have not registered and want to have the program, you can register, and you find the register link in the description as well. And in the confirmation mail, you will get that link. We will take a short break now and be back in 2 minutes or 3 minutes maybe, and for the next session. Thank you so far. Hello. We are back with a new group of people. Let's take a 15-second introduction run. Let's start in Da Nang, Vietnam, I believe, Tos, where I have been spent my winter in a fantastic city. Who are you? 15 seconds.
I'm glad you like Da Nang. Yes, I'm in Da Nang right now. You can see in my background. I'm the option seller, and I specialize in selling future options as well as a lot of equity options. And yeah, I have a 92% win rate since starting my Substack and channel and Discord channel. So thank you for having me today, John.
And Tammy Chambliss.
Hi, John. I focus on zero DTE options trading using SPX, and I trade MEIC, multiple entry iron condors, and I've been trading that strategy for about 4 years, 3.5 years, and trading options for about 20 years now, I think. So long career. Ups and downs, but the MEIC has worked very well for me.
And let's move to a goat farmer in New York, Doc McGraw.
Hi, everybody. I'm Doc McGraw, and yes, I am located in upstate New York. I retired from Florida to upstate New York. So anyway, and I see the option seller and Tammy, two people who I know well, and we've been in this trading community for a while. Good to see you both. And I do SPX options mostly. I do some other options as well. I trade SPX options, and I use gamma levels to determine my entries. I'll typically do iron condors and butterflies, zero DTE, but I'll go out up to a week sometime, just depending where the levels are. The levels are going to inform.
Seconds are up. We are running tight schedule here. Rob, can you do it in 15 seconds?
Sure. My name is Rob Helmick. I trade with my wife, Maria, for the last 25 years. We trade about 30,000 zero DTE SPX trades every single year. And my wife, she trades a bunch of AI. I have to admit, however, that I am in awe because I am the #1 fan of Tammy Chambliss. So for me to be on a show with her is a very scary thing for me. If you hear me stumbling around today, that's why.
And
you're well deserved to be here.
And we have Troy from Option Omega. You need to unmute yourself. Yes.
Yeah. Thank you. Honored to be here. I'm Troy McNeil, one of the co-founders, Option Omega, a historical back tester that goes back to 2013, looking for strategies and looking through history in different market regimes. And I myself am the #1 fan of Tammy Chambliss.
And let's take a quick look at the market right now. It's keeping pretty flat. This would be an ideal situation so far for your strategy, Tammy, but we can get back to that later. But the market is up 1.64% today, which is pretty amazing in my opinion. I think we're not going to dwell with that now, but get started with the program. And the first guest who will be on is you, Rob. And let's move to this layout here, and I will for a moment remove some of the others, but stay in the studio. I'll bring you in again. so we don't get too much background noise. Or Rob, I shouldn't remove you.
Is there a way you can put up my, I got a 45-minute PowerPoint presentation. No, it's about 2 minutes long.
I'm sure you do. And you have a fascinating robot trading strategy. How many trades do you do every day, Rob?
Well, if you bring up my PowerPoint, is there a way to bring up my PowerPoint? Or do I have to do that?
Oh, you have your PowerPoints here as well. Oh, sorry. We have two things. Here we go.
How about that? Look at that. Okay, so yeah. So Maria and I, we trade together. We've made $418,000 in the last 5 months, and we've done 16,000 trades. 100% of that is with 0DTE SPX. We have, let me see if I can get that where I can see it. Say 100% of it is with AI as well. Okay, so I'm trying to, there we go, AI build, perfect. So 100% of our trades are done by robot. We use, to do the back testing, we use Troy's Option Omega, and for the robots, we use Option Omega as well. So, like I said, I'm an attorney, internet founder, internet CEO. I retired at 42. And my wife, Maria, she's a career banker and was the #1 house flipper in the United States. Basically, our entire career is math and trading. We started in 2020 and made $4 million our first year trading options, and we've been trading every day for 25 years. If you go to Rob and Maria Trading, that's where we are. Like I say, I use AI and robots. Maria does AI and manual trading. I use 0DT, SPX, MEICs, and EMAs, just basically what Tammy Chambliss taught me how to do. I back test over 7 million trades every single weekend, and then we filter them with AI. I filter them. We filter them again with AI, and then all my trades are done by robot, completely hands-free, and I go surfing all day because that's what I like to do rather than to stare at a screen. Maria, on the other hand, she uses Vera, her AI assistant that she built, and she took her 9 months to build it, and it's got constant improvement. And she learns, you can learn all that what Maria does at 1 p.m. in this show today. I won't bother you with that. But basically, if you want to learn how to do it, you just go to our channel on YouTube. It's all free. We got a 5-part series, says exactly what we do. We do daily show at 3:25. You can come on, talk to us. We show live trading. We have the chat room pick out what I'm going to trade, and they'll spend daddy's money. I'll do $1,000, put credit spread or call credit spread based on what the chat room says. And then we give out all of our trades for free every Sunday at 5:55. And you can see basically what's happened over the last 5 months. It's pretty steady. This is about 17,000 trades in $1 million account, and that's in a $30,000 account. And that's the end of my show.
But Rob, you say that you go surfing all day, which is, of course, an exaggeration, I'm pretty sure. But at least it's not true for the weekends. You don't really have a life during the weekends, don't you? Do you? Do you prepare all your trades?
I don't. Yeah, I don't do any trading manually at all during the week. I do all my work is done on the weekends with Option Omega. I do the back testing and then I set the robots. After that, it's all done by robot. It's all done automatically. I don't trust it. In fact, in the last, and we make about $4,000 a day with the robots in the $1 million account. And there are 2 days where I decided not to trade. The Department of Energy had sent out a mistaken tweet and the market went up 400 points. And then they took that tweet down. 4 hours later, it went down 400 points. I lost $65,000. My biggest loss day was 35 grand. Our max drawdown is about 5.7%. But that was our biggest drawdown. So I got scared and I did not do it the next 2 days. I would have won another $100,000. So my stats really are $100,000 low. So I really, if I just gone surfing, John, I would have made 100 grand more. So I got to go surfing more. That's the moral of the story is, but any takeaway people have from this is go surfing more, watch your screen less during the day. Maria, on the other hand, she uses Vera AI assistant all day long. And all she does is watch that screen. She does trade, make a lot more money than me, but all her trades are done with AI assistant. She still makes the final decision, but she'll go into great detail at 1 o'clock. I don't want to take her thunder.
I want to bring in Troy from Option Omega. You are, it seems, an enabler of surfing.
I didn't know it, but I'm honored to be helpful in any way I can, John. Yeah, that's kind of the whole thing is we want people to be able to, live life without necessarily being glued to a screen all day with automation. Although we think you should check it every once in a while for sure.
But do you have many customers who do this number of trades automatic?
I think Rob especially is a unicorn. I went down to visit Rob a month ago, I believe, and we went NASCAR driving together. But no, Rob is a power user for sure. But we have quite a few people who trade all day on the platform for sure.
All right. I think we will move on, and then we can go back to this and bring in also Tammy Chambers. I like to call Tammy the queen of zero DTE. She has been such an important person in the trading community in sharing her trades and her results every day. And today we will talk about a bit how you trade, Tammy, but also we will talk a little bit about drawdowns, right? Well,
That's
because
right.
there are people who are seeing quite significant drawdowns also these days. So, what? But explain first, very briefly, what is your main strategy?
My main strategy, pretty much my only strategy, is multiple entry iron condors. And for that, I do some back testing and determine what the optimal entry times are. And I opt to use 6 entry times and through the day. And those change each month based on the back testing that I do. And what I do is at those 6 times, I enter an door with using a credit target rather than using delta to select the short strikes. So my credit target might be 150, which it usually is, 150 on each side. And then I use, once I put the iron condor on, I set a stop at 2 times the initial credit, which would be a 1x net stop. So that if I stop out on one side and I win on the other side, I'm at break even. If I win on both sides, great, I've got a good day. If I lose on both sides, I don't lose very much. So I also work this strategy so that my max risk on a day, and that's the most I could possibly lose if I lost on every trade I put on, is 2%. So, and often I'm even lower than that, like around 1.25%. So, you know, each of the people trading this should adjust that to their risk tolerance. I have a pretty low risk tolerance and don't like to lose money. By the way, I am skiing, so I'm doing the surfing today. And you can see the pine trees outside. And I'm in Montana right now. And so I use bots for roughly 2/3 of my accounts, and one account I trade manually when I have time and when I'm home. So I won't be trading manually today. I just leave it to the bots today. And then I wanted to, do you want me to get into the drawdowns?
Yes, you may.
Yeah, okay.
You prepared it a little bit about drawdowns, right?
Yeah, I did. Here, let me share my screen. I'm not sure what that is.
Oh, is this not yours I'm sharing?
That's,
No. Oh,
that's
sorry,
not
that's
mine.
Rob.
Yeah.
I'm so sorry for not. Here is yours.
Yeah, okay. And what this is a few weeks ago, because I am in a drawdown currently, so I thought this is an appropriate topic. I know that a lot of people watch my results each day, which I post both in Discord and Facebook. And I am in a drawdown. I've come almost out of it, and then the last couple of days have put me back in a little bit. But to describe what a drawdown is, it is not a single loss or a couple of losses. It is looking at your account from peak to trough, and you know, from the highest point that your account has been to the lowest. So one losing day isn't a drawdown; it's just a loss. 5 losing days starts to be a drawdown if that is the low point of that account from the past peak. So it's looking at peak to trough. And what I say about drawdowns is always have a plan. Like, it's going to happen. So how you deal with it needs to be up to you. You decide how you want to deal with it. You can keep on trading and just keep, if you, this chart shows, the probability of X number of losses. So probability of one loss with a 55% win rate, which is roughly, mine's between 55 and 60% win rate, but probability of losing one trade in a row, 100%. And then I compare that to a strategy that has a win rate of 80%, which is a pretty good win rate. So the probability of 3 losses in a row is 100%. You are going to lose 3 losses in a row. Then 4 losses starts becoming a little bit less in a row. 5 losses in a row is 83%. 6 losses in a row is 55% at the 55% win rate. And it just goes down from there. So 10 losses in a row at a 55% win rate, it's 3% chance of that happening. Now, a drawdown is not just number of losses in a row. It is peak to trough, like I said. But I wanted to take this to the extreme and see, what's the worst that could happen if you did lose 10 in a row, 20 in a row? What happens to your account based on that 2% risk or less? And so I did some studies that looked at, if I risk 2% every day. So basically this means I'm taking an account and losing, I start with $100,000. I'm losing 2% or $2,000 every day. And I just leave that on until it's gone. Let's see how it's not even gone at 250 days. And that's basically a year's worth, or 252 years worth of trading time. But if you kept trading and losing 2% a day, at roughly 15 days, you would hit a 25% drawdown. And the red line is the size of the drawdown. So you can see the size of the drawdown over here. And the green shows where 25% is. And then a 50% drawdown you would hit at 35 days. So 1 full month of losing every day, you'd have a 50% drawdown. So I thought, let's look at ways to mitigate that. What can we do as we get into a drawdown to reduce that? So here's one suggestion, that like for every 10% drawdown, you reduce the risk by 25%. So you start out at 2%, and then you have, you get into a 10% drawdown, you reduce that to 175 risk, and then 150 risk. So this buys us a little more time. At 25% drawdown would be 16 days compared to, I think, 13 days, the first one. And 50% drawdown would be hit at 51 days compared to 35 days on the first one. So, you can have 51 losing days in a row and still only lose 50% of your account. I mean, that's a disaster, but it's, I kind of wanted to look at worst case. So another alternative is, for every 5 losses in a row, let's reduce risk by 25%. So, and we'll stop reducing risk when it reaches 25%. We want to keep trading. So at 25% drawdown, we hit at 17 days. And our risk would be, we'd be risking 125% at that point. And then if we keep reducing risk, keep trading, then at a 50% drawdown at 129 days, so 6 months in, we would have lost, that it gives us 6 months time of losing every day before we've lost half of our account. And then one more, this is kind of the optimal I could get it. Reducing risk by 25%. So, from 2% to 175 every 5% drawdown. This is closer to what I do. I kind of look at it at, anywhere from 3 to 5% drawdown. I'm starting to take some action to reduce risk. And At this point, you hit a 25% drawdown at 25 or 20 days, and you hit a 50% drawdown at 148 days, so greater than 6 months. You hit that drawdown, but your the speed of your drawdown has started to slow down, and by the end of the year, you know, you still have 20% of your account, and that's losing on every day of the year, which, you know, that's very much not likely to happen. But the other point I wanted to make about drawdowns was this table shows, you know, what it takes to recover a 10% drawdown. So you have to make 11% on your reduced size account to recover a 10% drawdown. And same thing for a 20% drawdown, you've got to recover 25, gain 25% from your from the low point and on. So a 50% drawdown, you got to gain 100% of your account back. So what this table tells me is that it's best to act early to stop that, so that you don't get into having to recover 100% of your account. It's very easy to recover, easier to recover 11% of your account than it is 100% of your account. And ways to do that are, you know, you could stop trading. At that point, you could, you know, take a break, trade slower, you know, trade less contracts. Position sizing is always, I think, our main tool to reduce drawdown in the MEIC trade. And my largest drawdown to date is around 5%. My heart attack level, like I would hate for this to happen, is 25%. So I never want to hit the heart attack level. And I have a panic button at 10%, but I've never even hit that. My hit the panic button is 10%, and the most I've lost on MEIC is 5%. So looking at number of losses in a year, so far this year, I've only had 4 losses in a row. I'm still in a drawdown, and that's 54 trading days that I've had 4 losses in a row. But I've, you know, often the drawdown goes, you'll win a day, you'll lose a couple of days. You may win a couple of days and then you lose 3 days, and it just works its way down the ladder. And so here shows, this is the last from January 2025 to current, the kinds of drawdowns I've had in MEIC. So early 2025, I was in a pretty steep drawdown, about, you know, 2%, a little over 2%. Then again in May, it was almost 2.5, or was 2.5%. You know, then I'd crawl out of it, and then, you know, that have a losing day, come back up, have a losing day. Now, what this doesn't show is, you know, as I'm having some gains, the account is growing. Here's the current drawdown I'm in, and I almost came out of it right there, but then I had a couple of drawdowns. This chart is current as of Friday, so I'm in a, you know, about a 0.8% drawdown, I think, is what my records show. So they are recoverable. You know, last year I made about, I think, 25% on my account, and prior years I made 30%. Last year was kind of the lesser performing of the year, and you know, I did that with these kind of drawdowns. We haven't hit that kind of drawdown yet this year, so I have not hit the panic button. It's just managing the drawdown and reducing. I did reduce, after this drop, I did reduce risk by about 0.5% on the prior risk that I was taking each day. And I haven't changed it since then. And then once I get out of this drawdown and it becomes positive, then I will start adding back some contracts and increasing my risk. But I don't want to do that. You know, the worst thing you can do is increase number of contracts when you're at the low point of the drawdown, because it can get worse. And you don't want to dig that hole deeper faster. You want to slow that digging of that hole. So that's my take on drawdowns, and wanted to share that with people because I know people are watching my results and see me in a drawdown, and I have people saying they feel for me, but I'm hanging in there. It doesn't bother me a bit because I know I have confidence in this strategy. It's done well for a long time. I think it's the choppy market that's going on right now that's causing some of that, and just the geopolitical events. So, and I've got my bot set to start. I think I hit my first trade in a half an hour or so. So I'm trading today, and
it's very exciting, and it's very similar to what I trade too as well. A little bit different, but very similar. And I want to bring Rob back in before we close off this zero DTE segment. Rob, you are, well, we don't see you right now, but you are also trading Tammy's strategy. What is your experience with drawdowns?
My experience is that it's been about 5.7, I believe, was my worst drawdown. Let's see if I got if I was any good at this, I would have a slide projected. Let's see what you got here. I give the exact numbers for you. Winning days, profit, max draw. Look at that. Max draw. Is it backwards?
No, it's fine. It's fine.
It's fine. Okay. Yeah. So our max drawdown is 5.7%. Our Sharpe ratio is 3.2. And I saw in the chat room, our longest, our numbers are virtually identical to Tammy's. We just do more trades. Tammy puts her trades more together. We do about the same number of trades, just a matter of where we spread them out. And then she's got me going with Dan Yankin and Tammy are the two people I follow. My multiple interaction condor from Tammy, and Dan Yankin using the exponential moving averages. I think Tammy might do some of that as well. I think. Is that right, Tammy? I think you do, or you used to.
A little bit.
A little bit, yeah. And so, we're up 60% of the days. Someone argued with me about KGAR. So I said, okay, well, here's how you calculate the KGAR. Here's what you see our monthlies. You can see pretty much straightforward. Here's our weeklies, but for that one huge time, things would have been great. So it's pretty straightforward. But John, I saw in the chat room that some people said, we want to see some live trading. So if you got is it okay if I go 1 minute? I don't want to cut Troy off.
You can get exactly 1 minute now. And then
let's do some live trading, baby. This is a trading show. Let's do some trading. Maria and I do what we like to call a crazy Ivan, which is just a short put that we're going to put on at 45 to 60 DTE, 12 delta. We're going to take it off at 25% profit. You can see today that the Qs are, this all in the NQs. We're up. I talk fast. You can always record this and watch it later. We're up 522 points. I got one here that's 53%. Let's sell one of these bad boys. We're going to close out the position right here. We're going to come in here to Tasty Trade. Hopefully you can see it down here. And I'm going to give you this a little bit doink, doink, doink. So I'm going to say we want to get we don't want to pay quite as bit. So I'm going to do a little cheating, get a little bit extra money for my dog Barbie. And that trade is in there. And boom, there is a fill. Oh, did we get a fill? Oh, that's a bunch of multi-entry iron condors. By the way, quick shout out to Troy. Here's where we are today. This is Options Omega, shows you in real time how you're doing. And you can see I'm up 34.90 today. So let's go back here. And look at that. We got a fill. There it is, 10:29 a.m. Trading show. You wanted to see some trading. The chat room said you wanted to see some trading. That's some trading. Back to you, John.
Thank you very much. Okay, we are going to move on because we have 25 guests today. And even though we have 7.5 hours, it's we have to move on. So thank you very much to Tammy, and thank you very much to Rob. Rob will be back later, and so will also his wife Maria. But let's now move to Doc McGraw, and you are from New York State, and you are really focusing on GEX levels. And I want to both very briefly explain what GEX levels are, but also show how what it shows for today and what you read out of it. So we have about 10 minutes for this part.
I would love to. Hi, everybody. I'm Doc McGraw, and just brief background. I've been involved in the markets probably for 40 years. I've been trading options for more than a quarter century of those, and I've been trading full-time for about 10 years, maybe a little bit longer. And I know some of these people, Tammy and a few others, from the old Facebook days when it was just three SPXs a week. But anyway, let me get to talk a little bit about GEX. GEX stands for gamma exposure, GEX, gamma exposure. And without giving a whole lesson on what gamma is the rate of change of delta. And brief version, when trades go in, market makers are on the other side of that trade. They buy or sell the option. When that happens, they hedge their deltas. Now that they're hedged, they're flat. Their goal is to stay delta neutral. And their GEX, their gamma exposure, tells them and tells us where they have to buy and sell, where they have to react. So technical analysis is backward looking. Oh, this is where the buyers came in before. We hope they're going to come in again there today. Back testing as well. This is what happened before. It's likely to happen today. What I like about gamma exposure, this tells me what will happen, not what happened, what will happen. Now, of course, it doesn't always work perfectly because there's lots of variables that go on in the markets, and gamma exposure is just one of the variables. So with that as a brief background, let me show you where we are right now. And there were some good trade setups before, but a lot of those have kind of dwindled. We had a nice ladder right up here to this level here. I have to explain. Let me quickly explain what I'm looking at. What you're looking at.
And maybe also say the numbers we are, because it might be
Yes.
bit difficult for people to read what exactly
Yes.
what levels are.
Okay, good feedback. Okay, so right now we're hitting up against 6640, which was actually a level I identified in my Discord as we have an inflection point up at 6640 and down at 6610. Let me quickly explain how to look at this, pretending we don't have to understand anything. Bars to the right are where market makers are long delta. As we are long gamma, long options, that means somebody sold them the options. Iron condors, hypothetically, me or Rob or Tammy or John. And as we get up in that direction, market makers have to keep selling to balance it, to stay delta neutral. Do we go through levels? Of course, depending on other variables. But we know we're going to stall here, and you see the upside momentum has stalled. And I'll bring up a chart in a minute. Same thing on the other side, we have what we can call support. It's not really support, but we can generically think of it as support. Down here at 6,600. So this is our trading range for right now. This is our zone. I always write my plan conditional if over 6640. Now remember, market makers are responding to market conditions. So if people keep buying, we can go over that level, then their hedging changes. But if over here, the next zone would be 6640, should stall out around here, 6670. So a nice looking fly, which actually I put on one earlier, would be something like 650, maybe 650. We'll model out in a little bit. 650, 765, 690, something like that. Maybe a 15 wide fly centered up here, trying to get the convexity. But first, we need to break through this. Otherwise, the next move is down this way toward the 6625 again. Now, when the bars are to the left, when market makers are short, that means customers are long. Customers bought them, market makers sold to them. So these are what I call two-way ladders. We tend to scale the ladder up, which is what we did, bump our heads here, and then stall and maybe come back down. Now, unlike the guests that were on before who are mechanical back testing, I'm purely discretionary. I'm purely discretionary. I trade what I see when I see it. I typically try to enter very early in the day and then might add afterwards, and will manage based on what I see. I don't have a stop loss. If anything, I have a stop profit. I'll take profit early, 65%, 50%, and not leave trades on, and then keep moving them from there. Let me just show you one more thing here. So you probably can't see this. When I hover my mouse over here, it shows calls minus 1,484. Forget what you see on your screen on volume. That's telling us that right now, or as of 10 minutes ago, as of the last update, market makers are short calls at 66.25. They're short 1,484 of those. So they had to hedge those on the way up. They hedged in the direction of the move. As we stall, we kind of get attracted back to them. When I saw the setup before was when we were down here near 6,600, and I saw all these calls coming in. Now, I'm an iron conduit seller, so let's look at some iron conduit trades. Let's look at what we have here. And let's kind of figure some stuff out and have some fun. One more thing, though, I'll be brief. So every day I have my daily plan, which I plan out at the beginning of the day, and this is what subscribers get. I have a Discord room where I do this kind of narration pretty much all day long. And of course, this was written before the Trump announcement, but there was a contingency in the plan for in case that happened. And so here was what we saw in the morning. We have breakout pocket up here. We had the round number lid. We had the 200-day moving average, and I had more levels up here. This was all in there from the morning plan, and so now we're in this zone. Same zone I showed you there. Here it is on the chart. So let's get into we'll just use Tasty here, and we'll take a look at we'll come up with a trade idea. I don't swing a big back like Rob. I'm not going to throw $1,000 at a trade. I'll throw $150 at what I call a trade for science. I'll put on a trade, see what happens, you know. So what would my for science trades be? I usually like to do flies, and you see we're pulling back as expected, right, to that gamma level. So that easy trade is kind of already going away. 66.25. So I'd probably be forcing it, but let's see what I can force, right? Let's see what I can force. I put on a VIX trade before. This is my first science portfolio. This is why I'll do demo trades on every morning. I'm on at 8:30 on YouTube and on Twitter, and I, put on some trades for science. So let's look at a trade. Let's do some live trading. Not taking off a trade I already have on. Let's do some live trading.
You have 1 minute to put it on.
1 minute to put it on. Okay. Let's see. This was a trade I tried to get in the morning. Couldn't get it. I wanted to get it for $1. It was $1.65. All right. So I'm going to put on a put fly. I'm going to center it right around 15. Well, it's too expensive. I'm going to go 25, 10, 95. That looks even. For $1.50, let's put that on. Okay. I'll check back with you later. We'll see how it does. I would also sell puts. One more thing I just want to show them real quick. I would look to sell puts below these vertical lines. That's a little too close. I would look down here.
And I guess we will check back on this trade when you come back later, because you will come back a couple of times later and we'll see how the GEX levels change. But now we will thank you very much, Doc, and we are going to move to toss the option seller, and welcome here. You also use GEX levels quite a bit, don't you? You have muted yourself, so you need to unmute yourself.
Oh, well, I just like talking to myself, so you'll have to excuse me. I was gonna say, yeah, I do use GEX a lot, so I was glad that Doc already gave a really good primer on what it is, so I don't have to repeat myself here. And I just want to show, like, today it was a really good example of why GEX is a great tool to have. So coming into today, obviously we know that Trump tweeted his news about delaying the strike for 5 days, and that caused a huge pump pre-market. And then there was a little bit of a retrace afterward. And coming into the market open, people were kind of iffy about what's going to happen, right? Because we're getting mixed messages from both sides on, both what Trump wants and then what Iran is saying it's actually happening. So like there was a little bit of conflicting messages. And I looked at the chart and I used what I call initial balance level. And this is a free indicator, by the way, on TradingView that anybody can use. Can I actually share my screen, John?
You can if you hit the plus sign in the bottom of your screen.
Okay. All right.
And I will
screen?
bring it in. Yes, it's coming in here now. Any moment. Here we go.
Okay, awesome. So this is what I'm talking about, the initial balance level, these green and red level that you see here. So on Friday, we have the IB high, or initial balance high level. Basically, it's just actually a little, I'll backtrack a little bit. Initial balance measure the high and lows of the first hours, right? And then it calculates what would happen if you multiply that by 2 on the upside and then on the downside. And that's how you get these level. So 66.43 on the ES future was the initial balance high from Friday. And as you can see, going into today, that level was respected really well, especially after the open. And that's what I was telling people in my Discord room, that the 66.43 is going to be our pivot for the day. And then going into GEX, as you can see, this is the GEX for SPX. There is a lot of positive gamma here at 66.40 and 66.50. And since we were above the pivot that I pointed out, which is the Friday's initial balance high level, I told people to target 66.40 for the upside. And that's what we got. We actually, the high was around 66.45. And this is like a really good example of how to use GEX along with your other technical indicators to, determine what would be a good take profit level, for example, in this case.
You trade mostly options on futures, isn't that so?
Yes, I do. I show SPX GEX because obviously it's like the most liquid underlying, right? And so in terms of the GEX data, SPX GEX is going to be more reliable than the options GEX data.
But you trade mostly on NQ, the Nasdaq futures.
I trade both, actually. I trade both ES and NQ future options.
What are the typical trades you have on these days?
So, I do a lot of put credit spread, and actually going into, we've been at war basically since end of February, and knock on wood, but all of my put credit spreads so far has been profitable. Like none of them had caused me to take in a loss yet. And, I share my trades in my room, but also publicly on my Substack in my spreadsheet, and anyone can go and check them out. And yeah, I'm still maintaining my win rate there. I do a lot of, like I said, NQ future, as well as ES futures. And how I do that is I wait for one of the GEX level to hit, and so that I can have a good location to sell put credit spread on. And like Doc, I'm very much just, discretionary traders. I don't think you can automate all of your trading and just go surfing all day and, just not worry about your trade. But actually, I really enjoy trading as well as like a thing to do. And I think if I don't trade, then like my brain would rot. So I actually do love like trading and being able to do what I do. But yeah, like all my trades are discretionaries. I wait for a good location to sell put credit spread. And I think even in a bear market, you can be very profitable, like if you choose a good location to do so.
I want to bring in Tammy also, because I'm curious, Tammy, if you are ever using GEX levels.
I do not. I have tried to look into those, and I just can't see how it would help my trading. So, I know that there are people that use it, and I've just found sometimes people tend to stay out of trades because of GEX. I don't even know how to say it, but trades that they maybe should have taken, and they might have won, but it's probably more due to just my lack of understanding. So more power to those who figure it out and can use it to improve their trading.
So Toss, you can give 3 arguments why Tammy should change her mind.
Well, I mean, I will tell Tammy this: if your strategy is not broken, I don't think you need to fix it.
Yeah, that's true.
But of course, for the sake of learning and trying to improve, I would say if you can incorporate GEX level in your trading, then it gives you more accurate levels to work with, especially for 0 DTE. With the weekly or the monthly option, obviously that's going to be less accurate because that does change a lot. But with the 0 DTE, it gives you a really good mapping of where participants are during the day. And so, Tanny, for example, since you do Iron Condor, if we're hitting the upside target of like a really big positive gamma node, right, that would be a good level for you to take profit on your put credit spread. And it for like likewise, if we hit like a put wall on the downside, that'd be a good level to take profit on your call credit spread. And so you don't have to like rely entirely on just being mechanical. You can be more strategic about it and then squeeze out more credit.
And Robert is asking to say exactly 30 seconds about a GEX level. Here you go.
Not even 30 seconds. I got to tell you, I don't know squat about GEX, but after watching these guys talk about it today, Maria and I are GEX curious. Just so you know, we are GEX curious, and we are going to try and find out more. Can you tell me where we should go to and speak to me like I'm a Labrador retriever? Teach me where to go to learn about GEX.
I think we will let Toss respond to that in the chat, because we are going to move on and I have to run the time well. But thank you very much, Option Cell. And I love seeing that picture of Da Nang in the background. I was there just a week and a half ago, and such a fantastic city. Thank you very much, Toss. Thank you to Tammy and Rob. And we are going to move on to the next affiliate partner, and that's Option Omega and Troy McNeil, who is the CEO of Option Omega, and that's a tool for backtesting, trade automation, and trade modeling. And for full transparency, this is an affiliate partner of Theta Profit. So if you accept their fantastic offer of 50% off the first year, well, we do get a commission. Troy, what problems for options traders are you trying to solve with your product? You have 5 minutes to convince us.
It's an honor to be here. I look at all of the traders who trade discretionarily. I've never been good at it, and I was a software engineer by trade, and I wanted to be able to see through history if there were setups. You know, you see people saying, put an iron condor on, and under these circumstances, you know, you'll win. But I wanted a chance to be able to look back through history and see if that was true. And that's kind of the premise of Option Omega. Is we try to go back to 2013, as far back as we can, and look at different underlyings and different regimes and see if things would have worked through different times. And so that lends itself well if you can find strategies to automated trading, which we offer as well. And so for me, it's kind of been a journey of trying to figure out. History is always a great teacher, and I think we to the degree we can, we should look back at history and see what has worked. Doesn't necessarily promise anything in the future, but it at least can give you confidence in a similar way that I think GEX levels do. I think GEX levels give people a certain confidence. I think history of trade strategies gives people a confidence to pull the trigger sometimes, to know what to look for and what not to look for. And so we started it with that in mind because, you know, as software engineers, we were just wanting to get into trading, but we wanted things to be as mechanical as possible. And the reason for that is not because it's mechanical versus discretionary, but just I'm a pretty emotional person. And I found that if I have strategies that I try not to care about through sizing and things like that, that if I let the numbers play out, they might work out in my favor. So that's what Option Omega is about.
Maybe you will show us a bit.
Sure. So this is a strategy. One of the things that I like about our back testers, I trade double calendars a lot. I'm a Vega guy, a volatility guy, as they say. And so, but DC double calendars have been through a drawdown, really December into the first parts of the year. So I've been trying to look at different ideas and maybe tweak some things about certain double calendars to see what's happening in the current market conditions. And so just to give you an example, this is a double calendar where normally in Option Omega, you can choose, you know, strategies based on delta. This is a very simple strategy where you're selling a 7-day strangle, basically 15 points that open, and you're buying 10 days past that, which makes it a double calendar. And it's a very, very simple strategy of just, you put that on at 9:32 in the morning and you take $1 profit out of it. And it's little things like that it's not about, to me, whether this strategy is a great strategy or not. I see Option Omega as an idea generator, to try to think through the market, to see what's happening and be able to tweak relatively quickly what you need to tweak to get things working. Because, for instance, double calendars I know work through time, but at any given time set, they might be working well under a different scenario or a different condition or a different setup a little bit. And so, for instance, this one again is just very, very tight iron condor. And so, you know, for instance, you can click on this and kind of visualize it and see what it looks like. And, you know, the goal of this test is you're not going to keep this on through expiration. You're not going to have this for 7 days, but you're going to basically have it on until you get $1 out of it. As you can see, that's on average about $1 a day. $1 a day is what we're averaging right now, year to date. And so I think that's interesting because while, you know, you might think, well, VIX is in a pretty elevated state right now, we can go wider on our double calendars, wider on our put selling strategies. This is actually kind of inverting that knowledge and say, well, actually, what if we go really, really tight in these high VIX environments? How much quicker can we get out for a profit if you're willing to take a profit and not let it ride? So it's stuff like that I find helpful, just to be able to test very quickly, iterate, and go from there.
And if I understand it correctly, on your platform, if you have found a backtest like this that works and you want to trade it, you can automatically convert it into an automated trade.
Yes, sir. Yeah, you basically, with a click of a button, can automate it, hook it up to your brokerage, and we will monitor the trade for you and get in and get out at the conditions that you set. And so our goal is for you to kind of be the research analyst for yourself, and then Option Omega can handle the actual clicking of buttons to operate the trade for you. I don't know if that means you should go surfing. Shout out Rob. But I still like to look at my computer when I'm trading. But you can perhaps do some other things while you're doing that.
Thank you very much, Troy. And as you do get 50% off the first year with Option Omega if you use this referral link that we have here on Theta Profits. So, and it is a fantastic product. We're going to have a break very soon. Just a little bit information. If you're curious about the strategies or the trading of some of the guests here, we have interviewed all of them, in-depth interviews. So you find the links to all the interviews in the description of this live stream. And on those articles that you will be led to, you will also typically find how you can contact them. And as I have said before, if you want to, it's a lot of work to put together something like this live event. So if you want to support the channel and maybe have your messages shine a little bit extra, you can use go to this little symbol in the lower corner of the chat and buy a super chat or a super sticker, and you will be shining in the live chat and support the channel a little bit. We are going to have a short break, 3 minutes, and then we will be back. And we are back with a new team in the studio. So let's take a very quick introduction of who we have here. You have exactly 15 seconds each. And let's start with you, Ravish.
Hi, I'm Ravish from optionskit.com. I also have a YouTube channel called Options with Ravish. I am a professional options trader. I mainly trade 2-3 different types of strategies. One is a long-term strategy where I like to sell long-term leaps. And then I also have a short-term strategy, which is delta neutral. Sometimes I do double calendars, double diagonals, iron condors. I also do automated trading. And I'm happy to share more ideas about what I'm trading today.
And we have Daniel from Germany, and you need to unmute yourself.
Hello, John. Happy to be here. And hello to everyone. My name is Daniel Nicolaitis. I'm an options trader. I've specialized in trading volatility, and I'm going to show you some metrics. Thankfully, they have been coded in at some products like MentorQ, but I will show you how I came to them and how you can make usage of them.
And Mark.
I'm Mark Anderson. I run a zero DT hedge fund and also a multi-strategy hedge fund. So I'll be kind of going over just testing in general and how to kind of look at your numbers to build conviction with what you're doing.
Let's start with doing a quick look at the market. It's surprisingly flat. Oh, I forgot. We also have Fabio. Sorry.
What is? Nice to meet you guys. So I'm Fabio. I'm the founder and CEO of MentorQ, and we're going to show you a demo in a second. I worked in finance for about 17 years. I used to be at Bloomberg, and I work with very large funds. And MentorQ is now a quantitative analytic platform that basically tries to turn complex information into actionable insight for retail traders. Dan is going to show you some of it, and I'm going to give you a demo at the end of the session. So looking forward to that.
All right, so let's take a quick look at where the market is so far. What's your take? This is the 1-minute chart on SPX for today. What's your take, Mark?
I don't really have any take. I feel like this whole taco thing is a little unique with this situation because there's more dynamics than just the president's decision. So we will see till the next move, but the problem will probably take a while to play out. I don't necessarily expect much for today.
And taco is the abbreviation for Trump always chickens out. Daniel, do you have any take on the market today?
Not that much more than Mark, because if you monitor the whole situation, and did he chicken out? Somehow, yes, but larger scale things are coming. So that's why we see the hedging not unwinding fully, and his window is closing. The latest that April, May, we're going to see some more volatility coming into the market. And yeah, but today was expected after that, what Trump did, that we stay where we are.
Any comment from you, Ravish?
Yeah, I think market is going on day-to-day. Market is going in based on news cycle. Every tweet and every news headlines can turn things around at any second. But if you look at in a longer time frame, we have actually been stuck in this range for like the last 6 months. So I think it is a really good opportunity to do delta neutral trades, which are weekly or monthly.
Anything you would like to add, Fabio?
No, I think same. Like, I think it's very driven by headline. We're still in a negative gamma environment, so we're still in a kind of high volatility state. I think monitoring the VIX is very important these days, and understanding how flow changes based on headlines like we saw this morning.
All right, so let's move to you, Daniel. You are the first one out here, and we're going to talk about short volatility trades. But let's start with, if you could describe your trading style for the audience.
Yeah, basically, I try to keep things simple, understandable. I've tried to do this with earnings, which is also a short vol trade, mostly what I do there. I try to find edges, basically on Confluence, and basically, in the end, it is a Theta trade. That's why we also came into a discussion with you, John. But I try to keep things simple, but look at the metrics. A lot of people just use IVR and IVP, and I found that this is not the approach, basically, which has given me an edge over the years. So I lean towards toward other metrics, and thankfully for discovering gamma levels and other stuff, I have enhanced my trading. Very important next to the volatility regime and which metrics I use is the expected move. I build everything if I can around the expected move. But yeah, basically I try to keep it simple. First of all, I will try to look into liquid stuff. So we'll try to trade VRP, take a lot of VRP trades, and build tiny ETF portfolio. But today we're gonna take a look at stocks, and I try to limit myself to the S&P 100 just for liquidity reasons, because if you have too much slippage, you can't win. The metrics I'm interested in mostly is NVRP, which is the normalized volatility premium risk. Basically, it tells me whether the implied volatility is expensive to the realized one. I've coded, which is no secret, a Z-score on that. And basically, I also use a Z-score on the IV percentile. So I try to see if there is alignment there. And if I see an edge, at least from the numbers, I will start to dig deeper. So, and for this, I will use most of the time, I will try to see where the expected mover is, try to sell short strangles out of there. I will skew them most of the times. I will go out 50, 45 days and close the latest at 14 days to expiration. I don't want to get into the gamma stress. I have a lot of other shorter trades I can babysit, but this is just like bread and butter. It's just repeat and adjust and keep things simple. And yeah, I can at least try. TOS has some problems today, so I hope my screens work, but I will show my TOS 1 second, then we can take a look at the trade I was thinking of, and then we can hopefully take a look into MentorQ and what Quinn did for me today in helping me adjusting this trade. I hope this is okay for everyone, and if someone has questions, please shoot.
Are you going to share your screen?
Yes, I hope this works.
It's coming here now. Yes.
Okay,
just a minute. There we go.
Yeah, so basically you see a lot of things say loading. I've been using it for many, many years. It's jinxed. I was showing it to a friend this morning, the basic idea. So I've lowered this a lot down, but basically the first metric I will be looking at is how is NVRP showing itself. So you see JD. I just chose this because it has a very high NVRP, but is this a trade I'm going to take? Most probably not, because what I don't like, it's not liquid enough. So Broadcom AVGO looks far better, and I will switch again my screen to show basically what MentorQ did for me now. Let's see what Quinn did for me. Okay. So I asked Quinn basically what I want to trade out, and it gave me all of this here. So metrics we're going to deep dive into in a second. And normally I do these things manually, but Fabio will deep dive more into that. But basically I like having things laid out, and this makes things easy for me. Now, so basically it shows me what a short strangle selection idea basically I could take. We will take a look if this holds up in a second. So it suggests a 280 put and a 350 call. We'll explain why. And basically, yes, we will be looking at the DEX. So this makes sense that we go out a bit further on the downside. Now you can ask, is this a time to sell short strangles? Basically, yes, because if you know how to hedge your portfolio well, basically for every short strangle I take, I will have some hedging position giving me basically a neutral stance on the market in the end. I feel very comfortable with that stuff. So without much further ado, let's take another look here. So this is MentorQ. The first thing I will be checking is the delta exposure. So we see more on the downside here, and we see the overall call resistance or reaction zone at 350, 280, which is not that bad. The only thing which I didn't like that much is that we are in negative gamma condition. I prefer positive gamma condition, and but I don't want to deep dive into that. I just wanted to show a very simple trade everyone can set up and everyone can manage. So if we go back and just let the machines do the work we normally do as humans, it's set to 90, 340. Let's check if this works out.
There is quite a bit of background noise on your end, Daniel.
Okay.
Maybe when you are moving your hand or something.
Okay, I'm very sorry for that. Basically, I have a very brand new microphone and tested it a whole morning. Is it still okay?
It's better now.
Okay. So this is what it suggested. We're very close on the upside here. This is due to the skew, but you see you collect a lot of money here. It's very nice. Basically, I would go out a bit furthermore, and basically you can see here you have a 1 to 2 risk if you look at the margin, and it's not the pure stuff. A lot of people would say, "Wow, that's very close on the deltas," but it's basically based on a lot of things. So the last thing I would be doing, and let's go back here. Let me show you how you can tweak this a little bit to be more safer. You would go into the basically expected move, which is like 60 points. And if we want to close roughly to 21 days, maybe 14 days, we would see 40 points. So to be safe, let's go back. And this is like very simple trading here. We see 40 points. I would even go to the round number 60 and here go down a bit further. So this is still a good risk on return. And how to adjust that, how to manage that. The first thing is to monitor how the basically how the trade evolves, how the levels change, how volatility is changing, but you're getting paid for basically a very nice volatility regime. The negative condition, this is something which can be tricky. And if you don't feel comfortable, you can always add to very cheap wings at 5 to 10 deltas. And then in the worst case, nothing bad can happen. But in the end, like all these trades, this is a Theta trade, but basically you try to use volatility to enhance this trade. And how did I find this trade? I just used some very simple, this is like absolute basic stuff, very simple volatility metrics. I double checked with the data I got from MentorQ. I used some common sense. I tried to stay out of the expected move, and I will monitor that. And what happens in the worst case? When will I take a look at this? I won't take a look if the short strike, basically, let's say if we move to 280, will I care about that? Yes, I will take a look, but I'm more interested when my break-even point is reached. Then I would adjust. The easiest thing is always to adjust the the side which is not breached, so to collect a bit more premium, and you can always roll out in time. This is basically a very simple mixture of volatility, theta, mechanics, but also using gamma levels, and especially always take a look at the delta exposure map in order to get a feeling how things are set up. I had some other stocks here where I can show you where it's even more balanced, but liquidity isn't that good. So we have earnings seasons coming up. So before I deep dive into something else, back to you, John, if there are questions on that. Otherwise, I would show other stuff.
I think we will, for now, move on to the next speaker, and then we will see if we can get back to it. And thank you very much, Daniel. Danke schön. And then the next one is Mark Anderson, or you often call yourself 0 Day Mark.
Yeah, can you guys hear me?
Yes, we can.
Okay, perfect. Yeah, so I'll go ahead and share my screen, but one thing I kind of wanted to speak about is just how to think about building a portfolio in general and some things to look out for. I think.
Just a minute, I will get it for you. Here we go. No, that was us in there we go.
Can you see me? Okay,
Yeah.
so the first thing I kind of want to bring up here is just like the use of filters. So a lot of people know that, you know, when the VIX goes up overnight, it's generally a better time to sell premium kind of first thing in the morning. This is just a straddle with no stop, 1 day to expiration, and then exits at the end of the day. So, you know, you don't hold overnight risk. So to start, this, you know, has a filter on it, but there's no real exit mechanics except just getting out at the end of the day. So we know that these results are going to show something pretty similar to real life and expect to hit our back test close, because when we look at the functions of our back test, we have basically the premium we collect, which would be kind of our average win size. Then we have whatever our risk management is. In this case, it's basically wings and or getting out of time, and then our sizing. So all of those things kind of affect our standard deviation. But when we're looking at using a filter, we need to always think that our results are going to fall between what our filtered entry is and then what our non-filtered entry would be. So this is no VIX up or down filter. Now, I'm not saying that this isn't a good trade to take, but we need to have a realistic assumption that we will never, ever, ever basically hit this expected return in Sharp, because we know it's going to fall somewhere in between the filtered entry and then this entry. So that's just kind of a way to view initial positions that you're putting in your portfolio. And then another example of how this would come into our portfolio would basically be, this is just EMA every 15 minutes at a 1x stop. And then this is MEIC basically every 15 minutes at a 1x stop. So a lot of people will fixate on the max drawdown and the MAR ratio, and they'll just say, this is the business. However, when we're looking at that, we need to understand that when you look at your max drawdown, you're looking at one period in time over a 5-year set. So that doesn't necessarily tell you the best story of what this trade is. Whereas what would tell the best story is kind of the standard deviation, because the standard deviation is what's happening daily. Obviously, you know, we want to see it as positive expected value and everything, but instead of just taking one point in time, we could take all the points in time on the scatter plot everywhere and then average them out. So I kind of exported these into a spreadsheet. You see here, you can just go enter SDev, and then to make it a percentage, you divide by 100. So we can see that the EMA is a 1.6% daily standard deviation. And then if we look at the MEIC, we see it's basically a 10 basis point or 0.1% daily standard deviation. So initially, when people would look at this, you may look at this back test and say, oh, like we obviously want to run EMA, but this is 1.6 times more volatile than MEIC. And for every 15-minute entry, this collects $3. And for every 15-minute entry, this collects $4 on MEIC. So that's just starting to kind of understand the factors of movement that you have in your portfolio. So trading MEIC at double the size would basically get you to a 0.2% daily standard deviation. So then you could start to kind of compare these more apples to apples. And also, you know, not that EMA is that filtered because you're taking a call or a put. MEIC is really never filtering basically anything out. So it's going to be more of a better reflection of what your standard deviation would be. So if I were to go look in the future, I would say that we could potentially be much more volatile in EMA, and I would feel more confident that we're kind of in here. So you're just understanding where the confines of your test will go. And then when you combine them, you want to be careful, because most people, when they combine the test, they may get in a situation where they're going to basically have 12 different things that all try to bring down the standard deviation of portfolio. But if you have a bunch of filtered trades and then you have a dozen trades that you've basically forced into the portfolio to lower the standard deviation, you're just kind of building up this risk underneath everything that could rear its head in the future to understand basically what may happen. So when we look at building a portfolio, we always want to understand the building blocks. And obviously we want to find good returns, but we want to kind of put these in different factors, which would be like, this has no filter and it has really simple stop management. We don't take anything out of it, and it always enters on a prerequisite schedule. We know we have high conviction in that standard deviation. If you have something that is a bot trade, you know that that can have really wide standard deviations, or it may take 3, 6, 9, 12 months. So it may be good to go through that spreadsheet and say, let's every 3-month period, what's a standard deviation, and see that changes. Obviously, stop losses will help with that, but those are different functions you want to see. And I just want to show people, like, why does everyone ask for Sharpe ratio? You ask for Sharpe ratio because it takes in the average daily return and the basically average standard deviation. So that gives you a much better set of what is happening in the portfolio rather than just what's the return, what's the max drawdown, because you want a complete picture of what is going on with your strategy. And the best way to view those lenses when you build a portfolio is, first, you want to decide which risk you would want to take, and then you want to decide how much risk you want to take. What risk you always want to take is basically always going to come down to the highest Sharpe ratio. And obviously you'd want to pay attention to how is it least filtered so you have the most conviction in it. Then when we come down to how much of the risk you want to take, this is when capital efficiency starts to come in play. This is when you may want to buy a 20-cent wing instead of a 10-cent wing in order to increase your absolute return, even though it may lower your Sharpe ratio or risk-adjusted return. So those are just kind of the ballast that I encourage people to start thinking of broadly from a simpler perspective of what it is. And a good way to do this too, which is something I kind of tell new people, is like, plug it into ChatGPT or get familiar with Excel and kind of just make some graphs, like daily dot plots of X and Y axis or standard deviation, draw a straight line of exactly like 10 basis points return a day, and then see how your squiggly line goes around that. And just by looking at those graphs, you can kind of get a thought check as a human if there's a pattern, or what do you think would look good to you over time from those metrics, rather than just looking at numbers. Because the more exposure we have to different ways to see things, the better we can identify potential patterns. I don't know if anyone has any questions, but I finished up 2 minutes early. I can pass it on.
There is a question in the live shop from, let's bring it in, from Christopher. What do you think of using a Sharpe ratio even if the underlying data is not normally distributed? Still valid, or is there a better approach that doesn't rely on a normal distribution?
I mean, like, just putting in a median daily return as like a basis to look back at it, I think could provide some context. But, when we look at a normal distribution, it's assuming the average, which is generally a pretty good assumption over a large period of time of what you expect to happen. So I still very much like the Sharpe ratio because it encompasses everything and gets the average. But looking at a median can be valuable. So you can kind of look at hot streaks and such. And then also, I think just those graphs to kind of feel out what it looks like. Because again, if you have a really big time up graph and then you're flat for 4 months, a lot of people may not want to trade like that. So I think it's just good to have some type of visual aid, but median is good too as a reference as well.
All right. You're doing only automated trading, Mark?
Yeah, basically, like, I do some longer trend following stuff that I'll enter in manually, just because if I'm only doing 2 or 3 trades a month, it's just the second person checking to make sure it's correct. But yeah, effectively everything I do is automated.
Well, what software are you using for that?
We just a mixture of like TradingView and Excel basically. And then, we're just using some simple Python script in the terminal to like populate everything to Discord. So we use Discord kind of like Slack. If we get a notification for any of our trades, it'll just pull from TradingView, basically text us on Discord. And then we have a Twilio hook that'll text us. So it's all automated when we're supposed to do things.
Christopher has one follow-up question. Thoughts on margin ratio? I'm using Ulcer index. These are 2 Greek terms for me, so you need to explain them if you're going to answer.
Yeah. So, forgive me for the exact formula of Ulcer ratio and Mark ratio, but I like that because essentially what that does is it tries to quantify how the drawdowns feel to you. So for example, in the Ulcer ratio or the Ulcer index, a drawdown that comes back faster, even if it may be slightly more magnitude, the Ulcer index would basically take that into account, saying that humans prefer like less period spent in drawdown in return for potentially a little more volatility. So Ulcer index is a very good way to quantify that. I recommend people look at it. Just be very careful on calculating on it from portfolios, because with portfolios, you're jamming 100 different things in, and then there's already like 4 or 5 calculations that make the Ulcer ratio. So I think it's less valuable maybe for a whole portfolio, but for individual trades, I think it's really good. And I also think that that's a good way to define it outside of Sharp. So looking at Sharp, Ulcer index, a median return, and then having a few graphs where a human can recognize a pattern is a good way to kind of think through what you're doing, because ultimately we just want feedback quicker in case we need to course correct.
Jack Morris is asking, how many entries do you take in a day?
Like 100, 200. We would consider, like if you entered a condor, since we manage each leg separately, we would consider that as 2 entries. But yeah.
All right. So I think we will move on to the, thank you very much, Mark Anderson. And you have also a YouTube channel that where you share a lot of your knowledge that I do recommend to people. What's the name of the YouTube channel? It changed name, I believe.
Yeah, we're now multi-strat, Mark. So we still do 0DT, but we broaden into other assets and like buy and hold and stuff, just because it's a more efficient way to spread out risk and capital.
Multi-strat Mark. All right, thank you very much, Mark, and we will move on to Ravish Ahoya, and welcome back, I have to say, because you were actually in the video interview we published yesterday, where I interviewed you for the 3rd time, and you need to unmute yourself, I think.
Hello, John.
So you have been interviewed a few times on Theta Profits, and always been very popular videos. Before we have talked quite a bit about weekly strategies and longer term low risk strategies, but I know you also do trade 0DTE, day trading. So I'm curious, what are your 0DTE plays?
So 0DT is something that I like to do. It's a small part of my portfolio, and I mostly automate it. I trade both SPX and QQQ, and today I am in QQQ strangles. So I like to sell 0DT strangles on QQQ because you get higher premium than SPX. And typically I never sell strangles with overnight risk, but I'm okay to sell strangles in 0DT because that way I can set a mechanical stop loss. So even if there is a big move, I can be out with a tight stop loss versus trying to, like, if I have longer term, it has undefined risk. But in a 0DT environment, I can limit that risk using a stop loss.
All right. What strategy specifically? Can we be more specific?
Yeah. So typically, I like to sell strangles based on the expected move, or it can also be based on a delta. It can be done with 20 to 25 delta.
Should I bring in your screen?
Yeah, sure. Just give me a second. Yeah, bring in my screen. So today I am in strangles on QQQ. Let me go over my trade. Yeah, so today I'm actually in a very tight strangle. My strikes are quite tight. I have multiple strikes. So one of them is at 592 on the put side, and I also have a 594 call. This is like almost like a straddle. So I like to do a strangle like this, which has when I opened it, I got over 300 credit for it. Right now it is at 215 credit, so it is already in profit. The good thing about high VIX environment is we can get a lot of credit, and these kind of trades can make a lot of profit. Over here, it says that it requires 11,000 margin, but actually the correct margin requirement is close to 9,000. So if I'm collecting 300 credit on a $9,000 margin, that's like more than 3%. And even if I can keep half of it, that is more than 1.5% return in a day. So it is also going to have wins and losses, but despite that, it can be very lucrative and profitable. And this is something that I have automated it, and I do almost daily. And I also have a wider strangle, which is at 589 and 595 strike. Yeah, that one is also doing well so far. I typically open them between 10 to 11 a.m., depending on how the market conditions are and if it hits certain parameters. So today I opened this at 10 a.m., got about $2 credit. Right now it is at 115. So this one is also in a nice profit. Lately, what I've seen is like a lot of my trades are profitable by like 2 p.m. or 3 p.m. And in the last 2 hours, some bad news comes out and everything goes out of the window. So right now I'm following a methodology that, okay, if I have hit certain profit on my account by like 2 p.m. or 3 p.m., I'm going to close most of my positions.
There's a question from Jack here. What software do you use?
I mostly build custom bots. For some of the simpler strategies which are mechanical, I also use Option Omega. But most of the strategies I create like custom advanced strategies, and for them we write our own algorithm and create our own custom bots.
I know you explained earlier that you have a philosophy of putting 80% of your capital into long-term strategies and 20% into short-term strategies, if I remember correctly. Could you explain why you do this and expand on the philosophy behind?
So with options trading, I have this belief that, okay, regardless, a lot of people try to promote quote unquote safe strategies, but in option, there is nothing safe. There can be one big black swan event which can wipe you out. So for that reason, I am only willing to invest the amount which I'm okay to lose if an event like that were to happen, right? Even if I'm in a strategy like Iron Condor, which has defined risk, I cannot invest a large amounts into a strategy like this because in a bad event, it can go to zero despite having a defined risk. So I'm only willing to risk what I'm willing to lose. And also psychologically, like I'm trading with multiple seven figures. I cannot invest that kind of amount into options. In some of the strategies I trade, there is not even enough liquidity. And so in that scenario, I can only allocate the capital which I am okay to risk, and also I am able to effectively manage.
We have a question here from Asfak, I guess is the first name. He's asking about, you mentioned custom bots. What platform are you using?
We do integration with Thinkorswim, Charles Schwab, and E-Trade, which are my two main brokers, and we built like custom bots and using Python.
All right. Ravish, first time I interviewed you, we talked about double calendars. And you had a great success with double calendars. And this is actually the most popular video ever on Theta Profits. I think 90,000 people have seen this interview.
Mm-hmm.
But what about the current market and double calendar? How is that working for you?
Okay. So in the current market, double calendars are very difficult because we are in a high VIX environment. So the risk with double calendar is if you are entering a double calendar when VIX is high, and if it maintains that level, it can still be very profitable. The risk is that if VIX comes down, like on a day like this today, then it can hurt. So for that reason, these days, I am not trading a lot of double calendars. What I'm trading is Iron Condor. Like this is one of my Iron Condor trade, which I opened last week. It is already at 37% profit in a couple of days. And I'm also trading double diagonal. This is one of my double diagonal trade. Double diagonal is a calendarized version of Iron Condor. So in this, for example, in a calendar, if I were to do like 64 foot 50 put calendar, in this case, I will invert the strikes, and my longer dated strikes are going to be slightly more out of the money. So it looks like an Iron Condor, but it is a calendarized version of an Iron Condor where we have separate dates. And this kind of setup is more forgiving than Iron Condor. And also, it will not have a significant impact of VIX crash. For example, this is the payoff chart. If VIX were to come down, it is going to be flat. So it is not really going to lose. Today, you see that VIX has come down a lot. VIX is down more than 10%, but this is still printing, right? So if you opened it a week ago, I could have opened it for 670 credit, and now it is at $7 debit. So in an Iron Condor, if you are getting $6 credit, your maximum credit is only going to be $6. That's your max profit. But here you can open a trade for credit and then close that trade for credit. And and it also works in a high VIX environment.
All right, I'm gonna bring in Daniel and Fabio. I think it seems like Mark is not at his desk at the moment because we have one panelist that hasn't showed up. So probably we'll try to squeeze him in later. But is there anyone of you who would like to comment on the trading style of the others and what you have heard?
I don't know, Fabio, you want to start or should I start?
You can start, Dan. No problem.
Okay, so basically, yeah, Ravish, first of all, amazing work. I do a lot of calendar spreads too, but I chose to show simpler things today, and you have given me some things to think about. I trade less mechanical than you, but I really like the super relaxed and sophisticated approach, and basically what I like now about what you described in your panel, and this is the most important thing for a trader. You have to evolve, and in the end, you have to have a toolkit for all kinds of market situations. So a lot of things another thing which I trade today, but I agreed to show short volatility today, is ratio spreads if you think the market will stay in some range. So in the end, what I like about your trading style is that you adapt to everything. You have a very good logical explanation and people can follow it. And yes, it should be the most popular video because it's really on to the point. Thanks for that.
Thank you, Daniel.
Yeah, and if I can add, I agree with you, Dan, because I think the biggest challenge for traders is that they fail to adapt to changing market condition, right? So whenever we are in a negative or positive gamma, you should really treat it as a different environment. So appreciate your take there on how you are switching strategies based on market condition, which is great.
Anything you would like to add, Mark?
Yeah, I'm not really big on the market conditions. I think that it gets in danger of trying to predict things, whereas if we have more mechanical backstops, it can be helpful. So for example, with double calendars, what you're doing in a double calendar is you're trading the term structure. So that's basically everything's the same, the deltas are the same, the gammas are the same, and you're kind of just isolating this implied volatility or term premium. So if we look at something like a short-long ratio, it could very much be that in higher volatility, like a threshold of the price between the short option and the long option could not meet a criteria. So you would trade it less. But by having that, I think it's more of an objective way to do that and determine good opportunities to do things. Another flip example is generally volatility is always overstated in the index. However, you can look up scientific papers, and over the last 20 years, it wasn't true in 2008, and it wasn't true in 2020. So it is a good rule of thumb to sell, volatility want to tie and maybe stay out of double calendars in that scenario. But by having some type of metric as a backstop for what you could do, I think it's important in terms of like being discretionary. For example, I think the deadline for Trump's ultimatum or whatever to take over Kharg Island and Iran or whatever was originally like 7:45 p.m. tonight or something. So like if we didn't get direction from the White House like we did earlier today, I definitely would have not put on anything like overnight. So I will say that discretion in that sense can make sense, but I would just urge people to try to stay away from blanket rules because they could eventually bite you if you don't have some type of number to back that rule to.
All right. I think we are going to move on. We have one panelist that is not here, so I will think we can try to squeeze him in later. But on the other hand, we might also plan for a little bit longer break this hour. But we have one. So thank you to Daniel, Mark, and Ravish. And we have one product demo now, which is MentorQ. And with you, Fabio. And also, as I mentioned before, MentorQ is also an affiliate partner of Theta Profits, which full transparency means that if you order through those discount links, we will get a commission. I like to make that open. But MentorQ, you call yourself a market intelligence platform. What problems are you trying to solve for options traders, Fabio?
Yeah, so also if you can bring in my screen, I want to share some data. So basically, my background is in finance. I studied in finance in 2007. I worked at Bloomberg most of my career, and I really worked very closely with large quantitative funds that were using alternative data for building strategies, building hedges. So what we've done at MentorQ is we're trying to take this complex information that is available, but is really sometimes hard to access from retail traders. And we specifically focus on options. And the reason is very simple. We saw a trend changing in 2020 when we saw the whole like GameStop saga happening, where option volume has really is now really driving most of the flow that we see there. So what you see in this chart is the growth of option volume from the last 20 years. And when option volume was not as relevant before 2020, is now really dictating the flow. So what we've done at MentorQ is we actually built complex quant models that is trying to leverage the option data to potentially predict where the price will go. We stale, we react, and then we do it on multiple assets. So for example, here is an example of the gamma levels that we provide on the NQ futures from this morning. So before the news, we hit our one-day minimum for the day. And then, of course, with the news this morning, the price skyrocketed all the way up and stalled at our core resistance level. So we leverage this option data to predict where are the market reaction zones. And we do that on stocks, ETFs, indices, futures, and crypto. So we cover about 1,400 plus assets, and we do really a lot of really advanced models. So this is really an output. We also integrate with about 10 different trading applications. So if you use TradingView, TransSpider, NinjaTrader, and others, you can actually bring in that data directly into your platform. Also, we do provide access to our dashboard. Within our dashboard, you can access all our data. So what you see here is, for example, our gamma levels, our net gamma exposure chart, and a lot of our models. We also build proprietary models like our Q-score here. So the Q-score is trying to give you an idea of whether an asset is bullish or bearish, and that can give you like a greater conviction with your signals, with your strategy on where the market could go. And for example, here, what we see here on SPX, for example, when we see a change in the score, typically like here and here, we see a really high trend change that you can use to potentially predict where the price could go. On top of that, we've built really our AI tools. So the biggest challenge with option data is that it's really hard to understand it sometimes. A lot of traders do not really trade option, but they could use options to potentially basically trade the asset that they like, whether it's futures, crypto, or stocks, right? So what we've done is we've created our AI, which I think Dan showed it at the beginning. Our AI is Queen, our quantitative intelligence. And the goal of the AI is really to embrace kind of three things. First, bring in all our knowledge with 20 plus years of experience, documentation, video. We have over 1,000 plus video lessons within our academy, research paper with data. So this is an AI that has access to our data. So one of the biggest challenge, of course, is that the AIs are great, but if they don't have access to data, there's not really much they can do there. So our AI Queen has access to all our models and data. And then we obviously train the AI to potentially bring in an intelligence layer. So you can do a lot of things with our AI. You can screen, you can do research, you can do historical analysis, and so on. First, I want to step into why AI for trading can be really good and why AI for trading can be really bad. So I think there's a lot of hype around AI, but it's important to understand what AI can do well and what AI can maybe do less well. So on the left-hand side, AI can really do a lot of things managing unstructured documents, whether it's news article, research paper, all of those like textual documents. So AI does an amazing job there. What AI doesn't really do a great job is managing structured data. So numerical data, big spreadsheet, and basically this is the data that traders need to make decision, right? So you might ask ChatGPT, give me like the IV rank of Tesla, and it will give you a really good results, but most likely the data might not be correct because they do not have access to that data in many cases. So this is why we built Queen, and then we're going to show you a demonstration. First of all, the traditional AI do not have access to our data. So if you like the data that we provide, our gamma levels, our models, then of course Queen can give you access to that. We built our quant engine to also have low hallucination by design. So the data that you see coming out of the AI most likely is going to be validated on our backend. We built really the data structure. And of course, we also integrated and trained the model with our 20 plus years experience. We have quant team, investment bankers, and so on within our group. So you can access that also through Queen. So John, if you want, I can give you guys a demo of what Queen does and what we can do there.
Yes, let's spend a couple of minutes on that before we go to the break.
Sure. So first of all, what can you do with Queen? So obviously here you can start a chat, but the first step is really come to our Inspire Me section and really start looking at the things that you can do. So you can do things like financial research, you can do things like screening, but let's start with something really interesting. So for example, I want to compare the IV rank for Tesla, Apple, Nvidia, and Meta over the past 30 days, and I want to see which one is the cheapest or richest asset. So what this does is basically leveraging our database, historical data as well. You can go back up to 1 year directly into Queen, and then basically it's going to actually give you some analysis. So right now we're seeing that Tesla is kind of like the cheapest in terms of IV rank, and right now Meta became the most expensive. I think last week was Apple and Nvidia, and basically this is going to give you an overview of how to read the data. You can also come back here and we can do other things. So like give me a report on a stock, like for example, Meta in this case, and we're going to look at all our models. This is going to give you an analysis, a really in-depth analysis, similar to what an analyst would do by looking at a lot of different things like volatility, gamma, our proprietary model, and basically now it's going to also allow you to access the data directly into the chat. So here you get access to our charts. And then, of course, you get all the full report here, right? Really important. Any news item as well, we also have a lot of that. And then that can plan really your analysis for the stock. So really great analysis. This would take an analyst, hours or days potentially to put that together. We've trained the AI to give it to you on all the assets that we cover. So this is really great. And obviously looking at news as well, all of that stuff. But the most important part is that you can actually screen for information. So you can actually create custom advanced screener simply by describing what you're looking for. So for example, let me give you an example here. So let's say that we believe that the market can rebound. We come here with the thesis, we have a view. We can start really putting really advanced prompts. So here what I'm looking for is stocks with a swing bias, which is bullish, a momentum score between 2 and 4, a price that is close to our put support within 10%, and an option score greater than 3 with a call open interest in the top 30% of the universe, right? So here we get really a nice list of assets, and we kind of start screening from there. But with that, you can also come to our explore section, and you can look at, for example, iron condor plays. You can look at, if you're an option seller, you can start looking at a lot of different metrics there, and you can always customize basically the data based on your idea.
All right, I think it is time to wrap up this session. Thank you very much, Fabio. And there you find the link to the in the description, of course, for all the others, and also here on the screen now with the QR code. So thank you for demonstrating your product. And we are going to have a break now until 12 noon. I just want to say that, you know, if you are curious about learning more about the strategies for some of the traders, you know, you find the link to all the interviews we have done in the description, and in those articles you will also find how to contact the different traders. And I remind again that if you want to support this channel, you can buy super chats or super stickers if you appreciate the work we have done to put together this full day live stream. That's much appreciated. We are going to have a short break, so we will be back at 12 noon exactly. Time to grab a coffee, I guess, before we move on with an exciting panel after the short break. Hello, and welcome back with a new fantastic panel. And let's just get straight to it. You have 15 seconds to introduce yourself. Let's start with you, Doug.
Hey, everybody. Good afternoon now. I'm Doc Severson of Ready, Set, Trade. I'm based in Greenville, South Carolina.
And let's move to London. Soheb.
Afternoon, everyone. So Zoeb Nur Mohammed, owner of the One Glance Trader YouTube channel. Happy to be here. Been trading for about 4 or 5 years now, predominantly in options trading, and looking to add a lot of value for you guys today, walking through some of my trades which aren't going so well at the moment.
Great. And we have Lee.
Hi, everyone. Good afternoon. This is Lee Lowell from the smartoptionseller.com. And I'm in the USA, in the Midwest, and I'm excited to be here. Thank you again, John, for setting this up.
And Karsten Jeske.
Everybody, I'm Karsten. I work at earlyretirementnow.com. I've been retired since 2018, and I've been trading options since 2011. And I use my option trading as a kind of a hobby and to supplement my retirement cash flow.
All right, let's take a quick look at the market, because after a bit flat in the beginning, it's starting to change a little bit. What's your take on this, Doc?
Well, I think like anything else right now, we're in a short-term downtrend. So any good news is going to get faded if that news turns out not to be as magic as it was once thought to be.
Soheb?
Yeah.
Yeah, pretty much the same. Like I said, I think the broader market has been kind of driven by news headlines over the past couple of weeks or so with the geopolitical environment out there. And again, it has brought some volatility to my portfolio, I'm sure, for the guests on and people watching as well. So really interesting time to trade.
Lee, you do more long-term trades, I believe, but how do you look at the market at the moment?
I mean, the market is basically whipsawing to every piece of news that comes out of Washington, White House, Donald Trump's mouth. And you can see early this morning how everything jumped dramatically just because of what he said. It just shows you that most of these stocks are down artificially. There's nothing wrong with these companies. They're just being pushed lower because of what's happening in the geopolitical realm right now. And when there's good news that comes out, stocks go right back up. So I'm here buying on the dips a little bit at a time because I know eventually the market's going to go back up. But it is hard. It is scary. It is volatile. So if you're trading very, very short term, like maybe a minute at a time, it's pretty hard. But longer term, if you know that the market's going to keep going up, then you could have a more of a level head and kind of buy these dips. But yeah, it's tough at this very moment in time, John.
And what about you, Karsten?
I mean, I'm amazed how well the market held up, right? Because we have all of this geopolitical uncertainty, and we haven't even seen a correction in the S&P 500, right? I mean, correction would be at about 6,300. Bear market would be at 5,600. And we're still hanging in at 6,500. So it's and again, I'm long term. I'm very, very bullish. I think U.S. economy is the world leader and will pull everybody out again. But in between, I think there could be some vol, and I'm not comfortable doing any kind of crazy vol selling just because who knows what can happen especially over a weekend, right? So this definitely, you saw that on Friday, right? So it was a little bit oversold, maybe just because everybody thought, well, what can go wrong? What bad news is going to happen over the weekend? And if there's less than bad news, is actually the market is going to rally again on Monday. But I think overall, I think in short to medium term, I would still be prepared to be a little bit on the downside here. So.
Yeah, I'm also surprised how this market is actually holding up and how much effect individual tweets from an unpredictable president can have on the market. But that's my take. We are let's we will move into the session, and we will start with you, Doc. Why don't you describe yourself a little bit as a trader?
I'm that guy that quit his job. I was making a six-figure income at a telecommunications firm and just absolutely miserable, living, just going from conference call to conference call. And then I learned trading. I learned specifically options trading. And this is about 20 years ago now that I put in my notice and walked out of the door, and I have not looked back since that day. So it's all about putting and stacking the probabilities in your favor. And part of what I'm going to be talking about here in a minute is the analysis technique that I've learned to use over these past 20 years, which simplifies my analysis so that I can see what's going on in the market and not necessarily predict the future, but anticipate what's going to happen next.
And we will get to that, but before, just give us a very brief summary of what are your main strategies.
Main strategies is selling options, but really what's more important than that, instead of just continuing to bang a square peg in a round hole, which is what I see a lot of people doing, like they learn one strategy and no matter what happens, they're just going to keep playing that one strategy, whether or not it works or not. But understanding what the market's actually giving us in terms of the edge that's available. It's always trying to tell us what the edge available is. And understanding how to play along with that edge so you put yourself in the best position to win.
You asked to speak about something you call multiple time frame fractal analysis. And that, to be honest, I'm a simple former journalist, so that sounds Greek to me. Please explain.
Okay, would you like me to get started here and share my screen?
I will add it in here now, just a minute, and there we go.
Okay, so I've got till, what'd you say, like 12:15?
12:15, but
okay.
There might be some questions, then I will jump in here. And,
okay.
And to the audience too, please throw in some questions in the live chat, and I will try to bring them on.
Thank you, John. So what I've learned over the years is instead of adding more and more and more technical indicators to my charts, what I've done is I've actually stripped them away. The longer that I do this, the fewer the technical indicators that I've got on my chart. So I've got 4 powerful rules. So I'm going to share with you over the next few minutes everything I've learned in 20 years and try to distill that into 4 basic rules that I live by. Okay, so rule number 1 is that larger time frames dominate the trend. So if you think about it, a lot of people get confused on time frames. They're playing the 1-minute chart or the 10-minute chart or the 4-hour chart, and I see people just bouncing all over the place trying to find out something that works for them. So context is incredibly important here. So somebody following a small time frame chart is just going to get whipped back and forth if they don't understand the tide that's actually pushing that chart. The larger time frame charts are much more powerful. And you can illustrate this really with, this is one of my favorite illustrations. If I'm going to be walking my dog from point A to point B, and I'm 10 times the mass of the dog. So this is me going from point A to point B, and I'm the red line. I'm just going to keep walking on the sidewalk. During that time, the dog is going to be sniffing somewhere over here. It's going to come down and look at this thing and just going to be bouncing all over the place, investigating what they smell. But guess what? We both arrive at the same point at the same time. So this is what happens with smaller time frame charts. If you think about the analogy here versus the larger time frame charts, the smaller time frame charts are going to be showing the detail. The larger time frame charts are much more powerful, as the dog walking analogy shows. So this is where we get into splitting up anchor charts versus signal charts. So I will use an anchor chart to tell me which way the trend is going, and a signal chart to understand where to enter and exit. So here's my rule number 1. Larger time frames dominate the trend. Understand what larger time frames you're going to use to add to your signal chart and create that anchor chart. understand how to read the trend and swing direction of your anchor chart, trade in the direction of the anchor chart swing. If there's one thing that you want to learn from today's session, learn how to trade in the direction of that anchor chart swing. Enter the anchor swing on the signal chart. We use the signal chart for entries and exits. Again, rule number 1, larger time frames dominate the overall trend. We tend to get freaked out on every red candle and get knocked out on the pullbacks. So that leads to the converse, rule number 2. Reversals start from the inside out and they propagate higher. Reversals are the holy grail of trading. What we're looking for is reversals, because this is where you get your best reward to risk, is through the first identification of the reversal, whether it's to the downside for this way or to the upside on the opposite direction. So this is what we're always looking for, okay? Now, trying to identify these on your anchor chart is almost impossible because they're so slow and they move so in such a large manner, you're not able to understand what's happening until maybe weeks or months have gone by. So this is where we need to identify through rule number 2, is that change happens from the inside out. This is how it affects your biology with a virus. One virus can affect your entire body through multiplication. It starts from one cell and propagates to the others. Change happens at small levels, and it's our early warning for possible failure or reversal. So we can look at things like this through just simple price action, where we have higher highs and higher lows, and all of a sudden we start to pull in lower highs and lower lows. Or on this trend, we have a downtrend with lower highs and lower lows, and all of a sudden that changes to a higher high, higher low. We have our change in polarity. This is what we're going to identify on our signal chart. Okay. Oops, rule number 2. So change also propagates higher. If it starts as a daily reversal, eventually we could see that propagate to a weekly reversal. So rule number 2, reversals come from the inside out and they propagate higher. This is where we're going to use those signal charts. All right, we're halfway through this now. Rule number 3, this is a very simple rule. Descending patterns break to the upside and ascending patterns break to the downside. So what goes up must come down. So I know this seems to be almost too elementary, but we just sometimes forget about the simple things that we have in trading. Something going up, look for the trend line break. And this is not an entry signal, but it's a confluence. You can build confluence through these. So setting up these signal chart trend lines and understanding when they break give me an early heads up when you're seeing that rule number 2, change in polarity. So applying rule number 3, ascending patterns break to the downside, descending patterns break to the upside. This happens over and over again. And now we get to rule number 4. Range expansion leads to range contraction. A lot of you have heard about overbought and oversold. This is the first thing that's stuffed down our throats as traders, where you have to identify overbought and oversold through oscillators. I believe that's outdated and obsolete. Markets move differently today, where we get to be these moves that just go on and on. But what I want you to think about is climbing a mountain. You're not going to just summit a mountain in day number 1, are you? You're going to run as far as you can, just like Everest here, to base camp 1. You're going to consolidate, you're going to restore yourself, and then move on to the next swing. Range expansion goes to range contraction. So markets copy nature. Think about Mount Everest in terms of how markets move. So expansion and contraction on charts. You can also see this through my favorite study, which is the choppiness index. And it's going to show areas that are sideways and are about to move. This one moves to the downside. Then we set up again with a high level of energy, breaks to the upside, range expansion, range contraction. Okay, so how do we apply rule number 4? This gives us an early warning when a a consolidating price chart is about to break out, where it's got a lot of energy, a lot of potential to move, and also a chart which is also in exhaustion, range expansion, range contraction. Let me put this all together and apply this towards today's S&P 500. Rule number one, larger time frames dominate the trend. So what we're seeing is on the monthly chart on the left-hand side, we're seeing an extremely strong trend, which has been in place since the bottom of the 2022 bear. And in fact, even before that. So here we are, we're getting a little bit of a pullback. It's not surprising that at some point we would expect to see the trend mean revert once again. That's rule number one. Now we get to rule number two, and I'll finish here in just a second, John. Reversals start from the inside out and they propagate higher. Our first warning that something was going on for the reversal was back here in February, where we started putting in lower highs and lower lows. That was our first early warning that something was awry. Reversals start from the inside out and they propagate higher. Rule number three, this ascending patterns will break to the downside, just like we're going to see this descending pattern break to the upside on a relief rally whenever that happens. Okay, that's rule number three. And then finally, rule number four, this is not surprising to see us bounce here today, because this trade or this time frame got into exhaustion, and the only way it can clear that is to actually bounce back up. What I expect to see is at some point we're going to get a bounce back up, no further than 6,800, and then we'll probably have leg number two come along. If you have any questions about, I realize this is all kind of rushed, but if you have any questions about this, I do have a book on Amazon, or you can visit me at my site at readyset.trade. Thanks for listening, everybody, and I'll take any questions if you have them.
Thank you very much, and we will need to save the questions and move on a little bit so we keep to our schedule. But thank you very much, Doc, and I will welcome Karsten to the stage. And you are having a blog called earlyretirementnow.com, and you are a strong voice in the FIRE movement. And I was checking your blog, and I was seeing all those amazing places you have brought your family this last year, and I thought, wow, that guy is having a fantastic life.
Yeah, and I can still do the option trading while I'm traveling, usually somewhere around 10 to 12 weeks a year. So
with your family?
Yeah, with my family. So we're really constrained by my daughter's school schedule, obviously. But yeah, I mean, whenever she has time off from school, then we try to be on the road. So enjoy that. And I should say that I do trade every day. So I do the 1 DTE and 0 DTE. I can structure it in such a way that I trade only at the open and at the close. And in between, I can do whatever. I can go hiking if I'm hiking, skiing. I can do some sightseeing if we're on a trip. If it's a really hairy day and I just can't trade that day at all, I can outsource my trading to a friend of mine. So he has access to my account. I mean, so he has access to a master account, and my account is under that master account. So he has access and can basically trade like a financial advisor can trade a client account. So we could then basically cover each other's trades. So it has never happened that neither of us was available for a full trading day. So that's how we structure that in practice.
And your philosophy, if I understand it correctly, is that you have built a portfolio of investments over time that you are now living off as retired, but you are using options trading daily as a way to enhance your the returns from your retirement portfolio, so to speak.
Correct, yes. And so the cash flow from the options trading is almost enough for us to live off. Right, so especially considering we have some other income from that exact portfolio. It has to be in a taxable account because you need a portfolio margin at Interactive Brokers. So I can do the option trading over my entire portfolio with all the retirement accounts and 401k. So all the US viewers will know what I'm talking about. But yeah, so within my taxable account, I have a lot of other investments, equity index funds. I have some bonds. I have some preferred shares. And obviously, everything pays some dividends and interest. So with the option trading plus the other income just from my taxable account, I can basically already live off my portfolio and never have to liquidate any assets. So which is, in retirement, by the way, this is a huge emotional, psychological burden, right? So you have to liquidate assets in retirement. Lots of people have trouble with that, right? So you build your portfolio over time, and obviously the math tells you that you can slightly deplete your equity portfolio over time, but it's definitely a hurdle to actually do that in practice. And the nice thing is that the option trading generated so much extra income that I never had to do that. But yes, I realized. And by the way, I mean, I could have had a fantastic retirement even without the options trading. So it's not that this was the linchpin to my retirement, but it definitely makes the retirement much more relaxed. So that's for sure.
And you sell puts and calls every day.
Right.
At the open and at the close. What did you sell at the open today? And why?
So I sold at the open today. I sold puts between 61.50 and 62.75. So that had premium somewhere around 10 to 15 cents. So I think the 62.75, that was 15 cents premium, and the lower strikes at 10 cents premium. And then I sold also at the open. Let me check the calls. Today we're in the 68.50 and above.
And these are zero DTE trades.
So this is the zero DTE trades at 10 cents.
They are far out of the
Very
money.
far.
I mean, this chart starts at the 64 or 50,
yes.
And you are selling at 62 something. Are you able to get any meaningful credit with?
Yeah, and the whole point is that, so what is my aim with this strategy, right? So for example, if I had a $20,000 portfolio and I want to make this worthwhile, I wouldn't be selling premium at 10 cents, right? But right now, so I'm managing my own money and I'm managing a few client accounts. So I have about $23 million that I manage. And today, if I look at the total premium that expires today, so this is from Friday. These are the 1 DTAs from Friday that I sold at the close. I haven't sold anything for tomorrow yet. But on Friday, I sold the Monday close, and again, so they were actually below 6,000 points. And this is again, I mean, you never know what happens over the weekend, especially with our current situation in Washington. So I'm very cautious, but nevertheless, so I'm making about $7,000 worth of income for myself and my clients. For this Monday expiration, and so $7,000 over $23 million is only 0.03%, right? 3 basis points per trading day doesn't sound like much, but if you scale this up to 250 trading days and you average this very small, stable, high conviction, high probability of win rate premium, where maybe very, very occasionally you give up a little bit, and you don't even give up anything because anything goes in the money. I would usually liquidate it just with a stop or stop limit order. So it's very, very small premium. All I need to make is about 4.5% to 5% extra return. And everybody is amazingly happy, right? So with 4% extra return, you have an entire retirement portfolio. Right, you have a 4% withdrawal rate, and you could potentially double your withdrawal rate with your option trading. That would be a huge plus for your portfolio. Now, for me personally, it doesn't apply because I can't scale my option trading to my entire portfolio. It's only about maybe a third of my portfolio, 30 to 40% of my total portfolio is in the taxable account at Interactive Brokers. The rest is in retirement accounts. And I have some real estate investment and stuff like that. So I cannot leverage those. But yeah, so I just want to make a little bit extra on top of the asset return that I have in my portfolio, which is somewhere around a 70-30 portfolio.
So 4 to 5% extra per year is what you're trying on top of your
year, right? Yeah. And I mean, if you do the math, right, how much of an impact would that have over, say, 20 years of accumulation? And then once you're in retirement and you milk your portfolio for another, I think even a 1 percentage point increase in your withdrawal rate, right? You go from 4% to 5%. That's a 25% increase in your budget. That's already very impactful to a lot of retirees. And by the way, so I'm retired. The friends that I manage this portfolio for, about half of them are retired and half of them are still working, but very late in their career where they want to maximize their portfolio for the last few years of their retirement. And then probably they'll probably keep me as their advisor.
And you retired when you were 42, right?
I was 44.
Oh, 44. Okay.
I'm 52 now. I was 44
right.
when I retired.
There's a question. Lewis has a question. Would love to know his 1 DTT 2 stops and overnight management.
Right. So there is no overnight management in the following sense that the market is so rusty overnight that I would probably not do any stop management. So my stop management is that until the year 2022, right? So from 2011 till 2022, for 11 years, I would not do any stop. I would have the scaling and the risk management such that I could theoretically suffer occasional losses, right? And even, so for example, even in 2020, right, where you had a lot of overnight volatility, I never did any stops. I didn't even do any stops during regular trading hours. So one way to do the risk management is just don't scale it so high that you would regret going in the money. And now I did occasionally do some trades where I liquidated the position at the open at a slight loss. But yeah, good question. So I have a stop loss during the day, and especially I would now do stop limits. But I'm prepared to go in the money and suffer a small loss, and just have to make sure that your leverage is not crazy, so that that's not going to wipe out too much of your. It goes back to the point that Tammy made earlier, right? So you want to make sure that on the downside, it takes much longer to climb out of a big loss. So yeah.
And this is a very conservative way of selling both puts and call. And to move on, I think we will also bring in Lee here, because he is also a very conservative credit seller. Isn't that so, Lee?
That's true, and I really love what Carsten's doing here. I mean, he's speaking my language as far as selling deep out of the money puts, which I do almost exclusively. If you're using the S&P index, the SPX, which is cash settled, you never have to worry about assignment. You don't have to worry about getting shares put to you. It's all cash settled. So if you do get underwater, the money will just get debited from your account. You know, if you let it go that far. Now, on the SPX, since there are so many people that are always fearful of drops in the market, the downside puts are always going to have that higher volatility. So you can always get more money when you sell downside puts versus selling upside calls. That's just the nature of the market, how the stock market is based volatility wise and the skew and all that. So if you're looking to create income, selling downside deeper out of the money put options is a great long-term strategy. Now, I know that over the long run, the market will go up over time. So if you can kind of base your methods on selling more deeper out of the money put options on the S&P 500 or whatever, if you're looking at stocks, you can do that too. And you can collect these smaller amounts of premium. They do add up over time, John. As Carsten said, you can get a couple extra percentage points over the course of the year, which may not seem like a lot, but it does add up over time. So a lot of people that come to me, I mentor people and I coach people as well. You get these people that just want to get in front of their trading screens and trade on 1 minute charts. And I know Doc was talking about that. They love the action. They see the action. They see people that are making money, whether it's true or not. So they want to get involved in that rigorous day trading and just make all these trades and make all this money, which is very hard to do on 1 minute charts, 5 minute charts. the market is so random in those short periods of time. But as Doc said, if you're going for those longer terms, the trend is typically in one direction. But those shorter terms, shorter time frames are so erratic that it knocks people out. It's very hard to do. There's a high burnout rate. So trading for me, as I've gotten older, is more long-term based. I sell a lot of out of the money puts to collect that premium, high probability trades. So yes, that's exactly what I do. And Karsten, I believe is doing it properly and whatever works for him, but he's definitely doing it the way that I like to do it as well.
I'm curious, Lee. So how far out do you sell, and what are your, typical delta, etc.? How can you be a bit more specific about what you do?
Well, what we do for our newsletter and our newsletter readers is, we're focused on the education. So a lot of people that come to me or join our newsletters have never really sold put options before. So our main goal is to teach them how to sell put options in a very conservative manner and a very safe manner. And that means by having a lot of cushion between the current stock price and the strike price that we use. Typically, we'll go about 20% below the current stock price for the put option strike that we sell, which gives you a lot of downside. And our time frame is, roughly about 60 days out in time, anywhere from 30 to 90 days, depending on the stock, depending on what we can get by selling that put option. But most of our trades don't last more than 60 days. And so we're looking for that cushion of about 20%. And that's usually a delta of maybe 5%, John, really, really small deltas. And you can pretty much collect 25 to 30 cents per contract in that range. Smaller amounts, some people will think that's smaller, but as I said, high probability trades, about 95% of winning, keeping all that money. And it just adds up. And if you're using multiple contracts on multiple stocks, it can really build your portfolio there. So as I said, the education is first and foremost. We want to be conservative. We don't want to scare people out with their first foray into selling put options. So that's why we use these very conservative strikes, about 60 days out, 20% below the current stock price, collect about 25, 30 cents per contract, depending on the stock that we're using.
And I guess there are a lot of money managers who charge a lot of money if they can add 2 to 3% on the portfolio for their customers.
Yeah, absolutely. I know with our newsletters, it's a very simple strategy. People join, a couple months later, they realize how simple it is. They say, thank you, Lee. I'll see you later. I'm going to do this on my own for a while, which is fine. I feel like I've done my job and taught people how to sell put options. And then sometimes they come back to us and sometimes they don't, sometimes they don't, but they do email me from time to time, thanking me for bringing to their attention another way of trading, conservative way of trading.
Let's bring Karsten back in. I guess this is very much the same philosophy as you have, Karsten.
Right. And actually, I do a few longer term trades too. So they could be as short as 30 days or as long as 180 days. And exactly the same philosophy, sell something that's really far out of the money and then stagger the contracts, right? So they're not going to all go sour all at the same time if we have, say, something like a tariff tantrum or something out of left field coming like the current situation. So, I mean, you will always have enough contracts that are so close to expiration, so far out of the money that even you have a little bit of a bull spike, it's not going to take you out. But so I supplement my income a little bit with that. But my bread and butter business is still the very short term. And my philosophy is that you basically are like a casino, right? Or an insurance company. You want to spread your bets over as many small bets that are mostly independent and uncorrelated. And so even some crazy looking return distributions that have very crazy skewness and kurtosis, statisticians talking here, they will average out if you average over enough independent trials and look something a lot more like a normal distribution, but with a very nice average return. So, but yeah, I think generally we have the same philosophy there. Yeah.
It's great. I'll say, John, though, that you can sell longer dated put options. I mean, some people can go 1 year out in time If you're looking at the S&P 500, for example, or the SPY, which is the ETF on the S&P 500, if you go a year out in time, I mean, you can get some strike prices super, super, super low and still get some decent premium out of it. And that way, since you've taken such a long-term trade, that as the market, some people will say, well, why can't I just do that? I'll sell put options every month versus one long one. I'll sell 12 different put options versus one 12-month option. And I'll say, well, sometimes as the market goes up, you won't be able to sell those really good juicy premiums anymore as the market goes up. So you're getting a better bang for your buck sometimes if you go 1 year out in time, because if the market does go up, then each month you're going to have to ratchet up your strike prices. You won't get as good of a cushion as you did with that 112-month. But if we have down moves like, recently or last April when the tariffs first came out, then you can possibly do those shorter dated ones. It's all random, but over the long run, the market will continue to go up. So for me personally, I sell all different kinds of put options for all different kinds of months. But for the newsletter in general that we run, we're typically, about 60 days out for most of our trades.
We get the question if you can show one example, Lee, very short before we move on to Soheb.
A short example. Well, let's see. Do you have my screen there, John? I think.
We do.
Okay. Let me. If I pull up the options here, does that show up as well, John?
Yes.
Okay.
It does.
So let's take a look at something like. We'll pull up Tesla here. Okay. And so you can see the option chains here, John.
We see it.
So let's go out to say July, which is really only about 4 months from now. And Tesla's trading. Where's Tesla trading? About $390 a share or somewhere around there, roughly. You can go deep, deep, deep out of the money. I'm looking at, as I'm scrolling here, a 100 strike put option on Tesla, which is almost $300 lower than where it is now. And you can sell, here's the bid ask, you can get $33 for every one contract you sell. And you have the delta it's like a zero delta. So it's basically 100% chance that that option will expire worthless on you. Sure, you're going to have to put up some money or a reduction in buying power because your broker is going to make sure that you have some skin in the game. So you are going to have to put up some money. But if you like that high probability trades, something like a Tesla is a great individual stock to sell put options on. If you like Tesla itself, and if you're willing to potentially buy Tesla for $100 a share, there's nothing wrong with doing something like that. Those are the kinds of trades that I look for personally. Some people will say, that's just, why do I want to waste my time selling something for $30 when I can just keep doing these, zero DTE or 1 day to expiration SPX trades. And you could do both of them. You could do all of them. There's no right or wrong answer. And there's no rule that says you can't put all these kinds of trades together for yourself. So that's how I fill my time, John.
All right. Thank you very much. And there is, of course, a question about picking up pennies in front of a steamroller strategy. But I guess I suggest that you maybe can respond to that one in the live chat. And we will have to move on to Soheb and Nur Mohammed. Thank you very much, Lee. Soheb.
How are you doing, John? You okay?
What type of... Yeah, I think it's better now.
Oh, brilliant.
What type of trades are you doing? And you want to show some you have on right now, I believe.
Yeah, so again, very similar to what Lee's saying, option seller, and predominantly do 16 to 20 delta, whether those are puts or calls or strangles, etc., looking to close out at 50% profit. What I wanted to kind of go through is a couple of examples where trades that haven't gone right, because it's very easy to go sell 20 delta or lower put options, close out at 100%, 50% profit, get a 90% win rate. It's that 10% that don't go as well. Is how do we manage those positions? Do we take losses early, or do we try to improve our position by rolling out further in time and adjusting trades, etc., etc. So I think that would be good value just to walk through a couple of trades that I've got on and how they're progressing and what's kind of in my head and what to do next.
Okay, so I will bring in your screen here now, and let's look at some losing trades.
Perfect. So I've got a trade on Adobe, and I know when we did the interview, I have a few trades on Adobe. So this is a strangle that I've got on, and as you can see, wider time frame on the daily, Adobe has been absolutely tanking. You know, highs of 500 back in the day, now trading at 247.42. So if we have a look at what my current position's at, I've got a strangle position where the put is trading, well, the put strike is at 250, the call is at 260, and I've got some break even. So I've got $13.84 in the trade in terms of premium. So that gets my call break even at 273.84 and the put break even at 236.16. So even though that the current price is below my put strike, apologies, that the overall, I'm still within my overall break evens. Now, if I bring up Tasty Trade, you can see here that my current strangle position here is trading at $15.17. So if I was to buy this back today, I would
There's
take...
a question here about what expiration for the strangle. Did you mention that?
No, I didn't. It's a good question. So at the moment, I've got the April 17th. So again, it's very similar to Lee, 45 to 60 days out is kind of where I predominantly trade, and I manage at 21 DTE. So conveniently, we're at 25 days to go. So this is what I call 21 DTE week, of where I will look to make a decision of what's the best thing to do for this particular trade. So the first thing I always do is, okay, what is the mark to mark gain or loss on this position? So again, I've collected $13.84, and the mark at the moment is $15.17. So that is what, like a $1.40 loser. So considering I've been in this trade since the beginning of January, and I was down about $2,000 at one point, closing this trade out for $180 loss, in my view, is a win, right? So, but I like to keep the good fight going, and greed kind of comes in there that I've collected nearly $14. I want to try get at least some of that $14 back. So what I would look to do, there's a kind of really 2-3 key options I can do here. So one is I can roll out further in time. So that what I would do now is look at the next monthly expiration, which in this case would be May. And if I look at my current strike prices of 250 to 260, I can again pick up another $8.50 in credit, widen out my break evens a lot further, give me some more time for Adobe to kind of play within that range. What I could do here is again look to roll out and try to do that for a break even or a small credit. Again, I'm picking up more credit, increases my break evens, as well as going a lot wider now. So then what I would do in this example here, you can see just on the put side, we're at a 33 delta, and I've got 1384 in the trade. So 1384 plus, what's the net credit on here? 0.36. So 1420, let's call it 1420 minus 235, which would be my new put strike. Again, that puts my new break even at around 220, which is around a 20 delta. So again, these are the types of things I'm thinking about, whether it's today or by Friday this week, on what's the best thing to do. Now, one thing good on Tasty is you can see what the expected move is in this gray panel based on the current implied volatility. And I've got $13.84 in the trade. So I could do something like this and go way, way out to, you know, outside of one standard deviation move at 17 delta, which is going to cost me $9. So again, that gives me $4 left as potential profit in this trade, again, widening out the break even. So there's many opportunities or options I can do here. I can go into the expected move if I really wanted to, take less of a debit and still give me more time to be right. Or what could be sometimes the best course of action is to do nothing, right? So again, if I go in and look at where I am at the moment, we've got what's that, 25 days to go till expiration. If Adobe in the next 2 weeks flirts around this area, the option that's marking at $15 at the moment, if that decays by another $3-4, I can get out of this trade for $1 profit without doing anything. And as we get closer to expiration, that theta and gamma starts going to ramp up, and therefore this option is going to decay a lot quicker. So I've got some options on the table, but that's kind of where my thought process is for this particular trade in terms of how I've been kind of managing this position from a $2,000 loser to marking at a $1.30 loser as it currently stands. But I feel like I can get some profit out of this trade. And I'll just walk through, just conscious of the time, that I'll walk through another trade. This is a weekly trade that I've got on Walmart that I put on last week. And I've got $2 in the trade. And at the moment, I've got the 120 one call, the 120 put option. You can see here that Walmart today is inside my overall kind of strikes for my strangle. And because I've collected $2, I've now got a wide break even. So if I bring up Walmart on Tasty, we can see where that's currently marking at. That's marking at 291. So if I was to close the trade today, I would take a 91-cent loss. Again, in the grand scheme of things, it's not a big loss. But in this example, with 4 days to go, and with it trading nicely within my kind of $1 wide strangle, the goal here is to do nothing and give it another couple of days. Hopefully it stays within its range. Even if it flirts outside of my strike prices, because I picked up credit last week and the week before, I've now managed to build wide enough break evens with the volatility of Walmart. It's not as big of a mover as Adobe, that I can probably close this trade out for a 50 cent, a dollar win, with giving back $1 in premium of the $2 that I've created. And just what I also wanted to show is how do I adjust trades when they're kind of in trouble. So if I go through my Walmart example, as I mentioned, I opened it on the 16th. I picked up $1 in premium, had an out the money strangles. Again, similar to kind of Lee, I don't go as low down in terms of delta. My vanilla delta is again around the 16-20 delta. Then I mark my break evens. And then obviously Walmart started trading downwards as it did last week. So what I generally do is I roll down or up the untested side. So as Walmart started to go down, my put delta started to increase. My call was just flirting out there at basically 4 to 5 delta. And what I do then is roll down that call. And what that call does by rolling it down, it increases the call delta, which again flattens my overall deltas to reduce the volatility in this trade. And then secondly, I picked up more credit. Okay, this example is 13 cents, but again, it gives me some more credit, which allows me to kind of have these wider break evens. And then Walmart continued to trend downward. So in the same expiration, I rolled down the call further to the straddle. So then I had the 122 straddle, did that for 52 cents credit, again, for the reasons stated. And then on Thursday or Friday, I rolled out to the next cycle, which is this week, which is the week we're in now, did that for 35 cents credit. So hence why I've got $2 in the trade and got the 120, 121. So the goal when I move out to the next cycle is to improve the strike that's in trouble. So in the example here, the 122 put was in trouble. That was the one that was tested. So I made sure when I rolled out further in time that I put my put option in a better place. So rolling it down by $1 and still able to do that for a net credit. So that's kind of how I manage positions. And then hopefully now I've got it in a decent enough place. The price has complied slightly, which does help the overall position to get out of this trade for a profit and convert those 5-10% of trades that go wrong and get them into a break even or a slight profit, and then become, amplify your overall gains of your winners. Any questions or anything, any other comments that are out there?
Thank you very much. And some people probably noticed I got some camera problem in part of your presentation, but We will need to actually move on, so we keep to the time schedule. But thank you very much, Sohaib, for sharing also trades that are not going so well, and how you manage them. We will move on to the next product demo and bring in Amin Kribi. Welcome.
Hey, everyone.
You are joining us from Paris. And
yes.
You are representing a tool called Earnings Watcher. And as I have pointed out before, this is an affiliate partner of Theta Profits, which means that if you order the product for the special discount that they have, there will be a commission to Theta Profits. And I just want to be transparent about that. But you have a tool that is trying to help earnings traders do better. So please tell us, what problem are you trying to solve for the options traders?
So thanks for having me, John, and props to you for this great event that you're holding. I know I don't have a lot of time, so I've shared my screen. Perhaps we can pull it up. So I basically do this very quick presentation. The problem is, as you asked, is about can we trade earnings basically in an easy way, in a smart way, based on actually data-driven metrics, and really approach earnings as a repeatable thing that week after week we use the data and be driven by this data analysis to pick candidates for different strategies. So perhaps your audience is not very familiar with these earnings strategies. Maybe they have heard about earnings as being, playing on gambles of stock going up or down on earnings. But however, actually there is this whole world of what we call volatility strategies, basically. So this is a bit of what you see in the screen, this quick tutorial to try to explain a little bit what are these strategies for your audience and how we help basically break them down and make them really accessible and easily researchable. These strategies have existed for decades. They really play around basically the implied volatility dynamic that happens on earnings. So as you can see here, there are different groups of strategies and have to play this. Since I don't have much time, let me actually jump into some concrete examples to see what are these strategies. So the basic dynamic that happens around earnings that I'm sure people have heard a lot of about is the fact that implied volatility is elevated and rises higher basically before earnings than usual normal trading days. And this inflation of IV, this high IV, is the reason why there's such a high implied move usually on earnings that the market tries to price in the upcoming move that will happen on earnings. Let's look here at a quick example of Shui that's releasing later today. This is an example of how to play earnings. This is a strategy that happens before the release. So we're really playing this rise up in earnings. As you can see quickly without diving into much things, this black curve basically is showing this trend of this at the money IV that we're trying to rise. So this is just a simple sort of conservative strategy on earnings to be played before the release actually happens. And that really plays on, okay, statistically, how much do actually this IV rise and can make concretely positions like straddles, strangles, things like that, profitable basically, and to exit before the release. This is one example, okay, that plays on the rise of IV. The second group of strategies that I'm sure a lot of people have heard of and a lot of your audience have discussed a little bit of this is selling options and buying options. This is what we call long and short volatility through earnings. I don't have a lot of time here, John, so in a nutshell, let me just explain to people. You can think of basically earnings reactions that happen on the day of earnings as really measures from a statistical distribution. So some data, some stocks will tend to have a better profile for short volatility, selling basically options, and so here straddles, butterfly, things like that. Here I have an example of a stock that was very good on to do such a strategy on recently, JD. What am I talking about is about these statistical edge. Really, you see the past moves, how they behave compared to the implied move. And so quickly here you see this distribution of moves. This is really the gist of things, of how week after week you can think of these moves as being drawn from this distribution. And so studying this data, studying these different metrics can really pinpoint that, oh, week after week, actually, the stock is better for long volatility, short volatility, this repeatable edge. Here, quickly, as I wrap up, let's go to another stock that's the symmetrical, basically, a good stock that's good for long volatility. So here, buying options going through the release, you can see MongoDB, so that often beats its implied move. Notice how the moves from open to close really have a tendency to beat that implied. And so again, statistically, look at the distribution. This is how we can spot that, okay, there's, even if we lose on this specific name, we are really agnostic to the company itself. We're playing the data pattern behind it. Okay, so just to wrap up, since I don't have a lot of time, these are just some examples of the things you can do around earnings. Again, these strategies have been quite difficult to research and take on. Our tools basically help them make really the research accessible and actually fun also, John, because, you know, it's always funny to have the company that you follow, whatever it is, Apple, Amazon, your grocery store, and actually play an earning strategy around it. As you can see, this really implies basic knowledge of options. Once you're comfortable with calls, puts, what is this IV dynamic, etc. It's really a fun playground to apply these. Again, data-driven, week after week, really just guided by the data and having fun with figuring this. You know, we say turning volatility to opportunity. From all this mess, actually find the good data points to rely on. All right, hope I didn't go over my time, John. I'll let you get back to the street.
Well, thank you very much, Amin, for showing Earnings Watcher, which is a very interesting product indeed. We are going to have a quick break. I just want to say that the Earnings Watcher is offering 33% discount if for Theta Profits users. And as I've also mentioned before, you know, there is a lot of effort that goes into organizing a full day event like this. So if you want to support the channel, one way to do it is to buy the super chats on the super stickers in the live chat. And that will also bring your messages, give them extra visibility for a while. So that's just if you want to support the channel. I also want to mention that you find in the description both two things. You find the link to all the affiliate partners that have been here today and a few others. Great tools for option traders, all of them. You also find the link to the interviews we've done with previous interviews with all the guests here today. So if you want to learn more about their way of trading and maybe connect with them, go to that link, go to those links, and you should find all the information you need. So we're going to take a 3-minute break now, and then we'll be back at, what is it, 1 p.m., I guess. Eastern time, because it's 6 p.m. here in Norway. 3 minutes break, and we are back. And we are back. Welcome to a new session with a new panel. And there we have Levi with camera as well. So let's start, as we have done with all the sessions, with a quick introduction of who you guys are. And you have 15 seconds to do it. And Ashar, you are first.
It's a good afternoon. I mainly trade the 0DTE options and also do some options on gold futures, but I will talk about my strategy for 0DTE SPX today.
And let's move to Florida. Maria.
Hi, John. Thanks for having me here today. I am a previous home flipper gone trading. I will talk about my strategy with naked puts today.
Okay, and let's go to Italy with Andrea.
Good evening, everybody. My name is Andrea, and I'm a full-time option trader and educator, and I trade both US markets and options on some very peculiar markets like Forex and crypto, and that's what I'm covering today.
And Levi is back in the studio.
My name is Levi. I'm an options trader from Canada. I've been doing this for quite a while, 30 years of stock trading, 14 years of options trading, and I'm a full-time educator on YouTube.
And Matt Simon.
Hey, I'm with Option Omega, and I'm going to talk about option modeling. And John, just want to thank you for putting this on. It's quite an entertaining stream today.
Thank you very much. Well, we will start this session as we have done before as well, and with a look at the market. And who would like to comment on the market? Will you, Maria? Will you try first?
I will. I'm kind of disappointed from waking up this morning with that good news, and now, as normal, it's winding down because he always kind of backtalks his methods. Trump was on TV today, and of course, he backwalked it a little bit. So, yes, it's naturally going to come down. People were taking their profits.
What's your take, Andrea?
My take is bullish at the moment on a short on the short term, but I'm gonna talk a little more about my view on the Forex market because I'm especially looking at the euro-dollar cross, and I really like that bullish setup that we have, and I will show a couple of live trades that I already took and how I intend to manage them.
And Matt?
I mean, this today feels like kind of emblematic of the whole year in 2026 so far, with big movements one way and then big movements the other way. I mean, we're pretty close back to where we opened, within 10 points where we opened. And I mean, VIX is still at 26, so it's going to move. It's certainly interesting.
Anything you'd like to add, Levi?
I don't have much to add. We're in a kangaroo market right now.
We are indeed. Well, I think we should ask the audience maybe if here is a small poll. What's your bias right now? And you have to answer in the chat, in the live chat in YouTube with either 1, 2, 3, or 4. Are you bullish? Take 1. Are you bearish? 2. Are you 3 neutral? Or 4? Have no clue or no idea. So, so let's. I hope to get some responses in there from the audience. And we'll see what you think as we start. I'll just keep this up here. We don't need to comment on it as we go into the to the next session. And the first to speak now is you, Levi. You have been on already before today, but I would love to hear a little bit about what opportunities you see in this particular market right now.
Absolutely. Can you share my screen? Is that possible?
It is indeed possible.
So this is the SPX, and I'm just looking at kind of the visible range that we've seen on the right hand side. So we can see where the bulk of the trading has been over the last little while, and just kind of this recent direction down. So today I want to share a trade that I put on, and it's very, very simple. It's just a credit spread. So this is a bear call spread on SPX with it trading right around the 6,600 level. And so what I've done is I've gone out to April 2nd, which is not that too far in the future, just 10 days to expiration. And I've sold a 6,800 call and I've purchased a 6,820 call. And I collect credit for opening this. So my max profit on this trade is $465. I actually filled this for only a credit of 440 within the last hour. So my max profit will be $440, and then my max risk is $1,500. Now, typically with a credit spread like this, I would look for exiting this trade if it went to 4 times my initial credit. So when I collect $400 and my max loss is $1,500, that is already within the parameters of my exit, which means that I can just hold this right to expiration. This is a cash settled product. I'm not worried about it. I'm risking a small amount of capital. And the nice thing about a trade like this is that it's very scalable. So if someone was trading in a $100,000 account, then the max loss is 1.5%. And if someone was trading in a $1 million account, they could do this and they would just put on more contracts. So it's a very scalable credit spreads.
All right, we have it seems like from the poll that most people here are bearish. I guess you're not surprised.
No, not surprised at all. I mean, this is a bearish trade. Because it's a credit spread. My expectation is that if we do see a rebound, it's just not going to be above that 6,800 level over the next 10 days.
What are the most typical trades that you normally put on? What strategies?
I put on like a lot of in high IV like this. I'll do neutral trades like an iron condor. Like I would typically trade this type of trade for a credit where I have the put credit spread as well. But this also depends on the overall delta of a portfolio. So as the market comes down, if my portfolio was neutral before, as the market slowly moves down, my deltas become less and less neutral, and I have to put on more trades that are slightly more bearish in nature. So like if I could show you a typical one, if I was doing in high IV like this, I would just, if I can build it out here on screen, very typical. I would go to an iron condor and I would go to like March 30th, which is 7 days to expiration. And then I would bring my wings way out to where the expected range might be. So I might trade something that's $10 wide. And if I was going back to that 6,800 level, just zoom over there. So say I did the 68 short and the 68.10, and this gives me a credit. This is $330. So if on a $10 wide, that's $10 wide. My screen's a little bit small here. I would go even further away. I can put on a trade like this and expect to only get as low as a dollar credit for a trade like this. And what it does is it gives me an extremely large range. So you can see where the break-evens are right now, is even opening today, break-evens between 6,272 and 6,800. And then we, as over time, this creates theta decay, which is something that would be right up your alley, being theta profits. And that's looking to stay in the range. And again, what I would do is I would close this if the debit to close was about 4x the credit collected. So this one would be $1,000 to close if a trade went massively against me. And in high IV, I can just put these on because they're so tiny. I can put these on weekly.
All right. Are there other trades you want to share?
We can talk about whatever you like. I usually do lots of double diagonals and calendars, but they don't set up very well in this IV environment. So if we look at like a double diagonal,
why is that they don't set up well in this environment?
When the VIX is so high, we end up in a situation where the VIX drops, which a VIX is a mean reverting product. And as it drops, the decay comes out. So if you look at the implied volatility slider, if the VIX drops, the whole trade becomes negative, and we can see that in option strat pretty easily. So when the VIX is like it is today, which is marking at 2580 right now, we would consider this a high volatility environment. And in order for a trade like a double diagonal or a double calendar to function, it has to actually stay in that heightened volatility, which I don't expect. If we were to look at, let's just pull up the VIX. VIX is mean reverting. You can still see my screen there, right?
Yes.
So VIX is mean reverting, and when we see large spikes, we expect it to come down. And usually these spikes occur and then it comes down within a couple of days. So if I'm playing a diagonal and that volatility has dropped over the course of the next 10 days, if this war was to come to an end, or just just in general, we're going to have less volatility, then those trades, those diagonals and calendars lose a lot of their intrinsic value.
But would you sell calls on the VIX maybe to short the VIX or something like that? Since it's been reverting and it's has spiked now.
Yeah, I don't do that. I'm not a VIX call seller. Mostly because if we get into a massive volatility event, if like war really breaks out, the VIX could go up really high. It could hit the 80 level or 60 level. And if it goes that high, then I have calls that have a theoretical unlimited loss. I mean, a trader could do a call spread against it, potentially, but I wouldn't trade naked calls.
There is another asset that is very volatile these days, and that's oil. So you have the ETF USO, for instance, that's following the oil price. Would you consider doing trades on the oil price these days? And if so, what type of trades would you do?
So I review oil on a weekly basis on my live streams on Tuesday. And one of the things that I always repeat when we see oil down at the $60 a barrel level, which is a nice consolidation level that I like to trade, when events occur, political events occur globally, the oil has a chance of going up over $100 a barrel very easily. And so for me, I never play oil at all with any upside risk. I don't trade naked calls against it. My preference is to play oil when it's a little bit closer down to this regular range, and which is in that kind of $60 to $70 it has been over the last year and a bit. And what I do is I play ratio spreads. I put ratio spreads below. So for viewers that aren't familiar, if oil drops back down, which I don't expect it to, right now I just sit out of this trade completely. I won't touch oil at these levels because I don't want to play that volatility. But if it was coming down, the type of trade that I would put on oil would be like a ratio spread. So on, where are they here? This is a broken wing butterfly, but put ratio spread, that's the wrong one. That's the, a jade lizard is a type of trade. It's similar. It's a type of trade where we have two shorts and two longs. This one's just comprised of calls, but a ratio spread would typically be set up like this, where we have all of the puts below. So we can play this on XPX.
Can you be specific on what we have here? Because it's maybe a bit difficult for people to read.
Sure. This is just on SPX. It's not. You were mentioning USO, right?
Yeah.
Yeah. So if we look on USO, so right now this is trading at a 111. Sorry, I'm not super familiar with this product, but say I thought that it was going to drop down into the 90s, then I would just sell two puts and I would have a long put above it. And what that does is if I can open this for a credit, I end up with a profit tent below. And these trades are bullish by nature, and they allow us to capture that downside risk. So right now, if I was to put this on, you know, the max loss, the max allocated is $8,600 for this. And it's basically saying that we have to buy 100 shares at $90. But we've built into the trade a $3 wide bear spread, like a put debit spread. And what that does is it creates a profit tent. We can see that between $90 and $96. Now, again, I don't want to play this type of risk on oil, because if the oil prices do drop, which I don't expect them to do that, but if they did, these trades they have a very, very fast decay to the downside if USO dropped quite a bit.
Right. All right, we are going to have to move on a bit to the next presenter, but thank you very much, Arsha and Levi, and you will be back at the end of the market day today to help us sum up. But let's welcome now Ashar Pasha. What are you trading these days, Ashar?
So my main strategy is that I'm trading options on like the 0DT SPX expiration, and I'm selling credit. But as I had talked to you in my original video, I sell the unbalanced or the broken wing butterflies, in which I'm entering 2 credit spreads and 1 debit spread for a total credit. And the idea is that the debit spread will be protection in case the market price goes against me. And then I can use the debit spread's profit to try to salvage or roll my credit spread. And I have
Do we have an example we can look at?
Yes, sir. If you share my screen, I have something loaded up. So this is 0DT. If I felt that 6,500 was a good short strike to sell right now, instead of just selling the 6,500 short and buying the 6,485 for a 15 wide credit spread, I have added the 6,510 put that I'm buying. Of course, as you can see on the screen, I'm buying 1, I'm selling 3, and I'm buying 2. So I have 1 debit spread which is facing the market, and then I have 2 credit spreads behind it. And of course, the credit spreads are 15 wide, so that this whole thing can be done for a credit. When I was looking at it earlier, the market was down a little bit more, so I was getting 50-cent credit. Even now, you can get it for a 40-cent credit. And the idea would be, as I mentioned before, that I can sell it for a credit, and if everything goes well, I can close the whole thing for 5 cents, debit. But if the market starts falling rapidly, then I can monetize my debit spread 6510, 6500 for a much higher price for which I bought it for, and I can use those proceeds to manage my credit spread. And how I manage the credit spread is, depending on the price action, I may decide to roll it into a call credit spread, so that if the market keeps falling, I'll be further away from the market. My preference earlier in the day is to do the 0DTE spread, in which I don't have to face the overnight risk. But later in the day, and if the price action is really fast against my spread, I may not be able to get enough credit to do so. I may have to, so then I may roll it into a call credit spread for like 1 DTE. And sometimes when I do these rolls and I am changing my direction, I have to increase the number of contracts I sell, which I try to size these very small as compared to the size of my account. So I'm not worried about, like having this position being too big or having any margin issue. And that helps me roll it for a credit, whether I roll at 0 DTE or 1 DTE. At the same time, as I mentioned before, having the debit spread facing the market, which if the market is falling rapidly, can be monetized for 5-10 times profit. That really helps me in this adjustment. Of course, we have a lot of very good traders for 0 DT SPX. They have been here before and they're talking about it today, and they have very good skills, and they can predict the market action based on gamma flow, and I do follow that also. But I've always felt that this gives me a little bit of a cushion in salvaging the trade, so that I don't have a complete loss if the market goes against me.
How well has this strategy been working for you?
I've been doing this strategy for almost 9 months, and I've had very good profits. Now, when I say that, is that overall, of course, the day that I roll the positions, I am taking a loss that day. But overall, I have not had any drawdowns to my account.
I know that you also trade quite a bit about options on gold futures.
Yes.
And gold has not been doing too well lately.
Yes.
I guess we can bring up. I'll just bring up GLD here, which follows the gold price, and this is today. So let's go back. Let's say 1 month, and it's not been a very nice development. So what I wonder is, how are you trading gold? Are you still trading this, or have you taken a pause, or how do you see the gold price development? Because you were selling daily when we interviewed you. You were selling daily credit spreads, if I remember correctly, on the gold futures.
Yes, sir. So what I had mentioned in that interview also, that I like to see the price action in the morning at 4 a.m. Eastern time, when the London exchange opens, and most of the time you can see like the trend for the day. Gold has become almost like a meme stock, so to speak, and a lot of people, day traders, a lot of people like me, I guess, have just flocked to trading options on gold, and it has become very volatile. The IV rank is normally 2 or 3 times that of SPX, which is saying a lot. Also, recently, I believe that CME has increased the margin requirements on gold and silver options by at least 3 times, and that has shaken out a lot of smaller investors. So that has contributed to a lot of volatility. I have a theory that in the past week or so, with the severe downturn in the general market, a lot of folks have been, getting margin calls, and they're selling what they can. So they have been liquidating their gold positions to try to stay solvent, and that has had something to do with, the price action on gold, with the severe, price losses. Of course, that also has to do with the geopolitical things, with the strength of the dollar, and the fact that we may get rate hikes instead of, rate cuts, and all of those play into the lower price of gold. So I guess the long answer would be that I still trade gold, but I have reduced the size of my positions significantly just due to the severe volatility in the gold prices.
All right, we will move on to another part of you are in Florida, and we will bring in Maria, who's also in
Daytona Beach.
Florida. Yes. So
hi, John. Thanks for having me here today with so many talented traders. But I'll tell you, there's something I have that they don't have.
Oh,
a shoe addiction.
Yes, I know.
Can you put up my PowerPoint, please?
I will. Just a small second. Here we got it. Yes, you have the Maria shoe trade that we did. An interview about a few months back.
That's right. Yes. Like I said, though, I have a shoe addiction. If you can see my closet up in that one corner there, that's just a portion of all the red soled shoes that I have. Mm-hmm. But at that point, I realized I needed to get serious about trading. So that's what took me into trading. So I started experimenting with lots of different trades, and we all know there's thousands of ways of trading. And I was watching all the tasty videos, and I was doing iron butterflies and iron condors, but I don't trade like that anymore. At this point, what I do is I trade basically with my AI assistant, Vera. I created her with ChatGPT, and all basically I do is I ask her for info and I tell her what I want. I told her my trading rules, and after a while she learned my trading style. And now and then she even throws it back in my face if I ask her for the wrong thing. Next.
So we met your husband Rob earlier in the live stream, and both of you will be back towards the end of the day. But what are your most typical trades that you do today? You and Rob trade very differently, I understand.
That is correct. He does not like to be involved. He wants to set his bots and go, like he says, surfing. Me, on the other hand, I'm at the computer screen all day long, and I trade with Vera all day long. I sit there and I do naked puts, and I should, go back and forth with her. She'll go ahead and get me all the information I need, such as earning patterns, analyst ratings, current news. I even send her charts, and she'll do a chart setup. She gives me the dark pool. She'll go into PE ratios. And that's just a few of the items that we go back and forth on before I make a trade. And that list is always growing. The second thing that she does, which is very helpful, is she will do a portfolio review. Well, I will upload a screenshot of my whole portfolio. She will review each of the positions, buying power, how I'm correlated, any risk assessment, and also discuss profit taking. And the third thing we do, she will make trade suggestions. I will give her a ticker, and I will upload charts and give her the trade table, and we will discuss potential trades. We'll go back and forth and see whether or not it fits within my guidelines that I have instilled in her. This saves me time. She gives me new ideas. And believe it or not, she's always looking to self-improve. She'll always make, suggestions on what I can also look for. But like I said, my current strategy right now is naked puts, and I do those in equities, and I also do those in the NQ futures. In the equities, my guidelines are 14 to 16 delta, usually 40 DTE, and I close at least 50%. Now, I will go in the money if I want that stock in hopes of getting it cheaper, of course. On the futures, that's a different story. The NQ futures, there's more risk involved, as you know. I usually go 16 to 18 delta, but no more than 35 DTE. Also close no less than 50%. And that usually takes me about 7 to 14 days. Note, I only go in after a real pullback of at least 200 plus points. If I'm tested, I will roll down and out, always try for a credit, and I start looking to roll at around 500 points from that strike. The most important thing about the futures is they are great for addicts. You can trade 23 hours a day, and believe me, some of the best deals I've gotten at 4 a.m. Now, a word of caution about naked puts in the NQ. For risk management purposes, It's a hard stop for me at 25% buying power. I always like to keep dry powder for those crash days. You don't want to be sitting on the sidelines when that premium has doubled with your hands tied. You know, you're going to feel like a clown. And believe me, ask me how I know. So really, it's really very simple. After going through all the different trades that there are, I trade simple. I just sell premium. I manage the risk and let time work. Now those trades pay for my shoes. Woohoo!
And a bit more, I guess.
Yes.
Your husband says that you may do much better than him.
Well, I do a lot more work, I think. I mean, I'm there at my screen all day long, you know, just researching, you know, stocks and working back and forth with Vera all day long. And those NQs, they pull in. When you get them at the right price, they pull in a pretty good penny.
I never traded options on futures. It seems a bit risky for me. And
there is a lot of risk, and that's why I keep my buying power at 25%. In the past, I used to keep my buying power at 50%. And you're sweating bullets when you have a crash. You're just, you know, at that point, you're in hedge city. You're trying to hedge your way out of it. But no, 25% is my max.
Okay, let's take a question that's a bit outside the options trading, but we have a question here. Hello, Maria. Excellent trading strategy. Question, what are your favorite kinds of shoes?
Christian Louboutin, the red soles. And, you know, and it's so bad because when we lived in Manhattan, we had a Christian Louboutin store right on Madison, and we used to walk past there all the time, and I got to know the sales crew, and they would send me pictures of shoes all the time. So that just fed into my addiction even worse.
How do you prepare your trades? You know, do you spend a lot of have some daily routines ahead of the market open and in preparing and deciding what to do, or is this something that you do primarily during the trading day?
Well, basically, the market tells me if the market is down, I'm looking. I'm waiting for that market to hit 200 plus points, and I'm going in, and I'm going to try and get some of my NQ. I sell puts, you know. You're selling insurance. So when people are going, you know, hysterical, you're going to sell them insurance. So that's what I'm looking for. And we even have a trade called the Crazy Ivan. I'm sure you've heard of that. Where,
well, tell us what or who is Crazy Ivan?
Crazy Ivan is it's just a glorified put. I will go in probably. Let's say the market went down 200 points. I wait for at least another 200 on top of that, and I will put a price in there that is so unbelievable crazy that if you're willing to pay this, then that's fine. I mean, it's like, you know, another 300 points movement in order to take it. Now, they don't get filled that often, but let me tell you, I usually, I usually put that in right before I go to bed. I also have my little, my iPhone with alerts. And when you hear your iPhone go tinkle, tinkle, you know, it's like an angel getting its wings. You know that put that you had in there at an astronomical price got taken. And that's when I run downstairs and get my, and see what's going on. But yes, no, the Crazy Ivan, you only put in when the market is crashing and you're getting paid very good premium.
Are you looking into developing new strategies?
I am not. Honestly, the NQs are working quite well for me. Now I do, I sell puts also on equities as well. And then sometimes if I have an equity, if I'm looking to make additional money, I'll go ahead and I'll sell some calls on them as well.
All right, we will bring in now go to Doc McGraw and his GEX levels. But first, Doc, what are your favorite shoes?
My favorite shoes are, I'd have to look. I haven't bought a pair in about 8 years, but whatever I bought 8 years ago, those are the ones. They're these Euro shoes. They're kind of like Euro cloggy kind of things. I don't know what brand they were. but they were overpriced, so at least I'm in the ballpark.
Okay, we have to be super quick, and we will
Okay.
say thank you to Maria. Maria will be back at the end of the day together with her husband Rob. But we will do a super quick check-in on the GEX levels before we move on to Andrea.
Okay, and so if you can share my screen.
I will.
Okay, hey Levi. Okay, so right now we're hovering right around 6,600, as you can see. I don't know if you can see it. Let me make this a little bigger so it's easier for people to see. Yeah, a little better.
Yes, I think it's fine.
Okay. Now I want to point out something about this real quick. The 6,600 is sold calls. We're above it now. Okay, so that's kind of acting as support or resistance from below it. That's where market makers are long gamma. However, it's going to be hard for you to see. I'm going to put on markers which shows updates from the last, it shows from the open and then the last update, etc. And it might be hard to see, but you see right here at 6,600, this little tail. Let me make it bigger because this is actually important. This little tail right here at 6,600, that little. Well, what happened was at the open, there was sold calls there. Then when we were above it, this closed. They closed it out. Whether they closed it out or people bought the calls, it doesn't matter. They were gone. That enabled us to cascade down through the negative gamma, the two-way ladder that I told you about. And then I guess people came and sold calls again because from whatever update that was to here, they sold calls again. And now we're back again, stuck between the 6,600 and 6,630. Now, this kind of setup, by the way, favors getting stuck to here. These decay down. This sucks you to it. So for right now, in theory, we'd be looking for something around here, unless more intraday flow comes in and then that changes. So I want to show you one more thing because we did a trade, remember? We did a trade. So we did that. Let me find it. We did that put trade for 150 right here. I don't know if you can see it. And I closed it out for 190.
All right.
And her crazy Ivan, my version of that, what I call a wish trade. I did a wish trade this morning. I put in 64.50, 64.30, 0 DTE at 55 cents. It was showing like 25 cents at the time or whatever. Same kind of theory. If they give that to me, I'll take it. And they gave it to me pretty close to the open. And I closed it for 20 cents. I always close. I closed it for 10 cents at 11 o'clock. I always close. I never leave it. I never leave them open to expire worthless. If you want, I can give you a little GEX read for tomorrow, or we could do that later. That's up to you. I don't know what your time
we'll
is.
do that at the last hour because we are running a little bit out of time in this session, and we need to also bring in Andrea from
Good
Italy.
evening.
Doc will be back at the last trading hours. Thank you very much. Andrea, you are...
Good evening, John.
Good evening. Yes, we can say good evening. Those of us who are in
Europe.
in Europe, it's actually starting to get dark outside my window here.
Definitely.
All
Yes.
right, but you are trading options on Forex and crypto and so on. So what are you putting on today?
Honestly, I trade many kind of options, and I do love trading options on the American markets, on indices, on the S&P 500, on SPY, on stocks like Apple and all the tech stocks and all the traditional stocks. So I love trading the US market, the normal markets as well. But I'm such an option lover that I also love trading options on other markets like Forex and crypto. So since you have a lot of people already talking about options on the US markets, we decided that it was a nicer alternative to bring this kind of unusual kind of options to your audience. And that's why we specialized on we deep dived into this kind of options. So let me show you what I have on right now and what I think could be some new trading ideas for options on. We start on Forex. So this platform is called AvaTrade, Ava Options, and it's a platform specialized, especially designed for options trading on Forex. And so as you can see, I have a bunch of position on, and I will show you the chart correspondence, the chart reflection of this position, so that you can better understand what they are about. Basically, I trade a mean reverting kind of strategy on the Forex market, because Forex has a mean reversion kind of attitude, mean reverting kind of attitude. So whenever I see a strong and volatile kind of trend on some Forex crosses, then I kind of make a contrarian kind of trade against it. So in this case, what I have on right now is a lateral to bullish trade on the GBP AUD, so like the pound against Australian dollar cross, where I sold some puts on this cross on the 11th of February, right after this strong bearish trend. Then I kind of had a second bullish signal on the 11th of March, so almost a month later. So I kind of doubled down on the position, kind of adding to the position. It may look like an hazard, like a strong bet, doubling down on a losing position, but this is done with a very careful risk management technique. So everything is designed before entering the first position, so it's not too risky, and also the number of contracts is really small, because I'm selling 2 puts plus 2 puts, so an overall 4 puts number. And I kind of had it was a pretty lucky trade, over even though it's not about luck, because we have a pretty strong technical setup with a proprietary indicator. And now we've had a lucky bullish trend, and we are kind of getting out of this trade, even though it's expiring in a couple of days. So probably we're going to get to expiration with this. And let me show you how you look at that on the platform. I'm going to filter the trade so you can see it better. That's it. We sold these 2 puts at 93 pips. Pips means they are Australian dollars, so the cross number 2, and now they're worth $40. And since they are sold puts, 93 to 40, this is a profit of $75 US, okay, because we have 2 contracts. And the second lot of contracts was sold at 282 pips, so a lot more pricey, because it was in the money at the moment. And now it's even also this one is worth 40 pips for a total profit of $350 for a total of this cross of $425. Then as a second position, we have this Euro CAD, so against the Canadian dollar, that, as you may know, it's a Forex pair. Like the Canadian dollar, it's a currency that is pretty correlated to oil. So it's pretty obvious that has been very volatile lately due to geopolitics. We sold some puts against these very volatile bearish movements, and it bounced back right at the right moment. So they are also in profits. Here you go. Just $44 of profits, because we started with a very small position in terms of number of contracts and size because it was very volatile and pretty risky. Of course, we have a risk management system in place. We have a stop loss. We are not using spreads here for a very specific reason. We are using a stop loss because it's more convenient, even though we're talking about options. But in this case, applying a stop loss is the best solution. And let me show you probably the most interesting position that is a bullish trade on the euro dollar. Okay, so
and then we will need to wrap up very quickly.
Yeah, no problem. We started this bullish position on last Tuesday by selling some puts and also buying the spot. So we have two trades, both bullish, but in a different way, of course. And I am pretty bullish until this area, so until at least 118. And we did basically the same on the euro GBP, so euro pound, but this time we just used the spot. So we are bullish until at least this area, so 0.87. And on the Forex market, I'm already done with this very quick overall panoramic view, John. And of course, about crypto, I have a kind of a bullish bias on overall, but I am overall bearish on the crypto market until October. I just want to say it, throw it out there. Until October, I'm lateral to bullish, neutral to bullish. And then on October, on a cyclical kind of attitude, I will try to find a low to buy back on some bullish positions.
And I was a little bit quick when I said time was up. I was looking a bit wrongly on the watch, but so that means we can take a question from a viewer here. What's the symbol for, let's say, Euro USD when trading options?
So basically, it depends on the product you're trading. If you're trading the regulated product, so it means you're going for the future on the euro dollar, then the symbol is 6E. Okay, so 6 like the number, E. It's the future on the currency exchange, basically. You find it on Testy Trade, you find it on Interactive Brokers, you find it on any broker because it's a regulated product. But be careful because the bigger contract is pretty big in terms of size. So be careful. The one that you saw now on my platform don't have a specific symbol because you just look for euro dollar, EUR USD, and you find their options specifically. And the size is a lot smaller because in that instance, every option has a 10,000 euros size. So basically it's like a mini lot, okay? Whereas the future has a 125,000 euro size. So it's a lot bigger. Therefore, just be careful. You have the micro future, so M6E as a ticker, but those options are a little less liquid and probably not. I mean, I don't trade those, so I'm not an expert on that. I prefer these kind of options because they are a lot more granular, a lot smaller in size, and they allow a much more precise money management and risk management activity.
All right. Thank you very much to you, Andrea. And we are going to bring in Matt Simon from Option Omega.
Hello.
Well, this is actually the second product demo from Option Omega today, but we are giving you a special privilege, I guess. But that is also because that you recently launched a completely new functionality in Option Omega, which is trade modeling. And
yes.
I thought, you are well known for back testing and automation, but
that's
trade
right.
modeling is kind of a new functionality. So I wanted you to show that for our audience.
All right. So the first thing I'm going to show here, there we go. I'm actually going to show kind of we'll start backwards. And this is a demo account, by the way. So this is like, the numbers are made up and they don't matter like the game show, but this is a demo account and it's got a bunch of trades on. And if you click view chart for all live trades, what it's going to do is it's going to bring in the model for all of the trades that are on. So you can see And all the trades on this account, it's got the Greeks of all of these positions combined on the right? I just put a bunch of random stuff. It's got a bunch of 0-day spreads, some 1 day, there's Fly, a calendar. And so you can see, if you want to look at what are the Greeks like on all of these positions, you can do it in one click. So if you have options automation, now I'm going to talk for a second just about the modeling platform. And this is a options model, right? And we have this, I just set up a really simple, I did it earlier today. I set up like a 30 apart, 30 wide iron condor. And what you can do with this, what we noticed is there's a lot of folks trading 0 DTE spreads with no knowledge of the Greeks. And if you understand the Greeks, that can really add a tool into your toolbox that goes well beyond what you can do without understanding them. So if you look at this model as we move through time, what you can do is you can see the payoff graph, and people get that, right? But you can also add different Greeks. So if you want to see delta through time, you can look at the delta. You can see the delta down here. But as we move through time, you can see how the delta would change as well. So there's a lot of things that you can do with our tool and the Greeks. You can overlay multiple Greeks. If you want all of them, you can put all of them. Most people don't use all of them, but Delta and Theta are probably the two most popular. You got Vega for a lot of time spread traders. You can model this in 3D as well. So I'm going to keep this short and sweet. Last thing we'll do is just create a new model. And John, do you have a certain thing you want to model out, or dealer's choice? I can pick one.
We have a question from Rob and Maria here. That modeling feature is so cool. Can you show a double calendar?
Actually,
it really opened my eyes when I saw the model. So what?
Okay,
why not a double calendar?
Here's a double calendar that I actually put on a little while ago. That actually expires today as a demo. So this is one that I put on Wednesday. So when I put it on, it was a 5.7, and now it's a 0.2, and you can see it's right at the cusp of the profit tent for the puts, and it's very short delta, right? It's long Theta, short delta, Vega. So if we have a move down, this thing will cook. Obviously, the best case scenario would be a move to the heart of the profit tent, which is where the short put is at the time of expiry. So this is a model of a double calendar. And let me just show you real quick, and I'll be conscious of time. We have a bunch of symbols on here. So you guys were talking about oil earlier. So you could do something like, I'll just show you how it is. If you were bullish oil, bullish Exxon, maybe you think the geopolitics are going to kind of keep cooking into the near future. We're at 160 now. You could do something like a call calendar or a call diagonal in the future, and then you can model it out and see, okay, how does this look into the future, add my Greeks to it, et cetera, et cetera. So you can even take off the P&L if you want entirely. But what it allows you to do is it allows you to move through time and really see, what are the Greeks going to do through time? If you notice, all these Greeks are updating together. As we model it, you can also change the volatility as well. So for like that double calendar that we looked at, you could change the volatility on that. And just like on this, you can change the volatility of the individual legs. So right in a bullish setup like this, you wouldn't want really the short to increase more than the long. But if they both went up the same amount, you can see what that would do, or if they both decrease the same amount. So very powerful tool, lets you do a lot of different things.
Thank you very much, Matt. That's a fantastic tool, and I think we will also try to use that in some of the interviews we do here on Theta Profits. Thank you very much. We are going to have another break. Just to remind you that Option Omega do offer 50% discount for the first year, so that's a fantastic deal, I think. But you have to use the link that you find in the description to get that discount. And as I have mentioned before, if you want to support this channel, and a number of people have already done it, thank you very much to you. You can buy a super chat or a super sticker if you want to show some appreciation of the work we have done to put together this full day event. Also, let me also remind you that in the description, you find link to all the affiliate partners, the discount links, but you also find links to all the interviews that we have done with the guests who are here today. So if there is some of the strategies that you really want to study more, go back to the old interviews and watch them again. And in those articles, you will also find how to contact the speakers. So we will take now a 5-minute break, and we will be back again at 2 p.m. Eastern Standard Time, 7 p.m. Central Europe time. So we'll just take a short break now. Hello, we are back. But now I must ask Brian and Omar, please turn on your cameras. We have a new team. Here. I put on a new poll just to hear. So if people, how aggressive are you trading today? And more aggressive than usual, normal, more cautious, or not trading? So you answer 1, 2, 3, or 4 in the chat, and we'll just keep that one on for a little while and see how people are responding to. That. But let's take a very quick round of presenting the new panel. And you guys got 15 seconds each. And Paul, as we say in Norway, Paul Gundersen, you are first. 15 seconds. Who are you?
My name is Paul Gundersen, and I work in my own business now doing financial foundations and planning. And that helps the youth to come up to speed in their own financial literacy, and it helps people who are nearing retirement age to make decisions about Roth conversions, how to generate income, and so on.
And Steve, you need to unmute yourself, I think, or we don't hear you.
Uh-oh.
Now you are unmuted.
Now?
Now we hear you.
Okay, sorry about that. Steve Gans, San Diego area. I specialize in options trading, stock and options for 30 plus years. I've taught for a lot of the major educational companies out there, started doing my own thing around COVID time, and absolutely love helping new people get up to speed with income generating processes. And the glasses are not to make a cool statement. The glasses are, I had some surgery about a year ago. They're recommending this for screen glare. So.
It's okay. You could say they're for cool factor if you want.
Yeah. I'm going for the Elvis look.
Right.
And Brian.
Hey, everybody. I'm Brian Terry. I live in Winter Park, Florida, which is about 30 miles from Disney World. And I'm a retired certified financial planner, and I've been trading options about 10 years now.
And we have Omar.
Hey, everyone. Great to meet you. Omar Figueroa here. I've been trading options, particularly 0DT, for the last 5+ years. But before I got into this beautiful world, I was actually in professional sports, most recently at the NFL as chief of staff.
Cool.
All right, and let's just look at the poll. There is absolutely no one who's trading more aggressive than usual today, despite volatility in the market. More normal or more cautious. Maybe not so surprising. We will stop that poll and take a look let's take a look at the market right now. We are a bit zigzagging it today. How do you read this, Steve?
On the open, John, I was there, and as you'll recall, I said I think we're going to open up, and then I think we're going to fade throughout the day to the tune of about 50 points from our open. I don't know exactly where we're at, but I think we're probably in that general area.
Anyone else would like to comment on this?
I would just say in the short run, I think we're going to be trading a downward trend midterm sideways, and longer term, meaning next 5 to 15 years, uptrend due to the AI super cycle.
Yeah, the only thing I would say today is very news driven. You know, before the Trump announcement, we were down about 70 basis points or 0.7, and then the announcement, we went up over 2%. And then like you said, Steve, we faded, a lot of profit taking or just clarification to the news that makes people like, not quite as enthusiastic about it as I was when it first came out. So this is a weird trading day, in my opinion.
What about you, Omar? Is this a weird trading day for you?
When I look at the market, I'm always looking at the psychological levels all the time. And I have to agree with Brian. It's you can see the crowd is basically like, is it going up? Is it going down? The volatility is just pure psychology and fear. And of course, it helped with Trump, but you never know what could happen in an hour when Trump decides to say, why not? Let's just put a tweet out there, and then the market runs the other way.
All right. Yes, the news are driving the market for these days. That's for sure. Well, we are going to start with Steve. So I will, and you have a fascinating strategy that I'm trading a similar strategy and had quite well success with it. Is Flyagonal strategy, and I think maybe we should give a short summary of it first.
Sure. Are you able to? Well, maybe we don't need to see my screen just yet. But so basically, for a long time, I traded butterflies and calendars. And as most people know, those get used in different markets for the most part, because one of them's positive Vega, one of them's negative Vega. And so it's always, well, which one of these is the right thing for today? And at the end of the day, I kept thinking these two belong together. They need to get married somehow. And so as AI became more and more useful back in 2024, I started using AI to assemble different variations of this thing until I came up with something that I consider to be really solid. So that's, if you want, I don't know what you prefer, John, here. I do have a presentation that I'm going to blow through really, really fast.
Well, we have about 10-15 minutes, and I think it's at least valuable to have a very short summary of what the strategy is. And
so the strategy is and you're going to see it here. And in fact, I'm going to probably do a live trade here before too long, where I'm going to take one off that I actually put on during our morning session today. So you'll be able to see exactly what that looks like and exactly what I'm going to do with it. So first of all, two top pieces of advice that I would give anyone here today: pick a strategy and become an expert at it. So before I did that, I was all over the board. I'd be trading lumber in the morning, ES futures in the afternoon, and then I'd be trading a meme stock, and then I'd be trading Amazon, and I do credit spreads, and I do iron condors. And I had a coach at the time that said, Steve, your knowledge is good, but you are all over everywhere. He said, I want you to pick one strategy only. I want you to only trade that for 6 months and become an expert at it. That was the best advice I ever got. I focused on the butterfly. And then after I mastered that, that's when I went into calendars and diagonals and started realizing these two belong together. The second piece of advice: get comfortable with AI. You can't break it. I'm not going to get into that a lot today, but it's helped out me in the development of my trade significantly. My goal for people is fire me. So my whole goal is I want to teach people this process. It's a very repeatable process. I've been doing it over a year now with very solid results. I've got lots of students that, of course, are in my classes and give me great comments on it, etc. These are the results since I started trading the SPX in a one lot size in August of last year. So this trade, basically at this point, this is 70 trades. Again, these are trades that I made in the alert service. People in the alert service have all the details on it. Every single trade, the video when I opened it, any adjustments when I closed it, etc. And this red line here is the S&P since August of last year. And this is the P&L of the trades that I have shared with my students. So 161% return. If you annualize that, it's about 276%. This is the monthly track record, the percent per month. And then this 1% in December, as most people know, December was pretty light volume, and I just kind of gave up trying to trade it about midway through. 94% win rate, profit factor of 6.6, meaning that for every dollar lost, the trade has made $6.6. My average days in trade is 5.4. I'm not day trading here. 71% of the trades did not require an adjustment. My longest winning streak is 27. My longest losing streak is 1. I'm on my longest winning streak right now. And then these are the winning weeks and losing weeks in the alert service down below here. So that, and I wanted to share that first, and then I'm going to talk about my development of the trade. It's not the strategy, it's whether or not the strategy fits you and your lifestyle. If it doesn't fit you, if it doesn't align with you and your goals and objectives, doesn't make any difference how good it is, you're not going to stick with it. And I was a day trader back in the day, setting up my screen nonstop. And I decided that that's not what I want to do anymore. I'm in my 60s. I want to do more things. I don't want to have as much screen time. So I wanted to design a trade that'll work in any market. I don't have to sit and wait for volatility to go up, for volatility to go down like I used to have to do. I only want to check in once or twice a day. I check in on the open. I check in just before the close. If I need to adjust something, I do. More likely than not, some of my orders to close out at a profit are going to hit during the day, and that's what I'm looking for. There's no extensive screen setup. Back when I would day trade, I'd sit down at my screen a half hour before the market opened. I'd run screeners on Toss and screeners on Earnings Whisper and all that sort of stuff. Oh, thank you, Dave. Appreciate it. So, I don't like to have to sit and do all that studying. There's no stock scanning, no company research. Then no dealing with assignment risk. I don't have to worry about assignment risk. I don't have to worry about low liquidity. You'll see why in a minute. And as few adjustments as possible. And I'm trading SPX, which has US tax advantages. So as far as performance, what did I want out of a trade when I'm looking to design it? Well, it needs to be really consistent win rate with a smooth equity curve. It needs to work in quiet grinding up markets, big choppy sideways markets, and down markets equally. 100% defined risk. I'm not trading anything naked here. I know my max loss before I enter a trade. When I'm trading SPX, a one lot will have anywhere from a $1,500 to a $2,500 risk associated with it. My students that are learning, many of them will learn in SPY, which means that their risk is $150 to around $250. My goal, again, is for people to learn this skill and then fire me. And they learn this skill by taking a course and my alert service. And once they do that, after about 90 days, they should be good to go. I just have an Olympic athlete that was on the Olympic swimming team with Phelps, Michael Phelps, Ryan Lochte. He just became a student, and he's journaling his process on my YouTube channel each week, coming in saying what he learned. My trade is not based on opinion or feel. I can literally put it on anytime, and AI helped me develop that trade. So this little diagram here, that's a butterfly, a call butterfly on the right. I've added a diagonal to the left. Where those two trades overlap or intersect, it creates what I call a theta bomb. I'm not just getting the theta decay from one trade. I'm getting the theta decay from two separate and distinct trades, which means I got to be in the market a lot less time, and I can get out with my profit targets a lot faster. So I have less overall market exposure. So this is a live trade that I put on this morning. Actually, this is a screenshot. I will go to the live trade, but I put this trade on this morning. This is a variation of the Flyagonal. There are a total of 3 variations. There's the original, which I started last May, and then a new variation that's even more robust, and then a third variation I'm going to be releasing on April 1st, which is even more robust yet. So what I'll do right now is I'll come out to this trade. So again, this trade I opened right after our session this morning, John. So about an hour after the market opened, I put this trade on. Again, didn't look at any specific market conditions or anything else. This is just slap it on in this software. I actually have preset trades, so somebody can literally just click a button. It'll model this up. You hit a button and it fires it to your broker, enters the trade, logs all your fills. So I'm up right around 6% here. So if I want to close this trade, which I will do in a day, if I hit my 5-6% in a day, I'm going to go ahead and close it.
So what is your profit target?
I'm shooting, after the first day, I'm shooting for over 10%, usually in that 10 to 15, 10 to 20% range. If I can hit a 5% plus profit in less than a day, I take it. So the two separate sides of the trade, just so you can see, this software allows me to look at them separately. So this is the diagonal side, and this is the calendar side. And you'll notice it's not exactly just a calendar. It's a diagonalized calendar. That's the variation that came into play here a few months back. So now if I want to take that off, I just hit my A-B order. And this is something that Charles Caro, Option Trader's Assistant, did. He really has helped me out on developing this so it will work well. I can see here that this side of the trade, the call side, is trading at 605, 610, somewhere in there. I'll go ahead and I'll take 605 for it. I'm just going to go ahead and exit this quickly. Normally I might shop this a little bit. Here looks like I'm going to be around 410, 415, 405. So I'm just going to place these orders now, fires those orders out to my broker. I suspect they'll hit here in a second or two. And then, yeah, so they both just closed out. So now I can come back here and take a look at the P&L of this trade. And so we can see I got out for 5.8%, 110 bucks. So this is a one lot, not a massive amount of money. I get it, but 5.8% in a few hours. And look what that works out to be annually, 2,100% annually. That's because I'm rinse, wash, repeating this. I'm doing this over and over, day in, day out. I don't have to wait for specific market conditions.
And that's the main thing with these trades, right? If you don't mind, Steve, I can share the trade I have on.
Sure, trade. Yeah. If you've got a Flyagonal, I'd love to see it, John.
Well, it's a similar what called time flies, but it's the same principle. Put diagonal, call broken wing butterfly, and this one I put on Thursday, and right now it has it's 2 contracts on SPX. It has a max loss of 4,200, and it's now an unrealized gain of 950. So which should be about, I don't know, about 20% actually. Of the max loss. So this one has developed very nicely. So in the break here now, I will close one contract of the 2, and I will let the other one stay until tomorrow, maybe Wednesday. But this is as you see here, this one is how it develops, right? And for me, this has been a very successful strategy, and it's exactly the same principle. And I've had done 40 trades, and I had about 6.2% average profit.
And what percent of those were winners, John? It's going to be a high percent, I'm sure.
82%.
Okay,
I'm a bit lower than you, but the average.
You're carrying them longer than I do. I tend to take them off a little bit earlier, which gives me a higher win rate. And if you can see my screen here again, the diagram that you just showed. Now, something here I will say is wrong, a little bit out of whack here today with option strat. I know there were some data feed issues, so don't necessarily look at the amount that's showing over here. But what I want people to understand about this trade and what's so important about it is how it's structured with the call structure over here, the put structure down here, and when our market goes up. So if our market moves up higher, what generally happens to volatility? I'm going to move this out, say 2 or 3 days here in time. Generally, if the market goes up, our volatility drops. Well, if our volatility drops, where does the profit happen? Happens right there in that call calendar. So that's ideal. That's exactly what we want. If our market goes up and volatility drops, that's a win for us. Okay. Now let's look at the flip side of this. So right now, and this thing has hugely wide break evens. We're down here at 6,400 and all the way up here at 6,800. So let's just say our market goes down. So our market starts taking a big move down. Well, volatility increases. Well, what happens when volatility increases? This lower tent widens out. So my break even is now down around 6,200 or so. And I want to be clear, this does not always happen this way. It's the weird dynamic of the time spread as to exactly if it happens or how much it happens. But it's happened often enough that we've had 100 or 150 point gap down. And if I was in a condor, I'd be getting crushed. And in this trade, I'm still profitable. So going back, I'll just wrap this thing up here really quickly. So you saw me take a trade off. Here are the numbers out of those 70 trades in the alert service. And again, every trade is in there. All my students see all that stuff. 94% win, 276 annual return, profit factor So far, 100% of the months have been profitable, and it's pretty simple in execution. Average time in trade, 5.4 days. It doesn't lock up capital for very long. Again, the buying power needed for a one lot of SPX is about 2,500, but you should have extra when we need to adjust. 71% of the trades have not needed adjusting. My worst month was a 1% gain in December, and that's because really only traded 2 weeks. The big pluses in this are I don't have to do any pre-market research. I don't have to do any scanning. I don't have to do any screen watching. I don't have to sit there and stress over something going tick by tick. Don't have to worry about assignment. So this fits my lifestyle. And these are some comments from some of the different traders that just this last week in my group.
And I am sorry to say that I think we need to wrap up and move on today.
Yep, no problem.
But this is very fascinating and really an interesting way of trading that I'm sure we will be back return to on Theta Profits. We will move from you to Brian in Conservative Option Income Network. Brian, nice to have you back here.
Yeah. So this has been a lot of fun, John. I've been listening in, so it's great.
Yeah, but what type of trades are you doing these days? You are mostly delta neutral, aren't you?
Yeah, I'm doing delta neutral. I'm doing some longer term put spreads, but really wanted to touch on some of my favorite delta neutral strategies. So do you have my PowerPoint, or do I have to load it?
No, you need to upload it again. I think you disconnected it.
Okay, let me do it real quick.
It's now I got it. We have it here. No, sorry, I took Steve's one. No, now I should have it here. Okay, yes.
Okay, so I just wanted to kind of walk through some of my favorite delta neutral strategies that I've been doing. A while back, we did one on the SPX or SPY, where I was going out longer term and selling weeklies. And then I also have kind of worked on a 7-day, I call it the 10-10 Iron Condor, talk about that. And then another one that I'm working on is kind of a different version of the delta neutral that I'm calling the Airbnb. So those are my 3 favorite ones. The original delta neutral, I'm going out about 60 to 90 days. I'm buying the at the money strikes, call and a put, same strike. And then I'm selling weekly calls and puts against them. And I generally try to go out about 1.5 times the expected move. And my strategy here is to close the whole trade when the long calls get to 30 days to expiration, then put a new one on. And this one has worked really well in lower vol environments. So I haven't done one of these in a while, but been a great trade. A lot of people seem to like that trade. Here's just a quick example of a delta neutral. I did this probably yesterday or this morning, where I'd go out to June and buy the 650 calls. It would cost $57. I would sell the 685 and the 628, collect about 257, which is about a 4.5% return on risk there. And then I would just continue to sell calls and puts against them until I was ready to close the whole trade. And on this strategy, what I have been doing is, I call it kind of recentering my long strikes, where I will go out and move the strikes up to the current price. So in this case, I would close it by mid-May. And then the 7-day SPX Iron Condor, and I've had really good luck with this, particularly in higher volatility, is you go out and sell it 10 wide. I sell the 10 delta strike on the call and the put, and then I will, occasionally will adjust the non-challenge side. Haven't really had to do that very often. and take the trade off at about a 50% profit. And generally been in those trades about 2 to 4 days. So, and I will keep 2 tranches on at any one time. So if I add them Monday and Wednesday, if the Monday doesn't fall off, I will wait until it does. Here's just a quick snapshot of it in option strat, what it would look like. I've just put it in here. And so you see you have a wide tent in profit, and you have lots of time to adjust if it does start to move against you. And then my most recent one that I've done like 5 of these trades, and they last about 2 to 3 weeks, is I call it the Airbnb, because instead of going out, say 90 days, I'm going out about 45 days, and I'm selling a daily call and a put against it. So, and again, I'm trying to go about 1.5 times out the expected move. And at the end of the day, I will roll it to the next day. So about 2 or 3 o'clock, I would roll it out. I don't make any adjustments to the long strikes. And the goal is to close them every week to 2 weeks, depending on how far things have moved. So those are the 3 main delta neutral trades that I've been doing, and primarily lately have just been testing the Airbnb just to test it out, and the 7-10-10. So, and then here I just listed some of my contact information in case anyone needs to reach me. I don't know if there were any questions.
I don't think there is anyone to you in the chat. Maybe I'm overlooking it. If so, people can ask it again. And I suggest that we go to Paul in the meantime, and then we can get back if we have time.
Perfect.
Thank you very much, Brian, and welcome to Paul.
Good.
You are really into the wheel.
Yes, I am. I'm into the wheel. I probably have more than 9,000 wheel trades now. It kind of toughens the guy up when you start to learn what to look for to be successful in the wheel. And you know,
why is that your favorite strategy?
Well, it's my favorite because it meets the same kind of criteria that both Steve and Brian have spoken of, that we are income seeking. I've gotten to know the trade well, as Steve talked about. It's a lifestyle driven trade for me because, like Steve, I look at my trades in the morning, 15, 20 minutes, rinse and repeat in the afternoon. And I'm able to go out, be on my bicycle with a backpack, poach someone's Wi-Fi, and I'm trading and making money. There was also someone on this morning who talked about the idea that in retirement, we want to have continuous income so that we don't have to sell off assets when the market takes a downturn. And the wheel has been excellent for that as well.
All right. So you brought also some example, I believe. Should I bring on your screen?
Sure. Yeah, bring it up. I wanted to give people a sense of my day in the life and what are the things that I consider at the highest levels when I go through this trade. So let me walk you through a couple of areas that I think are particularly important. Most of the time in forums like this, we get all wrapped around the axle and talking about trade execution and how do you set it up and all this stuff. But with the wheel, it's very important. The precursor to all of it is developing your stocks I'd like to own list. So I do a combination of fundamental and technical analysis at the outset of anything that I do, just to be sure that that I'm getting into something that I want to be in. And then once that I've made those kind of decisions, is this a bet I'm willing to make? Then I'll get into the top of the wheel with the cash secured put, the bottom of the wheel with covered calls. And to give you a sense, you had asked, John, what were some of the trades that I have on as current positions right now? So I trade across multiple accounts for myself and a couple of other people. So these are some trades that I've been in and have been making money on fairly regularly. There are a couple that I got into a long, long time ago. I can't even remember why I got into them, but I've refined my stock selection criteria quite a lot as well. What it looks like, if you've never done the wheel before, is this image gives you in the bottom of this graph is stock price over time for ARM Holdings. So this is a company I got into. I put 27,000 in. I held it for 600 days. The stock did nothing. And all the while, I made 12% annualized on that stock over the period that I held it, even though it did nothing in the long run. And so what it looks like are just a series of, you see these transactions down here. This represents the income that I brought in on this stock, and this green line gives you the income that you see accumulating over time. All the while the stock did nothing, and I was glad to get out of it when I finally did. But nonetheless, that's a little bit about transactionally what it looks like. A whole series of covered calls. It's a strike in a certain contract on an expiration date. I will say that about picking stocks that here's Microsoft off of Earnings Hub, and you can see that the revenue on the left side has increased routinely. Their earnings have routinely gone up, and the outcome of Microsoft is a stock chart that looks like this. And I'll contrast that with Southwest Airlines, that their revenue is kind of all over the place. It might be kind of seasonal as I look at the top bars and what happens thereafter, but their earnings are sporadic. And what do we see in their stock chart? We see a mess. And so I paint these two pictures as contrasts to say that it's important in your stock selection that you consider, what are you getting into? Well, do your fundamental analysis. Don't get into a stock in the wheel unless you've done it. Now, I've discovered more recently in the past maybe year or two that liquidity, we all talk about it, but I now have a way of measuring liquidity, and I created what I call a liquidity tier. So here you can see these companies are those that are out of the S&P Dow and NASDAQ 100 that have 2,000 contracts or more in their option chain. So take every single strike and expiration and give them a tick. Go across every single expiration, every single strike, and you'll come up with 2,100 call contracts. Then I start looking at what percent of the bid divided by the ask is above a 90%, because I want to say, is it really liquid, right? And so I want to very quickly show you why this is important, okay? Is that, and I won't spend a heck of a lot of time on it, but I've got 3 examples of a tier 2 liquidity that's 1,000 to 1,900 contracts and then less. So let's go look at J&J. This is a simple example. This is J&J's option chain. It's pivoted so that across the top, you can see we have the strikes going out this way, and then down the side, the expirations going across the top, and then down the side, we have all the strikes. But notice that these green boxes here in our heat map, these are the ones where the bid to ask is greater than 90. Why is this important? Hey, I'm going to go sell you something and I want to get $100 for it. You offer me 92. So that's a 92% bid ask ratio. What's my likelihood of getting 100? Well, it's not 1, but it's maybe we're going to meet in the middle and I'll sell for 96 and so on. But if that bid ask ratio is 70, what's my likelihood of getting $100? 0. Okay, I'm going to end up a lot closer to the end of it. So this is J&J's option chain. And you can see in it that the darker boxes, there aren't many of them that tell you its liquidity of 90% or more, like, can I get my price? And then the lighter shades go on from there. And if we go out and look at another stock like Caterpillar, look at how much more of their chain is higher in liquidity as defined by the bid divided by the ask. And this is Microsoft, right? And so I like to trade now when I, how do I go about making my choices? Well, it comes down to this kind of list. I trade in the tier 1 and tier 2 generally now. I'm moving all my portfolio in that direction, and I'm sticking with those option chains that have a bid to ask ratio that's pretty high. And then I'll just say one final thing is just to point to this, is I've developed a report that I can run every day. This gives me, for my quote unquote at the money trade, this gives me the best premiums for today. And so it also gives me a zoom in on if there's an earnings report happening, like with PDD Holdings, I see a flag, so I'll avoid that in my trading. I've definitely found that trading on earnings has not been very good to me, okay, and I can talk about that. But this gives me a list, and it says, these are the stocks across the Dow, S&P, and NASDAQ, and what percentage premium I would get if I were to get into this trade at this particular point in time. So I use this, sorry, I'm jumping around a little bit here, but I use this report quite a lot to get a pulse on the market and then to say, does this have the liquidity that I seek, and so on. So as I trade the wheel now, it has been a very profitable strategy for me. In retirement, I'll end with this. In retirement, you have this choice. A lot of people say, hey, I want to live in retirement happily ever after. And they have to bet on the market going up so that they don't have to liquidate positions in down markets to fund their lifestyle. So what the wheel has done is it's given me a very consistent income stream. And so my portfolio is partially the wheel. It's partially a series of growth stocks that I do not wheel. And then I have another base of income that I bring in through JEPI and JEPQ, so that every single month I know without fail that I'm going to easily meet my monthly income requirements. So the wheel has been fantastic from that standpoint, and I'm happy to share with anyone who wants to learn about it, the process of getting started, and so on. There you go, John.
Thank you very much. And I think actually we have time for a couple of questions from the audience if there is someone coming in, but I thought I would bring you all in together here because as I see it, you have some kind of a similar trading style, all three of you, although they are different strategies and different techniques. Anyone would like to comment on what was presented from the others?
I just think that a key factor here is that we all had similar goals in our life. It looks like we're all kind of a similar age. Sorry if I made you guys look as old as I am, but we're all in that similar space now to where it's more important to us to be able to do things and not sit at a screen. And again, trading is all about finding what fits you, what fits your personality. There was a time when I would have thought, oh, I'm not going to trade like that. I want to sit here at my screen and sweat all day. That time has passed for me. So,
right. Yeah, I agree. And we briefly spoke before today, and this idea that we're very much lifestyle traders. Now, Steve, I'm going to add one technique to my trading approach, my strategies after this meeting, and it's going to be the Flyagonal. I've traded some other strategies where I need to be in the trading room all day, and the stress of it doesn't really work well for me when I'd really rather be out and about doing other things. So these are good income strategies for sure.
There is a question for you here, Paul, from RJL. Biggest issue is finding the stocks for the wheel. Does the wheel work with ETFs, which tend to move less in a given week?
Well, the challenge with ETFs is that they lack the volume. They lack the volatility. They lack liquidity. That I've tried to do ETFs in the past, but I quickly walked away from them because they just don't have it in general terms. So.
There is a question for you too, Steve, even though I think you've touched on it. Do you have an average P&L per trade?
I would say, yes, I do. There's a whole bunch of stats that I didn't get into. I mean, that report is 5 pages long. It's going to be in around the 7 to 8% range. And the reason it's not above 10 is because, again, I have that first day rule. If I can pull a trade off in day one for 5, 6, 7%, I do it. And then after that, then I'm looking for that 10 to 15% range. So I don't recall the exact number off the top of my head, but it's around the 7% or so. And I will say there's a group of traders in my group that are starting to push that a little bit further, much like John showed you. He's got one that's pushing 20% or so now. but the gamma gets a little steeper. So if you do have a big day, sometimes it can have a little more impact on that trade. But that's the way I've been trading it. It's been very consistent, very smooth equity curve. That's what I like in my life.
And I showed you the trade that I had on, so I did actually, in the meantime here, close one of the 2 contracts for 20% profit.
But what a master! He's conducting this fiasco of all these traders, and he's trading himself at the same time.
Oh, that's the only thing I do today. It's the only thing to do, and no other trades. But that's when I had to take off, because it's you know, the longer it goes before you get to the expiration, the more risky they are, right? So I like to when I trade 2 contracts, I like to take off one of them early, and that I could get 20% is amazing. Probably I will close the other one tomorrow, but my average net profit on this is 6.27%.
Okay, so you're running similar to me.
Yeah. Anyone else who would like to comment on anything here now?
Yeah, John, I'll just add that, you know, I've enjoyed talking with both Paul and Steve and learning their trades. And it's interesting, we all have a different twist, but we really try to be as conservative, and we're looking for income, and we don't want to be in front of the computer all day long. So it's been fun. And John, thanks so much for putting this on. I've been listening in all day, and I have a whole page full of notes and things to look up, but it's been a blast.
That's great. That's great. There was a question a moment ago, John, about trading on the covered call on ETFs, and Paul's the expert on that, but I will tell you that I asked AI about a year and a half ago. I had an IRA that had 50, 60 positions in it that I was trying to trade covered calls on. It was a total mess. And I asked AI, gave it my portfolio. I told it that I'm proficient at trading options. And is there something I can do to simplify this? Because I was just working so heavily on the Flyagonal. And it gave me a solution that gave me lower volatility overall in my portfolio. It gave me a list of liquid enough options on ETFs. And it told me exactly what percentage of SPY, the Qs, IWM, EFA, I forget what they all are, but it gave me a breakdown of 7 of them that I have been trading covered calls on pretty consistently, and it's done really well for me.
That would be because the volume and the liquidity on those is much higher. So I saw the comment from Drawbridge Finance about the question, and they brought up TNA, right? So I'm familiar with that one. But I would say that generally speaking, if you're going to be wheeling ETFs, you must be looking for ETFs that have a high amount of volume in the number of shares traded, because and look at their option chain itself in terms of how many expirations does it have and how deep is it in terms of strikes. If it's thin in terms of number of expirations and not deep in terms of number of strikes, it's going to be hard to trade, and the liquidity will be low.
All right, I'm gonna bring in one more person here, and that's Dale Perryman, because Dale, the Ironfly guy, you presented in the morning your Ironfly strategy, where you put on a lot of Ironflies throughout the day, and maybe you need to repeat it in 20 seconds, but I wanted to check in on you. How are your Ironflies today going?
Okay. Well, you know, they were going real well. Then I tuned in with you guys in the waiting room, and things went a little bit crazy. And so I'm down a little bit. You know, if you wanted me to go over the Ironflies, SPX, a short put, a short call at or close to the money, 50 wide wings. If you want to share your screen, John,
I will bring it in. I'll just have to.
And when you do that, just I want everyone to know that Dale is my mentor in terms of he got me started on option trading about 10 years ago. Thank you.
Yeah, and Paul is the builder of my captain's log at the top. So if you see the captain's log, it always tells our group exactly what our next move is. So if you see in the upper left where it's set, I don't know if there's a way for me to point to the screen. You probably can't see my pointer. But if you look at the upper left, last price, it tells you what SPX current price is. It tells you to watch the 66.2250, at which point we will add the 66.25s. At 66.02, if price hits there, we'll drop the 66.20s. So currently we are in 6 flies. Over here it lists all of the different strikes, the width of the wings, the sell to open, the credits we've currently collected. B to C is buy to close. That's an estimate price if we were to close it right now. It shows that our current profit is minus $535 per contract, but we've still got $5,900 remaining in opportunity. So if I was to open this up and show you toggle all the active closed ones, you could see all the closes range from $1.15 to a high of $6.20. So our goal is always to keep our losses small and to give ourselves a chance for a big win. And in terms of statistics, 62% of the days I have winning days. So that's how we're doing currently, John. But I hope to come back here in an hour and tell you, we're up $44,000 for the day per contract.
Very good. And as we mentioned in the beginning, this is a very volatile strategy. You did fairly big drawdowns compared to many strategies, but it's been overall very, very successful for you. But as you said, I love that quote, it's not your grandmother's mutual fund.
It's not your grandmother's mutual fund. So while I go toe-to-toe with anybody in terms of profitability, I'm sure you guys will beat me on variance.
All right. Thank you very much to you. And we will get to the last product demo today. And we will wish Omar from Wendy Trade welcome. And
howdy, John.
This is another of the affiliate partners. And again, for full transparency, affiliate partner means that if you jump on their offer, I will get the small commission for Theta profits. So that is just out in the open. But this is a very exciting new product, an AI coach that is making you a disciplined trader, so to speak. So Omar, please tell us what is the problem you are trying to solve for people, for the options traders?
Well, we had dozens of years of trading, and we even found ourselves that we weren't even following our own rules. So we went to the market and we started asking around, hey, do you follow your rules? What's the trading process like? Do you ever break those rules? And most people were like, me. So most people told us that they struggled to follow those rules. And that's what actually led us to create Wendy. Actually, we're a team from MIT, and we have the backing of Tom Sosnoff, who was the founder of Tasty Trade and Thinkorswim, Jim Leitner, a hedge fund manager that used to oversee the Yale endowment. So we've been very lucky. And excuse me, because I'm a little bit under the weather and my throat's bothering a little bit, but those individuals really believe, give me a second. My apologies. Those individuals believe that we're really building something in a place where traders really need a lot of support. And that's why they gave us this opportunity too. And I'm actually really excited to show you what we built.
So let's show it. You need to share your screen, I believe.
So here's Wendy. When you first get onboarded to Wendy, you do an onboarding with Sam. Wendy's on Telegram. We use our MIT chops and my co-founder's chops in machine learning and AI engineering to be able to build a very robust model. And when you get onboarded to Wendy, you have here Sam. And Sam is basically going to build a profile. So my background is in behavior psychology. So we use the same techniques that we use at the NFL, the NBA, the NHL to be able to profile you. Once we have your profile, now Wendy is going to be able to be your own trading consultant. So think like if you're McKinsey and you're a big consulting firm and you have someone that has dozens of employees under you to be able to coach you and support you along that journey. So I'm going to show you a couple of use cases that I think are going to be beneficial to this group right here. And actually, this is my own Wendy account. I trade 0 DTE end of day options, and I actually created that strategy with Wendy. So you can go to Wendy and say, hey, Wendy, I have this much time. I like to do long or cover calls or delta flies, whatever you want to do. You can work with Wendy to develop those strategies as well, because Wendy doesn't just have live market data, but Wendy has your data as well too. You can also connect your broker, and we can definitely kind of bind these live market data with your own data to give you a very personalized experience, which is what makes Wendy a very unique tool out here in the market. So I dropped a chart here, as you can see. This is a FPX chart today. Same chart we all been seeing here all day. And then this is what Wendy responded to me. So Wendy goes ahead, she has many agents, and she calls a tool, and she basically analyzes the chart. And then the most important thing is that Wendy tells me what to trade or not to trade, depending on the chart, based for my own strategy. When you see here, end of day execution triggers, that's Wendy. The end of day is my own strategy. I trade at the very last 10 minutes of the day. I can tell you more about that crazy strategy that I built with Wendy, but it's been very profitable for me. And I've only spent no more than 21 minutes trading this year. And I have a win rate of plus 60%. So this is all Wendy's doing, actually, which is fun to do. So this is Wendy here giving me very detailed recommendations on what to accept or what we should be looking for when I get ready to trade here at the end of the day. So this is one very cool example when you can drop a chart, any chart, and Wendy's going to give you that personalized feedback based on what you're trying to achieve, since Wendy understands your goals. GEX is another very important calculation that we tend to do on our end. So as you can see here, this is some of the magnets and levels that I'm looking for entry and exit. So this is very important. You can get GEX here. I don't know a lot of great tools that can actually calculate this with live market data and your own data, and then personalize that information to what you're trying to achieve with your strategy in any given time. The third use case is the levels. Wendy is exceptional with the levels. Once again, we have live access to market data in real time. So Wendy's taking that information and then it's taking what you're trying to achieve throughout the day. And that's what Wendy here is kind of giving me again. Everything that Wendy does is specifically to your goal and what you would like to be able to get accomplished. So as I share this very personal chat, it's cool because Wendy's always telling me what to look out for when I'm trading and looking here. So, and very, very important, here's another example that I want to show you. I asked Wendy, hey, what are my rules and checklists? And Wendy, once again, gives you a very detailed step-by-step process to be able to understand what am I doing as I get ready to trade before, during, and after the trade. And this is actually my own step-by-step process and what it looked like and my rules. These are my rules. These are, this is my process right here, as you can see. And what I try to take in regards to take profit and stop loss as we do this. So like I said, I wanted to share this information with all of you to really get a good understanding of how Wendy can really support you in the long term. Once again, we're a very technical team out of MIT and CMU. We have great backers like Tom. Tom actually started using this tool, Tom Sosnoff, and Tom is working on his own AI tool to help traders. And he started using Wendy, and he was just like, yeah, this is the way forward for trading. And we believe that everyone's going to have some sort of agents or group of agents with very, very strong AI modeling to be able to make everyone better. Our goal is to make all of you better. And so I wanted to share this with all of you so that you can have access overall. Also, one thing that I did wanted to share today, since John has been so gracious to giving me this time here. My apologies with my throat kind of being all over the place. That's on me. But I wanted to also, I'm going to put here in the chat an exclusive offer only for today, where everyone here today gets 1 month for free. So I'm going to put that in the chat so you can all get access to that special code. It's Theta free month is the code that we created for today. We usually have a 30% off. I believe with John, that is very generous. But since we just got started, we're a brand new couple of months in, and we're very, very excited. And one of the things that we want to be able to do is to really make everyone as consistent as traders as possible. So thank you again, John, for the time, and really appreciate you.
Thank you very much for joining. And it's time for you to take a cup of hot tea, I think, to get your
My apologies again.
Thank you very much for really struggling through an excellent presentation. We're going to have a short break soon. Just to again remind everyone that you find the link to all the affiliate partners in the description of this live stream. There you will also find the link to all the interviews we have done with the guests who are here today. So if you're interested in digging deeper into some of the strategies or way of trading or connecting with some of the guests, you find that link there. And I will remind for the last time, I will just remind you that you have a way of supporting the channel if you appreciate what we have done today, that you can buy the super chats or the super stickers. And there is this kind of dollar symbol in the lower right corner of the live chat window. So that's the last time I'm going to mention that. But thank you very much for those who have done that. All right, so we will take a short break, 3 minutes break, and we will be back at 3 p.m. for the last hour, and that's going to be exciting. We're going to do a live trade. Rob is going to put $1,000 on the line, but you guys are going to decide which trade he is going to do, and we're going to have some other interesting presentation as well. So see you in 3 minutes. And welcome back. I'm getting a bit tired of this intense music now.
That's right.
But you gotta go with the free music from YouTube, otherwise you do risk that they take down the whole stream because of some copyright issues. So that's a limited choice, I promise you. Okay, we have a new panel here. Eric, Josh, and Maria and Rob are back, but let's start again with a quick 15-second presentation. Eric, who are you?
Hi, my name's Eric. I retired from a great job 4 years ago to trade options and invest full time, and I'm living the dream.
Wow. And Josh, which dream are you living?
Same sort of dream. I kind of retired from engineering a couple of years ago, and same sort of deal. It's trading guitars and tennis.
Okay. And then we have another dream, the Florida dream, Maria and Rob.
Hello, I'm Rob. Help me. This is my wife, Maria. I started a couple of internet companies and took them public and retired at age 42. And I was an attorney as well. And Maria was a banker and the #1 female house flipper in the United States. But numbers are our passion, and we trade every single day, 7 hours a day. We are extremely boring people. We're one-trick ponies, I guess you'd say.
Well, you trade on the weekends.
We're
I
trading
trade during the week.
We're trading addicts. Although I did just come in from surfing, so I've been surfing today. I don't trade during the day. I let the robots do it.
I think we're gonna have to ask for the photos of this surfing to as a proof that you are actually doing this during the day. But that will be for the next the stream, I guess. I think we should take a look at the market right now. This is SPX in the 1 minute chart. Maybe we should move to the 5 minute chart now to get a little bit with the Bollinger Bands. What do you read out of this? Josh, maybe you will start.
Yeah, I mean, today, this whole week for me is kind of a bearish stance. You know, trading tech stock, we see so many swings, and so I tried to sit back a little bit today. But I mean, you know, here I don't usually trade ETFs on SPY or anything, but I mean, it actually looked, you know, you can see right there where it popped up earlier in the morning, came down, just hit right outside of that 2 sigma range and went right back up. So it looks like there's a pretty good day trade that could be finished up right there.
What about you, Eric?
Hey, John, I have to say that I can't hear the other guests. I can hear you fine, but I can't hear either of them. So I have no idea what Josh just said. I'm sure it's going to be better than what I said.
So then you say what you have to say and we can compare.
Yeah, I mean, you know, this is a very volatile environment now, and who knows who's telling the truth about what, and that doesn't really matter. You just have to sort of trade what you see in front of you. And like, you know, Mike Tyson said, everybody has a great plan until you get punched in the face. And I came in this morning with an idea about what I wanted to talk about. Now it's completely different. So, you know, I don't think this rally is going to be sustained, but it's nice for today.
And Maria and Rob, you have also been here earlier in the stream, but anything to say about how the SPX has developed today?
Well, we trade about 30,000 SPX a year, so about 150 a day. So really it doesn't matter to us how the market moves up or down during the day. I don't watch the charts or Trump or tweets or CMI or PSI or NQY or whatever the freaking 3-letter initial report is today, or FMOC, none of that. I just trade based on math. Basically, if people are over here selling puts, I'm over here selling puts or selling calls, whatever it is. And then Maria trades the crazy.
I'm the total opposite, basically.
Total opposite, yeah.
I'm totally listening for all the news, any hints that I can get anywhere. And today, for me, it was a green day. All I did was take my profits on anything that was green and over 30%.
She sells a lot of naked puts in the queues. And so if it goes down 300, we sell them. And if it goes up 300, we buy them back. And we've been doing that for 6 years, right? Yeah. Just every day. Pays
but
like
I
crazy.
have to admit, today I didn't take off my queues.
All right.
That is 60-70% there. I left them there, but I don't know.
We'll get them tomorrow. Yeah, we'll get them tomorrow.
Eric, you can still not hear the others?
I see them fine, but I can't hear them. I hear you
I wish
fine.
I knew.
See you fine.
That's, I have no explanation for why that can be, but I think we will, in any case, start with you now. Then Let's just switch over here and tell us a little bit. What type of trader are you, Eric?
So I have about 75 positions in my long-term portfolio and another 100 or so stocks that I follow really closely. And my options trades are based upon deep level understandings of the companies that I follow. I am a voracious consumer of content. I spend 20 hours a week watching YouTube videos such as yours, John, although always at double speed, and you sound quite a bit different at normal speed. I'm probably on 10 or 15 different podcasts and YouTube channels. I read a lot of Substacks. I read earnings calls. I read analyst meeting reports. I read conferences, and I develop opinions about the stocks that I'm following, and then I'll trade them just based upon what I think is likely to happen. So I'm a generalist. I'll sell premium. I'll buy vol. I'll do bull call ultra spreads or bear call spreads or put spreads or condors or whatever I think is most likely to happen. I'll even dabble in zero DTE. The one trade I put on today, when I came in this morning, my idea was that the market was going to be down and I was going to talk about mean reversion trades. Instead, what I saw was MGM and the other casino stocks spiking on the news that some senators are talking about regulating Polymarket's ability to accept sports bets. And I think the upside move on MGM in particular is overdone, up about 7% today. So I sold a call spread on MGM. And if MGM doesn't go up anymore, that'll be a winner. And I don't think it's really useful to go through a whole bunch of other trades, but I can tell you that if Rocket Lab drops anytime soon, I'll be a buyer of that. And the other trade I put on today was a diagonal on Cameco CCJ, which I think is going to go up. So that's out to May for the longs and out to April for the shorts.
But you apparently analyze the companies.
And now I can't hear you either, John.
You cannot hear me either. Then
this isn't good. Maybe I'll dump the studio and come back in.
Yes, I think that is a good idea. Do that, and I think we'll just move to Josh in the meantime.
You can hear me, right?
I can hear you just fine. It's we gotta have one technical issue. But I interviewed you. I see 2 or 3 weeks ago. We had the interview with you, and you sell weekly puts, and you do this on Monday, and you sell your trades. You want to get you want to be all cash by the end of the week. That's your goal, and then next Monday you will sell new puts.
Right.
So what I want you to do now is give us just a super short summary of your strategy beyond that, and also what have you sold today?
It's funny you asked that. I have a list I can show you. So that's the gist of it. I try to keep it simple. I want to be cash on Monday mornings. I try to sell puts at the right time. The last few weeks I've been like super busy, so sometimes I'll spend like an hour in the morning, and if I haven't sold something that if I haven't sold something that I want to sell, I'll go in on Tuesday or Wednesday, and by that point sometimes it's profit is just higher if you go out the next week. But that's the idea, is just the weekly puts. They only become more complicated if I acquire something or if the trade goes south. So sometimes I end up building these strangles, like one leg at a time around different stocks. So that's about it.
But today, what did you sell today?
Okay. So I've got, if you want to pull my screen up, I threw some stuff.
But I think you're not sharing the now it's fine. There we go.
Okay. So can you see it?
Yes, but you might need to read what it says. It's a bit small to read.
Okay, I can zoom it in here a little bit. So coming in this morning, I was skittish. We had this whole deadline, which you've talked about today, and then Trump came in and said that he was going to postpone it because we were talking, and then Tehran said, well, that's not true. And who knows? I mean, who knows, right? So I was thinking like, well, geez, I'm not gonna sell much. And I'll get to these in a minute, but this is kind of an interesting detail, is that I was saying, okay, I'm just gonna start off and I'm just gonna sell calls on the stuff that I have. And then I started thinking, well, man, you know, John wants to share the puts that I write. And so all of a sudden I'm thinking like, oh man, I gotta like secure these puts. And so I actually had to step back for a minute and, you know, like decompress from that kind of emotional, psychological thing and just be like, don't worry about it. Like if you don't sell any puts, it's not a big deal. Like just stay the course. Right. So here's what happened. So I started off the morning, things were up more than expected. I'm holding HIMS open, 12 silver contracts in Upstart. And so I sold on this. I threw the big one, I think, for people is the weekly gain, you know, that we talked about before. And again, like I'm not like it's there, but it doesn't mean I have to meet it. But you know, you can kind of see some of these gains just on the premium, right? And so I haven't averaged them out, right? Because they're all weighted a little bit differently based on what percentage of the account they're in. But then, so to jump forward a little bit, so I have these 3 puts that I did end up selling. I like to trade ASTS. It feels a little, and ASTS is a good example that in my brain, I thought, well, that feels a little bit risky because it just moves so much, but the technicals were super nice on that strike price. So I threw up an ASTS 1.5% gain for the week. Oscar, which is a healthcare company that I play with rarely, I got 2% there. And then USO actually, and there was a talk earlier about USO, and I can really sympathize with the approach there. Is that, you know, it's like a bit of a ticking time bomb, right? Like it's when this war does end, you know, this price, or when something happens, right? When there's some type of relief, like this value, this USO value is going to drop. But I wrote this one for Wednesday, a Wednesday expiration at $98. And I didn't get as much premium on that, but like that's you know, the one that if I close one out, you know, today or tomorrow because USO pumps back up, then that would be the one that it is. And so then then the last one I haven't written yet, but I'm sitting waiting for Aklo to go on a good item there. So those are the trades so far today.
And you are aiming for about 1% per week, 1.04.
Yeah, that's the number. And it's not like a, you know, bulletproof number. It's kind of a guideline. It fits into the balancing the overall equation. But I mean, you can see with the weekly gain numbers, like none of these gains in here were chosen because of that 1%. Like they don't, like these gains were just the gains that popped out of the strike price based on the analysis.
What are there other opportunities you see in the market right now?
Yeah, well, you know, the one that I didn't expect, this USO was a good opportunity. And here, I'll pop it back on TradingView here. And this is where I actually came in, this orange circle. And I wasn't actually expecting that to come in. I wasn't expecting that to actually sell. I was like upstairs getting ready for this stream, and it sold. But I think there's still a good opportunity here. You can see USO is mostly respecting this linear regression, this 2 sigma band around the linear regression. So I think that as long as USO doesn't leave this Bollinger Band and or the linear regression line, I think there's still a good room in there to play with it. And part of the reason that there's good room to play with is because you can drop down 10 to 15% and still get like 0.5% gain between now and Wednesday. So
this I guess this trade is 1 tweet away from very nice profits.
Yeah. Everybody go out and buy it. I'll close my put.
One tweet from the president, or one tweet from the Ayatollah.
Exactly.
Any other type of trades? You're selling puts, but if you're gonna do something else in the market right now than your regular strategy, what would that be?
Well, so I like I mentioned earlier, like I like to do some day trades, and I like to write strangles around stocks, like one leg at a time, right? But one area that I actually think looks, well, there's a few things, and so I'll go down the list and you can stop me. This guy right here, Universal Machines, they go up and down like crazy. And so it's almost like a day trader's delight. It's not as much about options. It's so volatile. I don't know if I would trade an option on it, but like you can see this 6.86% today, right? And I think a couple of days, like late last week, it dropped by like 20, or not last week, or the whole week, it dropped by like 25% or something. So it's a super, super good buy. The other ones that I'm looking at are Lyft, and where is Lyft? Lyft here. So if you look at Lyft, like it's got a pretty, in fact, let's go to a higher chart here. So check out how flat that is right there. Like look at how flat this is. And I know that, like that's what I'm saying. Like sometimes when I like to write the strangles, this guy's come down a lot. It's a good value stock. And it's running super flat right now. Like this is back to, 6 February. So if you look at it over the last month and a half, it's basically done nothing. And it doesn't have, insane premiums on it. But at least for the last 6 weeks, it's been super predictable. So that's one that I actually had been looking at over the weekend as well.
All right, we're gonna move a little bit on and maybe come back to that. We have Dale Perryman back in the studio, and Dale, you started off today by explaining your 0DTE Ironflies strategy, where you put on Ironflies throughout the day. Maybe you need to spend 1 minute just repeating it for everyone who was not there in the beginning. But we want to check in. How are you doing? Are you ending up with a loss today, or how are you ending up with a profit, or you don't know yet?
Oh, well, okay, that was a lot of questions there, John. So let me re-explain kind of the fly. Four legs, a short call, a short put, at the money, close to the money, SPX. Start with one, add a second one, fill in the middle of the cookie. So by now, I can answer your second question. How are we doing? If you want to share my screen there, John.
Just a moment. There we have it, I guess. Yes.
All right. So we are currently in the 65.95, the 6600s, the 6605s, the 6610s, and the 6615s. So we're currently in 5 flies. Our next move is an add on the upside, a drop on the downside. So at 66.1750, we'll be dropping the 6620s, or at 65.98, we'll drop the 6615s. We're currently up $1,905 per contract with $3,586 of opportunity. So the last time I was on, I think I was down $600 or $700 per contract while I waited in the waiting room. But I keep coming back. I'm like a bad penny, John. I'm like a bad penny that just keeps coming up in your pocket.
So right now, how much you're up?
We're up $1,945 per contract.
And you do this every day, right? It's a pretty intense day trading strategy.
Every weekday, and hopefully if they start trading Saturday and Sunday, I'll be there too. I know a lot of guys go, I don't sit in front of the computer every day. Well, I'm the guy who's sitting in front of the computer, and I wouldn't if that close babysitting didn't pay.
Well, you're gonna have to just sit together with Rob. He's sitting all weekend, so you guys can sit together by the surfing beach.
Yeah, we're in like a competition between Rob and I, because I've heard his podcasts about how many hours of homework and stuff he does. So it's like a competition.
All right. that was a good summary of how you are doing, and we are going to get back to Eric, but you will be back at the end of the market day, Dale, in our aftermarket panel.
All
But let's get back to Eric, because Eric had some issues in the beginning hearing us, and so it was a bit difficult to present.
Yeah, that was quite a challenge. This job is difficult enough without being able to not being able to hear other people. So I got this MGM trade on that I put on today. I am looking at selling iron condors on Schwab and Pepsi, because IV is up on both of those stocks, and they're unlikely to go anywhere as a result of what's going on in Iran. I mean, they'll perhaps go up and down a little bit with the market, but they're not going to move like the other stocks will. And so those are both fairly juicy, and I probably would be putting those on right now, except I'm on this presentation, so I will most likely do that tomorrow morning. A couple earnings opportunities that are coming up this week. I use Earnings Watcher, which I think is a sponsor of yours and was on earlier today. And they've got a wonderful tool called IV Rush that essentially a pre-earnings straddle, where you'll buy the straddle or the strangle the morning of expiration and then hold it until just before the close. And I found that I can make somewhere between 5 and 8% on that fairly reliably. And when I lose 2 or 3%. And you can get going in with size in these liquid underlines. And if you can make 4% in 3 hours, it doesn't sound like a lot, but if you own a T-bill, you make 4% in 365 days. So I really quite like IV Rush, and as I said, Earnings Watcher's tool is really good for that. And we've got GME and Chewy coming up later in the week, so I'll be looking at both of those and monitoring how IV is moving with respect to what's projected in the tool tomorrow for GME and later in the week for Chewy. And I'll probably be in those Schwab and Pepsi condors tomorrow. And any one time, I've got somewhere between 10 and 20 options trades on. I'm pretty simple. I don't have the big brains like a lot of your other presenters do. I just look at my 100 stocks or 150 stocks in my universe. I try to learn as much as I can about all of them. And when things seem like they're going out of whack one way or the other, I try to capitalize on that.
You make it sound so easy. I just look at my 100 stocks.
Yeah, it takes a lot of time. I mean, it's when I had a job, I worked 60 hours a week, and I was always stressed. And now I work 60 hours a week still, but I'm not stressed. I'm having a lot more fun. I don't get to go to the beach or anything like that, like the other guys do, but I'm still having a good time.
All right. I think we are actually have some extra time this time. So if there are questions from the audience, we are happy to take them. Actually, we have Doc. Okay, we have Doc coming into the studio now. So I will bring Doc in for the last GEX level check, and after that we're gonna line up for a live trade with Maria and Rob. But first, welcome back, Doc.
Thanks, everybody. I had a little computer problem. My computer froze on me.
But we see it now. So the Doc, you have been here a couple of times today, looking at what does the GEX levels tell us and how it's changed during the day. So I guess we have like 5 minutes now to take a last check what it is telling us and what you read out of it, and if there is any last minute trades you see coming out of this.
Okay, and what I've been watching for a while now is this pin at 6,600. I mean, sometimes it's as simple as that. I can briefly explain why. The positive gamma, at the end of the day, we end up getting sucked toward it, whether it's above us or below us. So just think if you had an option. Right up here, these are calls. 66.25 calls are out of the money. They're gradually decaying to a zero delta, right? So whatever market makers bought to hedge that, they sell, and it gets put, and it pushes us down. At the same time, as we head toward this, they buy, but then as we head away, they start to sell. So it's a very classic setup. That doesn't have to be here exactly, but it favors this pin, and we've been looking at it in the room all day. What I think might be fun is let's take a look at if there's a good trade setup for tomorrow. And so what I'm looking at here, so the green is sold by customers. So that's positive gamma, that's support, quote unquote. First thing my eye is drawn to is 6450. You see there's 1500, 1600. So it looks like a 5-wide credit spread was sold right here. I mean, it was. So 6450, if I could get any goose there, I'm going to look right there to see if there's a trade. If not, so I'm going to make my trade based on the premium and the gamma. If the premium is not there, then I'm just not going to make the trade. It's not going to make the trade. Hold on. Where is it? How you do this? Not curve. Table. And so for tomorrow, 6450, and it looks like there's decent premium there. I like to do 20 wide. Very decent premium. So that's my first level of analysis, 6450. That also happens to be where we bottomed out overnight. So that kind of reinforces that idea for me. I'd like to get a little further away because there's not a lot to 63.75 looks great, but there's no premium. So I will probably sell this a little bit lower. What I sometimes do is, since I know that we should bounce, should we head down to 64.50 to the green, think of that as support, I could go 1 DTE further and sell something a little lower. I mean, 63.25 looks beautiful, but I don't think there's any juice down there. So I'll look at 63.25. There might be juice down there after all. 63.25 for Wednesday. That looks something. Now I'm okay with something like that. I'll just sell 3 of them for now. Give myself room to add. Of course, they don't want to give it to me because they heard me talking. I'm waiting for it to fill. So sometimes I'll do, just to get it started, I'll just do 1 at the market. Okay, there we go. And the rest will hopefully fill. And so that's what, so let's take a quick look at what the rest of the week looks like. What the rest of the week looks like. Let's do it. Let's do a range. Let's go Tuesday. To Friday. So here's where the bodies are buried for the rest of the week. Now let's widen the strikes out a little bit. Let's go 63. Let's just keep it wide, 6,300 and 6750. Okay, so we see premium sellers are down here at 63.25. Those are the ones we saw before. We have 12,000 contracts sold here at 63.25 across the rest of the week. We have sold contracts at 64.50. We have sold contracts at 63.75. So there's a lot of supportive gamma, a lot of market maker buying that has to go on the way down. I know people want to be bears. I'm sorry. I've been looking at too much bear porn. It's gotten you a little perverted. That's what happens. Not you particularly. On the way up, between 65, 85, kind of where we are now, and maybe a little, and 66.50. 66.75. Clear size stop zone, anything can happen. Below 65.85, 65.75 would be the next level down, with pretty solid at 65.30. So what I'll do during the day is look at these levels and then kind of see what the projected path is.
All right. Thank you very much, Doc. This has been really insightful and a new world for many of us, I would say. Now thank you very much to you, and I'm gonna bring Maria and Robert in, because we are going to do a live trade today. Rob has said that he will risk $1,000 of his money for a live trade that you guys, the audience, will choose which trade we will do. Because you always put on, as I understand, a trade at 351 every day.
I put on a trade every day on my YouTube channel, Rob and Maria Trading. Yes, that's a shameless plug for Rob and Maria Trading on the YouTube. So yeah, what we do is we have a live show every day at 3:25, and at 3:51, well, about 3:40, we run the poll. And then at 3:51, I do the trade with 9 minutes to go. The reason I do that is because all the market on close information is released at 15:50, and all the day traders, the young bucks, are going crazy, you know, trying to predict where the market's going to do. And so I'm just a contrarian. I just typically go the other way. But we thought we'd have a lot of fun and let the chat room do it. Chat room loves it, so we do it every day. And by the way, after we do 7 million back tests, like Dale was talking about working on the weekends, we do 7 million back tests. We've actually had 7 million trades, and then we use AI to figure out all of our trades. We put on about 180 trades a day, but all of that is done. We give out all of our trades, or most of our trades, on Sunday night at 5:55 p.m. We don't want you to follow us. The lawyer says, you know, it's entertainment only, educational purposes, not financial advice. But we will show you exactly what those trades are. That here's what we've done in the last 5-6 months, and you can see we've did 2 accounts that we created online. One is $1 million and one's at 30,000. And the $1 million account, you can see we've done about 16. I think you can see it on there. We've done about 16,000 trades in that account, and then in the $30,000 account, let's see if I can get to it here. I got it. Where did it go, Maria? It's right there. Boom. Okay, here it is. And so here's the little account, and it's up about 14,000. So it's about 50% in 6 months. And you can see an idea of what we're making every single day, the winners that we have, our max drawdown, our Sharpe ratio, how that compares to other people. You know, our longest losing streak is 3 days. 60% of the days we win, 59% of the trades. Here's how our KGAR is, our monthly, our weekly. But most importantly, here's the actual trades that we gave out yesterday. So these are the trades that we're going to be trading all week long in the $30,000 account. And we give these out at 5:55 every Sunday. And then we're going to trade about 150 trades in our $1 million account for every million that we have invested. And these are the trades that we're going to put on, or something, 20 of them. We're not going to give you all of them, and we got to keep something for our back room, right? But that's
Robert, this trade we are going to put on at 351. That's either a put credit spread or a call credit spread.
Correct.
Just describe that trade for us, because we're going to put up a poll for people if they should put what they think you should put on. So let's just bring in, here is the SPX today. So can you describe what is the 2 alternatives?
Yes. So what we're going to do, if you actually just go back to my screen, I can show you exactly what we're going to do. This is where we are currently right now, live on Options Omega. With we've got about 140 trades that we've made today so far. We were down about 30 grand. Now we've made a little comeback, and we're down about 8 grand. But the trade we're going to put on is this trade right here. Okay. So we're going to go down here, and we're going to do we're going to do 100. We're going to look for $1.80 for, actually not exponential moving average. We're going to look for I want to look for a MEIC trade. Let's see if I got it. It doesn't matter. We'll just do an exponential moving average. So we're either going to do a call credit spread or a put credit spread for $180. And I normally do 3 contracts. I'll do 6 contracts today. What's that come out to? Is that too many? Five contracts will come up to about $1,000. So whatever the chat room says, that's what we're going to do. We'll go $1,000 to the put side or $1,000 to the credit side. You guys tell me. And if you go over here, if I go over to my Tasty Trade account, you're going to see that here are the trades that I currently have on in the SPX. I'll just show you can see live. These are my live trades in my personal account right here. You can see that I've got, 5, 6, 2, 4, 4, 5, 4, 5, 6, whatever on the put side, and on the call side, we got what's left 4, 15, 19, 10, 7, 11, 6, 2. We got a lot. We got a lot. That's the idea. And
so we have the.
Go ahead.
No, so we have the poll out there now. So, and you see it on the screen here. Let's spend Rob's money. Which $1,000 trade should Rob put on at 351? Put credit spread or a call credit spread. So you guys can vote until 350, I guess.
It takes me a few minutes to do it. What I'll do, here's what I'm going to do, John, is if you could just stick with this chart. What I'll do is I'll bring up the chart at about 348. 1548, and then what I'm going to do is let's say that I'm going to make this a little more exciting. We gotta. This is a trading show. We got to do some trading, right? This is what we got to do. Yes. So I'm gonna come in here. Let's say let's make this a little bigger, make it much more fun. And so what we're going to do is we're going to say, let's say it's a put credit spread. I'm going to say, okay, and we got it right here. Boom. I'm going to put in this blue line, and we're going to say, well, you got to stay above the blue line, right? Is that backwards on your screen? Is that okay?
No, this is fine. This is fine. So so people, you can vote on this until, let's say, 3:45. We will make a conclusion.
That would be great. Yep, at 3:45.
We'll decide at 3:45. The audience decides: is it a call credit spread or is it a put credit spread? And then we will bring you back in just a short while. I'll take you out for now, but people keep just voting. You do it in the live chat with 1 for a put credit spread, or you take 2 for a call credit spread.
Now I see in the chat room a bunch of people that are entering the number. I think you actually have to go in and push the thing, right? I'm not sure how you do the poll.
I think you need to, in the chat, type either 1 or 2.
Oh, that's it? You just type the number and it goes in?
1 is a put.
Okay, great. Oh, look at all.
And 2 is a call.
What's
you cannot write?
Voted 3.
That is how it should work.
All right. Well, as long as you're getting votes, that's what matters.
1 put 12.
1 put 12. Wait a minute. What's going on here?
All right. I will gonna take you out for a moment.
Sure.
We will bring all of you in a little while. And I will just go to this one. As we are going now, it's me that gets some trough problem, but I've been talking here all day. But we will have a live watch of the SPX at the end, where we also bring in our guest, and we'll see how this develops. As we all know, those of us trading 0DTE, the market can often make some big jumps in the last 15 minutes. But I just want to say a little bit at the end of this live stream about Theta Profits and this YouTube channel that you are watching. I think there's a lot of new people who have been watching today. We have been more than 300 people watching at all times during the day, and had 3,600 visits into the stream. So there's a lot of people who have been watching. This is, I'm a journalist by background, and I decided to create a channel where I use that because I noticed that many YouTube channels about options trading are basically people who are experts on trading. I wanted to bring all the experts together in one channel by interviewing them. So I do not consider myself as the expert trader. Rather, I like to use this channel to explore and to learn more myself. And I found that the best way to learn is to actually share knowledge. So I invite in a new options trader every Sunday for a long form interview. We try to be practical. We try to be to the core and of what the strategies are. And the goal is basically to expose both myself and the audience to different ways of trading options and thinking about options trading. And then there is one question I always get. Do I verify the results of the traders I interview? The answer is I don't. I always ask about the results in the interviews, and I encourage my guests to share as much as they can. But I don't see it as my role to verify, and I'm not sure it is practical to do in real life either. I think that rather my role is to ask as relevant questions as possible so that you can make up your own mind. At least for me, I think it's a very important principle is that we all need to own our own trades. We have a different willingness for risk. We have different trading style. Yes, we can be inspired by others. Yes, we can try the strategy of others and try to copy it. But in the end of the day, I am responsible for my trades and you are responsible for your trades. And that's also why I don't spend a lot of time to really verify the details of the results. Finding guests takes a lot of time, and I think it's not very easy. So I'm very grateful for any suggestions for good guests. I'm looking for ordinary retail options traders who have a special strategy or special style of trading and who like to share it. So if you have suggestions for candidates to be interviewed, please mail me at this address here. I really appreciate suggestions, and I'm very happy to get those suggestions. Also, in addition to the interviews, I do run this Theta Live from time to time, around once every 6, 7, 8 weeks. Usually we have shorter live streams than today, but always around one broad topic. So again, also feel free to propose what would be good topics for new Theta Live. And the plan is to add more educational content in the future. If you're not subscribing to the YouTube channel, I really appreciate that if you do that. That helps us grow. We have about 17,000 subscribers right now. But please subscribe and also turn on notifications so that you are notified about new videos. And also, I do send out a newsletter every Sunday notifying about which interview is coming. You find the link to subscribing to the newsletter in the description, together with all the other links that I have pointed out that we have. Okay, I think we are that was the self-marketing of today. And yes, I said it was the last time, but you can also, of course, support the channel by buying the Super Chat and the Super Stickers. All right, I'm gonna bring back the guest, Maria, Eric, Rob, and Josh. And Rob, if you would also share the SPX, the screen that you want to share.
Yes. So
I think it's better if you share it as a separate. Because,
well, John, if you told me that, I would have brought one of my grandkids to help me do that. Let me hold on just a second here.
All right.
Image, file, no, slide. Oh, share screen. Gotcha.
Yes.
And I'm going to go to window, and I am going to go here to, this is my tasty trade. Yeah. Now, John, before you go away from me there, I also wanted to show you, I know you had some discussion of veracity of trades. Here is, just so you can see my trades in real time. Mm-hmm. And we were down about 30 grand. It looks like we're down about 6 grand so far. But here's the trade that we're actually going to put on, okay? And then over here, you can see, this is my personal account, and we're up. You can see the Crazy Ivans and the SPX and how we're doing. And if you really want to have some fun, and if someone says, well, I don't believe Rob, you can see all my trades, really, 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 there they are in Tasty Trade. I would have to be a real expert at PDF. And if you know me, you know I am not an expert at PDF, but you can see all the various trades that I put on throughout the day. So there we are.
But Rob, what the audience now wants you to do is obviously 2/3 you are going to put on a call credit spread. That's the decision
Correct.
from our audience. 2/3.
Yep. So are you going to share my? Yeah, perfect. Okay. So
we're going to stop the poll now. The audience have decided that you are going to risk $1,000 of your money in a call credit spread today. So
beautiful. Call credit spread. Okay.
Prepare it.
Call credit spread. So you can see over here, this is where the trade's going to go on. We're going to do it at 15:51. We've got 6 minutes. So you can just sit back and enjoy, talk amongst yourselves. If you need to go to the restroom, now's the time to do it because we're not going to get started for 6 more minutes. What's going to happen here, just so you know, is that the market on close report will come out at 15:50. And what happens then is all these young folks, it's very unfair. All these folks that trade the market on close trades are going to put in their trades and they're going to pretty much go in one direction. And my whole philosophy of SPX trading is that we just want to trade. We're premium sellers. It's all we are. Very simple. So there's a group selling over here. If they're selling, we all learned in economics, if you have a large group of people selling, they're going to get only $1. But if you have very few people selling the same thing over here at a different premium or stop loss or strike, they might be able to get $1.50. So the whole game is to figure out what this herd is going to be trading this week. And in order to do that, I look at 7 million trades each week, look at 10 different premiums, look at 390 minutes, go back 125 trading days, different stop losses, different wing widths, different premium targets. And we figure out what are the best 250 trades. And then we're going to whittle that down to make sure that we don't want to go all in at 1207. You want to spread it throughout the day. And we look at various metrics like profit loss, KGAR, MAR. We're going to look at the Sortino, the Sharpe ratio, all those things, some internal metrics that we have. And then what we're going to do is we're going to figure out what are the best trades, say 125 of them, and then we're going to put them on. And the idea, are those going to be in the top of the 7 million trades this week? No, of course not. But they're probably going to be high up there. And when you go and look at our results, you can say, well, Rob, a lot of people say to me, well, this, that, or the other thing with regards to the mathematics of it. And I always say the same thing is, well, this will tell you this is our
well, we don't really see it now,
number, right? So it is what it is. All right. So now,
but so I think you guys need to get you into the camera, and while you prepare this trade, you're gonna set up in 3 minutes, and then in the meantime, I will ask Josh. Are you also as eager of watching this last minute of the trading day as Maria and Rob obviously are?
Yeah, I think this is super cool. Like letting the audience decide like that. It's perfect. It's like, it doesn't get any better than that. Fortunately for them, there's no debit spread on the line, right?
All right, John, what have we decided yet what it's going to be?
It's called credit spread.
Okay. So if you can go to, I don't know if you can show it in my thing, but I'm going to show you, actually, I go to, so here we are with this is options Omega. This is where I've got the trade. I'm going to go down, what'd you say, call? Call. All right. So I'm going to do a call credit spread, and I normally go on for 3 contracts. So I'm going to open this up. I don't know how much of this.
No. 3 contracts is not going to do $1,000. You're going to put 5 or maybe even 6.
Look at John spending my money. Can you believe that? Boy, it doesn't matter whether you're from Norway or Vietnam or the United States. They all want to spend Rob's money. They all want to spend Daddy's money. Good for you, John. You caught me. You see how I was trying to pull it on you.
6 contracts.
All right, here we go. We're going to bring this up. Look at that, John. How about that? You want 6? Boom, you got 6. I can't do math. I went to a public school, so I can't do math, but I think 180 times 6 is a little more than $1,000, but that's okay. Now,
yeah, but you're a generous man. I know.
Am I? You don't know. As they said, I'm like George Costanza on Seinfeld. They say I'm very careful with money. Very careful. Some would say cheap even. If there's $5 on the ground, John, I will beat you to it and I will tell you about it for a year. I guarantee you're the cheapest guy you ever met.
So 6 contracts is $1,080 on the line.
Look at you with the big math. Great.
Yes. Well, or with a calculator.
Later. All right. So I'm gonna put this bad boy on, and when I do, just so you know, over here, I'm gonna have this open so you can see right here the trade. You'll see what's gonna happen is we're going to be offering 180. They're going to say, no, we want 190 or 210 or what, they're going to say, no, we only want to pay you 160. So then I got it set. So every 6 seconds, it's going to change the price automatically. The robot is until we get a fill. If we don't get a fill in the first minute, it'll wait 9 seconds. It'll restart, look for a different strike price, and it'll go through the process again. We'll do that for 5 minutes. The worst it's ever taken me is 3 minutes to get a fill. Okay, here we go. 18 seconds to go. John, let's go to the big screen. Here we go. Get ready. Get ready. You got me on the big screen? No, John, you got to put up my thing here.
Okay.
Yeah, there it is. Perfect. Here we go. Ready? In 3, 2, 3, 2, 1. Ding, ding, ding goes the trolley. Look at that thing go down. Boom. And there goes the trade. All right, now we're asking 180. They're offering 180. We got to fill 180. We got to fill 180 at 6,600. This is a call credit spread. We wanted to stay underneath 6,600. Let's put it on the board. Boom. There it is. Let's take this one off because this one is no good. Remove all. No, we just want to remove this one right here. Boom. All right. So the game is afoot. We want this to stay under 6,600. Let's just double check to make sure I did it right. John made me spend all this money. This is dollars, John, not Norway money, by the way. This is real money that I'm talking about here. Not
right.
Whatever you guys got over there.
So we only have oil money.
Baby stays under. All right, so we are looking for this thing to stay under. And, okay. Now just sit back and watch me sweat bullets. And as we always say, if you are a professional trader, you are not excitable. You don't get worried about the ups and downs of the market. We are robots, right? As it turns out, Uncle Rob and Aunt Maria are not robots. We are emotional traders. She's Italian, and she says words to AI that I don't think truckers, they would be embarrassed to hear. That's how bad that she is. If you've ever been married to an Italian, it's quite a thing. And by the way, you mentioned something that I think is really critical, and I did a video on this at Rob and Maria Trading on YouTube, shameless plug, that talks about how you should always be accountable to somebody. I'm accountable to my wife, whether it's your parents, your grandparents, your sibling, your partner, whatever it is. I believe firmly that you should own your wins and your losses. It prevents you from getting mentally tied up about, I'm scared to tell anybody. We've all heard stories. It's typically the husband trades the money, loses everything, then has to go have the hard decision with the wife. It's much better to engage your trading partner with you and to hold yourself accountable and them accountable, right? And I think that for us, it has been fantastic. We've traded together over 2,100 straight days without missing a day. We are absolutely trading addicts. That's all we do. It's all we talk about. We're one-trick ponies. If you're going to have an exciting conversation with us, you're not. It's just going to be trading. It's going to be.
Let's bring the others in as well. Eric, are you sometimes putting on this type of last-minute trades?
Yeah, I mean, I'm not today, but yeah, if I see call buying or put selling or something that's a bit out of whack, I'll take it. Now, the tool that I use is not one of your sponsors, so I won't mention them, but I'm seeing a small amount of call selling and a good amount of put buying at the moment.
What about you, Josh?
Yeah, I used to do a lot of that. In fact, I used to chase trades a lot, and as the day starts running on and you start getting this race, I used to be trying to get a certain premium and the price drops a little bit. And so you're like, I better, adjust my bid by a couple of pennies, and then it drops more and you start tracing this thing. So, I mean, I'm sure we've all done that. Right. And so, but it's, I think that's the thing, right, is being disciplined and robotic and not letting that emotion in. And whether it's this or pretty much anything else in the world, right? Like that's what makes you an expert or a professional is being able to do that in your chosen field, right? Like it's not any different here than it is anywhere else.
And I trade mostly in 0DT, the break-even iron condors, but I always put close to shorts at 5 cents, which means that at the end of the day I can do strangle basically because I have longs left over. So I will sometimes put on this type of strangles at the last minute. And actually, the last market hours is my most profitable hour on the 0DT. And well, it seems like you're gonna keep your money, then, Rob.
Well, let me tell you, John, we are a long ways from over.
Still got 5 minutes.
Just because we got a pair of kings in the hole cards doesn't mean we're going to win this thing. There's some dirty dog out there with a pair of aces that wants to come in and get us right at the end. I've gambled way too much to know that the game ain't over. But I will tell you this, that our real serious trading is done 100% robotically. Many is a day. Maria gets so pissed because I'm laying out by the pool or I'm out surfing all day long, and I just don't care about the market. And that, by the way, took a long time. I'd be interested to know in the chat, by the way, if you trade with a robot, let me know. I'd be very interested to know how many people trade with a robot, because trading with a robot is like, you know, those trust tests where you fall backwards and someone's got to catch you, you know? And you got to have total trust in that person, right? You got to have total trust in the robot. Look at this thing go down. Are you kidding me? John made me go $1,000. Looks like I have to pay you a commission, John. But I also get
we have a very smart audience here. They know the market. They know how to predict it. They have GEX, they have Bollinger Bands, they have everything. So of course the vote of the majority here is a smart trade to make. I just push you to listen to the audience, and you will make your $1,080.
That would be nice, because as I'm looking at this thing, it's not. We were down 40. What we're down now? We're down 8 because we just had a bunch of them get punched out. But it's, you know, no one. Okay, people get all excited about, well, you're up 8 or whatever the heck it is. But the thing is, when you get to the end of the day and you're starting to look at some of these numbers that you have, no one remembers those down days, right? No one remembers these days where it was down like this. It's if I would have told you, you give me $1 million on October 1st, and I'm going to give you $1.4 million on March 25th or 3rd or whatever it is, you'd say, yeah, you know, I'll take all that you can give me. Or if I said, well, okay, what about a $30,000 account? You give me 30 grand, I'll give you 45 grand 6 months from now. Everybody would sign up. But you won't believe the people that come onto our channel in our Rob and Maria Trading, shameless plug, and they will tell me, oh my gosh, what about this up day or this down day? It's down, this math doesn't work or whatever. I'm like, dude, it takes thousands of trades. It takes thousands of trades. That's what she's, it takes thousands and thousands of trades. And what you find is over time, you start to say, this is why I don't worry, because who says we have to look by the day, right? Who says we have to look by the week? Who says we have to look by the minute? You know, we got a trader right in here. My guitar loving friend, he trades by the week. Am I right? I mean, that's what you do. You don't have to be, you know, tied into this daily response stuff. And the final thing is the real reason we started this channel. We don't charge for anything. We don't have, you know, any money thing. Is that we are tired of seeing all these people on the internet that say, "Oh, this trade works or that trade works," and they don't have any validation. They're just doing it to try and get you to pay a fee. So. All right,
so it's 1.5. Sorry for interrupting, but it's 1.5 minutes left. So I think we'll go back to the other screen. You can put the camera on yourself.
Okay, come on, baby. Come on, baby. We're going to bring this dog home. These dirty dogs are going to pay us today. Oh, you're not going to see any of those market makers in a bar tonight, not the ones that are trading against me. And by the way, when you're trading SPX, when you're doing other trades, you're investing. When you're going against me on 0 DTE, it's you against me. It's us against the hedge funds. It's do or die. You just need to think about who's on the other side of that trade. This is not an investment. This is a bet. This is a gamble. It's you against me, and we're going to see who's going to be able to predict better. And what I have that nobody or the few people have is the information. I used to say people are stupid because they're buying calls or they're buying puts. No, they're not stupid. They're just misinformed. Why do people go to Vegas and spend a fortune? Everybody knows it's a bad deal. Why do people buy lottery tickets? They all know it's a bad deal. Hell, I buy lottery tickets, right? We all do it. But it's not mathematically sound advice, right? So that's what I do. Look at this. Easy money all day long. The only problem, of course, is look at that big freaking loss I got over there. So let's not go crazy. What are we down?
Well, so the market is closing in about
9
seconds.
8
Yes.
7 6 5 4 3 2 1. I'm a robot. You see? Can you tell I'm not emotional?
All right. So the market closed at 6581 and plus 115%. We congratulate Rob on making his $1,080 listening to the audience here.
Thank you, audience. Thank you to the chat room.
And we say thank you to you, Maria and Rob, for very entertaining last minutes here. And we're going to bring some of the other traders in for like an aftermarket market panel. But thank you to you guys.
Thank you.
And we will... all right, and let's bring in some of the others here. Where is we have Ravish, we have Asha, we have Karsten here, we have Brian, we have Levi. Oh, I actually I did the layout here. That was not enough people. Okay. Let's move to this one, and then we have with us Levi as well. Okay, so this has been a long day with the market going quite a bit up and down. I think we can let me just bring it in here. The SPX throughout the day. This is the 5-minute chart that I have here, and it's been a bit up and down. I think we can safely say, but we ended up quite a bit, and more than 1% off up. Who would have believed that? Who wants to be? We also have Steve. We should also bring Steve in here. Now we have a big enough panel, huh? Who volunteers to be the first to comment and sum up the day?
I can speak about it.
All right.
Yeah. So market opened near around 6,600, and we actually closed approximately where we opened. We opened at 6688, and we are closing at 6880. So today was like a fairly neutral day. But when SPX ran up, I listened to some of the commentators who were saying that it is going to run up 30-40 points and then fade. So I followed their advice, and I sold all spreads at 6650, and they are now in 100% profit. So it worked out exactly as like some of the panelists were saying in the morning.
Anyone else who would like to say something?
It's very hard to trade 0 DTE when you're on a live stream if you're a presenter. I'm trying to figure out how much this call cost me by not taking a trade.
Well, I guess you just have to send an invoice to Rob, I guess.
Yeah, I'll make a quick comment. And I don't follow the indices that much, but it was. I mean, I logged in this morning just thinking like this is going to be a super, super red day. And we started out super green. And as I'm looking at, where everything closed, at least on my list, I see a lot of stocks that closed with high numbers. I see some teens, some double digit greens. I'm seeing a bunch of reds, after market. So like it feels pretty mixed, right? And I feel like this is what we've seen the last, X number of months, probably since September, right? Is that, things will tank and then they'll come flying back up, or they'll do the opposite, or they'll just, oscillate all day long. And it's such a strange environment to trade in, but it's super fun.
What stood out most to you, Steve?
I would say that this is the reason, quite frankly, that I trade the Flyagonal. I don't really care. I mean, market gaps up 100 point, gaps down 100 points. It really has no bearing on that trade. So I did put on that trade this morning when I was in your session. I went and played pickleball, my normal routine. I missed 2 hours, John, but I'll go watch the replay. Went, played pickleball, came back, got back on, took the trade off for the 6.5%, and I'll do it again tomorrow. So I got to the point in my trading career where I was tired of sweating the, oh my God, we're going to gap down and I've got on condors or a put spread that's going to get crushed. That's just not where I'm at this stage of my life. So yeah, bottom line is I understand that in our current environment with our political situation that a tweet is going to spike the market up, spike the market down, spike volatility up, spike volatility down. That's why a trade that handles all that is perfect for me.
How did your trades go today, Carson?
Well, yeah, in fact, I still had to finish my last trade. So I have to trade even after the close because I have to wait for my margin to come back. At least part of it. And then I have to finish the remaining half for the 1 DTEs after the close and just make sure everybody got served the right number of trades. So I was busy the first maybe 90 seconds after the close still. Yeah, everything worked out well. I mean, I'm so far out of the money that wasn't particularly worried about anything. So yeah, but made fantastic money today. Everybody's happy. Got the trades in for tomorrow. I only short puts. I don't do short calls overnight. So I'm down to something like 6,100 points. Got 20 cents for that. And that's, again, for the 1 DT, that's all I need. And so great day today.
What about you, Asha? Were you able to make some trades in between pairing here?
Yes, so I sold the 7,000 short call and I sold the 6,450 short put, with the spread. And of course they were, far out of the money, but due to the VIX being so high, I was still able to get good premium and I was able to close for my profit. So that's the benefit of the 0 DTE with the high VIX, that you can get far out of the money and still make some money.
Yeah.
But I think you have to look at the headlines. I know nobody wants to look at it, but you have to look at the headlines right now. And I think if you trade 0 DTE, you have to have an opinion on what's going on. I know it is impossible to have one, but I think it's you cannot trade 0 DTE SPX right now without looking at the news or having some opinion. Now, your opinion may be wrong, but you have to have some opinion. So anyway, but today worked out just fine, and I still do 0 DTE, even though it is very volatile, but it takes away the overnight risk. So that helps. And of course, looking at the gamma structure and the market maker positioning helps, because as Doc McGraw was talking about it, you can see where the market makers are positioned, and that helps with some of the support and the resistance levels and gives some clue about market action. Of course, headlines can always move those, but overall, a very good day today.
There is a question for you about the 7,000. Jack,
I'm so sorry. No. It wasn't 7,000. I apologize. It was 6,700.
All right.
I missed.
Brian, what have you? How has it been going for you today? You are not doing 0 DT very much, I know.
Well, I tried a couple 0 DTs. They didn't work out very well, but I got stopped out. But I did add a 7-10-10 iron condor, and it's up about 7%. So that was a good start there. So, but I mainly tried to listen and learn from all of these guys. So I didn't do as much trading today and taking notes.
What about you, Levi?
I took a little 0 DTE, just a very cheap butterfly that I held to the close, and it was a full loser, which is fine because you lose when you take those small bets, and when you win big with those. And other than that, I did some very minor adjustments. This was actually a very good move overall this morning I'm sure for everybody's accounts. And just adjusted my deltas a little bit. I, obviously busy with this being here all day. So I put on a few cash secured puts. Thanks, Josh, for pointing out some of those companies you're looking at, and just keeping it simple,
And I did not trade today. I was a bit preoccupied. I did close one trade live here. One of my time flies with a 20% profit. But I just checked, my account is up 2.4%.
Nice.
So maybe sometimes it's smart not to trade.
Yeah.
I'm curious, once the market is over, do you guys have any routine for how you kind of process, analyze the trading day, and what are your learnings and so on? What do you do after the market closes? Steve,
it's nap time. I start about 4 a.m. here in California. I just get up at that time. I don't need to be up at that time, but I'm up at 4 a.m. or so. So about 1 o'clock, I go to the back patio in the sun, pull my hat down over my face, and take a nap. That's the extent of my aftermarket work. About 20 minutes does me good, and then I'm ready to go on a bike ride in the afternoon.
I log all my trades. So I have up-to-date P&L. I write down what I thought was going to happen and what did happen and why it happened. If something is way off and I had a bad trade, I journal the explanation for that and I close the door and I forget about it and move on to the next one. If it's a good trade, I try to figure out how I could have made it better. And then I take a couple of hours off and then I start reading analyst reports and company news and earnings transcripts and thinking about what I'm going to do tomorrow.
My particular, I have a couple of things. First thing is, which I think a lot of us seem to have in common, is 2 or 3 days out of the week, I leave the screen to go do other things by, a few hours before the market actually closes, and I just come back and see what happened at the end. On the days that I don't do that, I was a day trader before options came along, like a legit, just straight stock day trader. And so I find myself occasionally just day trading in after hours. And, some days it's a dead end with not a whole lot of liquidity, but other days I just have made a killing just after the market's closed. So it all just depends.
Anyone else?
I typically am not at the computer this late in the day. I try to get the majority of my trades in the first 2 hours, and then I have the rest of the day to myself. I'm like Steve, market closes at 1 o'clock in the afternoon, so I'm often out for lunch with my friends. I have a good retired community around here. We've got biking, and I live right by the lake, so there's lots of things to do. Go for a hike, do those kind of things, and just try to hang out and enjoy life. That's what this is about, right? This is also why I don't do the 0 DTE very often, because I don't like to be at the computer.
I usually trade for like an hour or two in the morning and then an hour at closing. After closing, I just journal my trades and go spend time with my family.
And in Norway, it's usually 10 p.m. when the market closes. Right now, for a couple of weeks, it's 9 p.m. Because of the daylight saving time starting a bit earlier in the US than in Europe. But 10 o'clock, I conclude my trade log, and that's it.
I always thought the bell was the happy hour bell. So
there you go. I like that.
How do you guys journal and log your trades?
I have a Excel sheet that with the format that I've been happy with, where I just put in continuously. As I put in trades, I will continuously log them, so that actually it's not so much left to do afterwards. It's just to look it over. So, and then I have some pivot tables that analyze the results in different strategies and so on.
The platform that I use, Option Traders Assistant, it is all built in because it connects directly to most brokers, not all brokers, but most brokers here in the US. And I don't even log into Thinkorswim. I have accounts at Thinkorswim, Tradier, and Tasty, and it can fire orders to all of them and gets the fills. I can track the full trade, the full P&L, including any adjustments, and then the close of the trade. And then it gives me a summary like what you saw today for every trade. Then I can export either a CSV or a JSON file. And I've found AI to be just amazing at analyzing that. I can just drop that into AI and say, tell me how many of these trades were never needed adjusting. And it'll go through all the trades and say, you put on 70% of them that did not need adjusting. Tell me how many of them would have been improved if I left them on another 3 days. And it will analyze that and tell me, had you not touched those for another 3 days, your profits would have been at a different level. So yeah, it's just all built in for me. I used to log all that separately, but now it's just all part of the software.
Dale, you joined. How did it go with all your Ironflies today? Did you end up in plus or minus?
Well, that down move kicked us in the cojones, and so I ended up losing $2,200 per contract.
Wow.
Which is actually it's probably slightly less than our average loss on a losing day.
So how many did you close then? 5 or 6?
How many did I close?
Well, you're saying per contract. So what does that equate to? What was the?
I flew. Well, you're asking me what's the size that I trade, and it varies anywhere from 2 contracts in an account to 10.
Right. Okay. The question would be, I guess, if you traded only one fly at a time throughout the day, then your $2,200 loss, how does that equate to somebody that would have been putting on only single flies?
Well, my strategy is not putting on one fly. My strategy is to add flies at a time, and we flew 6 flies into the close.
Yeah. So is that 6 times 22, or is it just 22?
It's just 22, depending upon how many contracts you traded. If you traded 2 contracts, you would have lost, $4,400. If you were trading 10 contracts, you would have lost $22,000.
Right. Okay. Well, that's pretty good for that move. $2,200. That's not bad at all.
Yeah, multiplied by however many contracts you're trading.
Of course.
So and the one common question I get is, for me, you need at least $20,000 in buying power to trade one contract to give you the budget to do what we do all day long. But that would be enough budget to trade up to 6 flies like what we did going into the close.
I think we are going to start to think about conclusion. Before we take the last round, there is a question very quick for you, Steve. What was the software you used for tracking and trading?
Yeah, the software is Option Trader's Assistant. I put a code in the chat for it for a 30-day free trial. I have no stake in the company whatsoever, but it has been a godsend to me and my type of trading. And I also use it for covered calls. It works very well for covered calls as well.
Great. So I have one final question before we close this live stream, and but we'll take a round for those who want to answer. What is the one takeaway from today that options trader can learn from how the market developed, from what you learned from listening to others? Is there one takeaway that you want to point out from this market today? Who would like to go first on that one?
There are many, many different ways to make and lose money. And it's great to hear everybody's perspective, because we're all presumably successful or we wouldn't be on here. And we're all different. I mean, the stuff I've heard today that some of these people are doing, I never would have thought about. I don't think I have the mentality or the stomach to do it, but it clearly works for them. And I'm sure that a lot of people that listen to me don't want to spend 20 hours a week reading earnings calls. So, it just depends on what floats your boat and what you're good at, and you just find your lane and stay in it and enjoy the ride.
Yeah. What about you, Ravish?
Yeah, I resonate with the same thing. Options have a lot of options. So there are a lot of ways to make money, lose money. Everyone has their own strategy. And all of them can work. You just need to focus on something that you can master.
Josh?
Yeah, it's funny that we're all kind of saying the same thing. I feel like, especially you read the comments, right? And some people are like, well, I don't like that, or I like this, or whatever. Well, the fact is that we all have these things that we're sharing, and it's all kind of being about open to seeing them and taking the parts that you like and not worrying about the parts you don't, and making something that works well for you. And I think probably the best way to kind of like inculcate that into your person is to see somebody else doing it and then play with it and figure out what does really work for you. So I think that for me, that's the biggest takeaway as well.
What say you, Asha?
So I would say the same thing, but I would say that we should all be open to new ideas, especially as a retail trader. We all have the same journey, the same arc. We start, we get lucky, we think we can be successful, and after a while, we do realize we know enough to be dangerous, and we learn. It's a constant process, and I think all the resources and we should listen to other successful traders with an open mind and try to study what they're doing, because there is success to be had with every strategy. You just have to figure out what works for you. But it is very easy to be critical of anybody's strategy. But if you study it, there are good points in everybody's strategy. And I think one should be open to new ideas.
Great. Karsten?
Yeah, I mean, vol selling works, right? It doesn't matter how good the market is or how bad the market is. I mean, this morning before that tweet, right, everybody was worried about if it's going to be a terrible day today. It doesn't matter if it's a terrible day or good day, right? If you're selling option premium, if you're a net seller at least, I think it's going to work out either way. And the market is going to do the work for you, right? Because if it's a very volatile day, yeah, you're also going to sell really far out of the money, given the fixed premium. So I don't really try to overthink it and try to predict the market on any given day. I mean, obviously I read the news, but I don't need to read the news to do any option trade, right? It's the vol premium is there, and it's not because I'm so smart. It's because there's just the vol premium. Selling insurance is a profitable business. So it worked again today.
All right, Brian.
My biggest takeaway today was learn one or two really good strategies and make them your own and get really good at it. That was probably, and just hearing a lot of new ideas makes that extra hard. But if you can really master one or two ideas, you can make a nice living and not stress yourself out.
Levi?
I think the thing that we heard the most today was just about selling premium and just selling puts, at a range that's outside of that expected move. And, when it was how I got into option trading was selling puts, it made sense. It was simple strategy. And although we do very, very complex things, I think it almost always comes back to that. That's where the bulk of the earnings come from. And I can see almost all the strategies we look at are some form of another of obviously selling the volatility, but selling the put specifically is really the kind of bread and butter, isn't it?
Yeah.
And Steve.
John, I just want to thank you. I love the whole concept here today, and to hear how everybody does things kind of in a little different way. And as traders, it's key to learn from each other like we are here today and through your channel, and pick what works for you, and then try to focus on that and develop your own nuances, if you will, that you're comfortable with. At the end of the day, you can't force yourself into somebody else's trade. So having the ability to look at this many different styles of trading and pick what kind of fits your personality, the time that you want to commit to it, etc., is just perfect. So thank you.
And finally, Dale.
I think 3 words: expect the unexpected, and you will never be disappointed. I'd say find your own playing style. Each of us kind of have things, find what's comfortable to you. And then as you learn from all these other traders, you diverge by exploring the possibilities, trying some things out, and then finally converging on the things that you prefer, the things that work for you. And then it's just putting one foot in front of the other, executing around the things, around your playing style, of the things that that works.
And that concludes our full day live stream with 28 people. Well, 27. One did not show up actually. So 27 traders have been here today. But I would like to thank all of you for contributing and being so positive in taking part of this. And also the audience. We've had a lot of people watching the whole day. So that and with a lot of feedback from the audience. So I just want to thank everyone and happy trading for the rest of the week.
Thank you, John.
Thank you, John.
Super good job.
Thank you.